mild uptick of green on the Nasdaq, but completely flat. Treasury yields have inched up slightly ahead of the Fed's annual meet at Jackson Hole. The Jackson Hole Symposium will be watched carefully. This is a meet of all central bankers, really, and it's Powell's last one as the Fed chair. People will be waiting to see what he says. Are they hinting at another rate cut in September, etc.? And of course, his political messaging. The release of Fed minutes becomes a key trigger as well. The 10-year was at 4.33. Crude prices inched up after the Trump-Zelensky meet. The Brent was above $66 a barrel. Asian indices, let's just pull that up meanwhile and just show you what's happening. They're mildly up in the green, nothing massive. The implied open for India, also after yesterday's rock and roll, is showing that a bit of a break, quite flat in opening trade is what the implied open is indicating. As far as this whole clutch of meets are concerned, Trump meeting Putin, Trump then meeting Zelensky, I would say it's inconclusive but positive. The Trump-Zelensky meet has ended with no conclusion. He's asked Zelensky to cede Crimea to Russia, that's Trump, and drop the demand for NATO membership. Trump has pushed for a peace deal before the ceasefire in line with what Moscow wants. Trump has also spoken to Putin post talks with Zelensky, and the next step is a trilateral, is what he's saying. Now, meanwhile, Andrew Latham joining us. He's professor of political science at Macalester College and senior Washington fellow at the Institute for Peace and Diplomacy. Andrew, thank you so much for speaking with us this morning. What are you making of these sets of meetings? Is it fair to say that we are perhaps, for all it's worth, closer to the cessation of these hostilities for the first time in 4 years than we've been earlier?
Well, in a sense, that is the appearance. There's forward motion, there's some momentum. Certainly the optics of President Zelensky and President Trump meeting was different than it was back in February, which was very ugly indeed. But I think on closer inspection, I wouldn't get too optimistic. They're all, Putin and Trump and Zelensky are all being very vague about certain important things. At the end of the day, there's only three ways this war ends. One of three ways, one of which is somebody wins on the battlefield. And that appears not to be happening despite Russia's glacial advances on the battlefield. So that's not going to happen. Neither side's going to win on the battlefield. The other one is they're going to come to some agreement on what President Putin calls core issues. Crimea, for example, but also territories in the Donetsk and Luhansk in particular, and whether Ukraine can be part of NATO, et cetera, et cetera. These are mutually irreconcilable positions held by Kyiv and Moscow. There is not going to be, despite what President Trump says and despite what President Putin wants, there is not going to be a resolution to this conflict in the short to medium term on that basis. And that leaves only a ceasefire. And President Trump has said he's not interested in ceasefire, but my sources are telling me that his administration is actually favorably disposed to a short-term to medium-term resolution that involves freezing the battlefield, that involves some nebulous and sort of half-hearted security guarantees, but not NATO membership for Ukraine. Now, before your viewers think that this is a bad outcome or the least bad of three very bad outcomes, let me remind everybody that in 1953, North Korea and South Korea came to a temporary ceasefire, which has prevailed now and persisted for over 70 years and has been the foundation and the basis for relative peace on the Korean Peninsula. If something like that could be arranged between Russia and Ukraine, I think that would be a reasonable outcome. And it's possible only because it would require neither Zelensky nor Putin to actually admit that they were in the wrong or that they were making politically terrible concessions. Right. It would simply allow them to say, okay, Trump wanted this. This is what's going to happen. Right.
Professor Andrew, I'm just wondering if that third outcome were to come to pass, a ceasefire, are we likely to see pressure applied, as has been the case over the last several months and even years, on trade? Because trade increasingly is being used as a bludgeon in negotiation. And for us here in India, seemingly, that is one key aspect to the puzzle, because we've got that additional 25% tariff to contend with. And thinkers here think that that has to do with the negotiations with Russia.
Well, it does. It's not so much the second round of tariffs, or not so much about Indian trade policy or non-tariff barriers, by the way, which seem to be going away if the Modi discussions that took place today bear fruit. So I think tariffs. I mean, basically, they don't work. Ask the Iranians if they work. Ask the North Koreans if they work. Ask these tariffs, which are connected to trade, seem to be a blunt instrument that, in fact, is counterproductive. If anything, we've seen India moving away from the United States in all sorts of ways. I think that's a passing phenomenon, by the way, but it's certainly these tariffs are not inclining the Modi government or the Indian political establishment to say, okay, we give up, we surrender, we're going to side with the Americans on this and not buy Russian oil. That simply is not what is happening. So a blunt instrument that is counterproductive, not even non-productive, but counterproductive. But we will have to weather the storm because it seems it's the only arrow in Donald Trump's quiver at the moment.
So, Andrew, just to clarify, the discussion you're referring to about Prime Minister Modi, are you referring to his conversation with Putin last evening, India time?
No, I was referring to the fact that he sat down with all of his economic ministers and advisors today.
Right.
And they're talking about 1991 redux, aren't they? About a massive transformation of the Indian political economy.
Yes.
Reducing GST and things like that, simplifying compliance. I mean, it's going to be complicated and might not be possible for domestic political purposes, but Modi is he's certainly trying to liberalize the Indian domestic economy.
Right. And in fact, some parts of that are already beginning to play out with the GST reforms. But that's a good one to keep an eye on. Thank you so much, Andrew Latham there, speaking on all of the developments that we're seeing going forward, and those truly are going to be the big ones, overarching, because even the Q1 is looking fairly decent, and some of the notes are indicating that today. All things considered, it's not half bad. But the weight on the markets is with this entire Ukraine-Russia war. Suddenly, it's become our problem.
Yeah, you said it, and which is what I was asking him. Even if there is a ceasefire, maybe, just maybe, that bludgeon of trade could be used going forward as well. But let's talk about what happened in trade yesterday and then very quickly set you up for the day's trade. Strong gains for Indian equities after that triple treat weekend that we were talking about at the start yesterday. The benchmark briefly edged above that 25,000 mark and faced very significant resistance. It closed 1% higher, 24,876.95. Options activity suggests strong resistance at 25,000 and the levels higher than that, just above that. And we'll talk about that in the F&O setup for you. 39 Nifty 50 stocks gaining, with autos leading the charge. Broader markets outperformed, with indices gaining 1.2 and 1.3% respectively for the mid-cap and the small-cap index. The auto index was a top sectoral gainer, ending 4.2% higher. Consumer durable stocks were also winners on expectation that GST cut, if it comes to pass, will result in a strong festive season. Realty stocks made a comeback, with the index gaining 2.2%, and select NBFCs, and I want to name Bajaj Finance because it moved quite considerably higher in trade yesterday, as much as 5%, on the back of expectation of consumption boost. By the way, some expectations pegging that GDP impact, if it comes to pass, of plus 0.4 to 0.6%. So it offsets, if at all, the impact of trade tariffs. But IT sulked in trade yesterday in that strong session, with the index down as much as 0.6%. And that, if anything, was the only minor casualty of the day.
Yeah. So I mean, I think the how do you say it? The stages, the decks are set for us to do well right now. Here's a math that we derived yesterday, which incidentally I wrote a piece on as well, that the valuation premium, which is derived by dividing the MSCI India P with the MSCI EMP, it's the lowest since April 2021. Effectively, the ratio of India P to EMP is 1.48 right now. The 10-year average of this is 1.78.
Okay.
Right? So we are way lower on the valuation premium versus emerging markets. So therefore, underperformance, under ownership, negative FIs positioning, maybe earnings revival, global uncertainties easing, all of that is positive. And that's why I think both the strategy notes, which I've just kind of standing on the shoulders of to try and amplify the point that we're trying to make here, look at what both Ridham Desai of Morgan Stanley or Rajiv Batra of JP Morgan are saying. Ridham says that likely improving growth coupled with recent developments, provide triggers for indices to make new highs sooner rather than later. The other point that he's making is that sell-side expectations remain low, should be ready for a beat over the next few quarters. So this is one key voice. The other key voice is JP Morgan, Rajiv Batra. Remember, a few days back, he had come on air and mentioned this, before he wrote in a note as well, of course, that they expect Nifty 50 to trade between our base case, which is 26,500, and bull case 30,000 targets over the next 6 to 9 months. So reiterating this after all that's happened is JP Morgan. And of course, then they give their ideas, their preference for domestic over exporters, etc. But the moot point, guys, is that people are slowly starting to say that things are looking okay on the earnings front as well. Motilal Oswal wrote in a note, Tahir Badshah said this in an interview yesterday, right? And Morgan Stanley and JP Morgan, two other voices which are coming out and saying, the MK and the Daulat notes also say the same thing. So actually the decks are set, if things go right, for Indian markets to meaningfully outperform or meaningfully do well. Forget outperformance versus others. Indians anyways, half the retail can't invest in emerging markets, so ignore that.
Correct.
Forget the outperformance or relative outperformance, can do well over the course of the next 6 to 9 months, and we should look at that. I mean, these daily moves, ek din 100 point upar hai, ek din 1.5 point niche hai, may not matter too much.
Yeah. I mean, just the point that the 30,000 target, I thought that was exciting in the next 6 months. That's very clear, that's very focused, and that's coming with conviction, so that's important as well. Your implied open inching up. All right, these are some of the other factors that at least I'm watching this morning. There's a lot of primary market action. There are 4 issue openings and 1 listing today. So Shriji Shipping Global, Gem Aromatics, Vikram Solar, Patel Retail. These are some that are opening, the issues open today. And of course, there's Bluestone Jewelry, which lists as well. And we'll get you details of all of those. So the days of primary market action, sometimes you see muted volumes in the cash markets. You might also be seeing an impact of a very rained out financial capital today also bearing out. Don't be surprised about that either. Meanwhile, the Nifty faces a significant hurdle at the 25,000 mark. This was more than apparent yesterday. Yes, we cheered. We were all excited when the Nifty hit the 25,000 mark. It couldn't stay on for too long. So that is a clear hurdle. The sentiment is bullish because of the GST reform hopes that drove a broad-based rally. Profit booking at higher levels and a mixed global backdrop could continue to cause intraday volatility. The ideal strategy right now would be a buy on dips near 24,750 to 24,800 with stop losses of 24,600 and a target of 25,000 to 25,150. The primary hurdle remains the psychological 25,000 level. That for some reason is something that we've moved towards and slid back now a couple of times. A decisive move and a sustained close above this mark could trigger a larger rally towards 25,150 and then 25,250. Immediate support levels are at 24,800. Below this, the next key support is 24,700, followed by 24,500. On the Bank Nifty, 56,000 to 56,200, a breakout. Else, a range-bound play is what you'll see with supports at 55,500. So these are some of the levels to watch out for. But let me go across to Puneet to talk about the F&O setup this morning.
Well, thank you for that. It's absolutely flat today, to say the least, and it could be because, of course, of the very big move that we saw yesterday. But you rightly mentioned about 25,000 as a key level, which is seeing some resistance at this point of time. The interesting one will be if we can maintain 24,800 actually as one of the key supports going forward, because that's an elusive level for us. We've broken 24,900 and then subsequently gone all the way down to 24,500 given what has happened over the last 2 weeks. If we're able to keep and maintain this level, which most brokerages amongst analysts do anticipate, given this positive up move, that'll be one of the key positive, because on the Nifty Bank, we've continued to be under pressure on this range, and that signals that we could be at the lower end, somewhere around 55,500 for a while, unless there's a rate cut either by the Fed or by the RBI in the subsequent months as well. So that'll be the one to watch out for. In terms of foreign investors, largely maintaining a very neutral position, just adding some longs yesterday, but the index long continues to be under 10, just 9.7%. The most bearish foreign investors have been over the last 3 months, and it's interesting because the impact of tariffs roughly expected to be between 90 and 100 billion dollars is somewhat the amount that FIs have actually been out of the market for. And if that has to come back, we will need a positive trigger. For now, 9 out of 10 short positions in the market for these foreign investors. When you look at open interest distribution, and here from yesterday, we've seen a change. Levels such as 25,100 as well as 25,200 are now being handled by the call. That's a key positive. Could be one of the resistance if we can move up from 25,000 to 25,200. It'll be important if we can do that, as well as very interesting also because we'll need another positive trigger and maintenance of that level. While for shorts, we've seen some reduction in levels such as 24,500 and 24,700, indicating 24,800 as a key support going forward. Finally, stocks, we've seen a short covering as well as long build-up in a bunch of stocks yesterday, especially in the auto pack, Maruti, Uno Minda, some of them. Blue Star also, the positive pivot from GST rate reduction, saw long build-up. While in terms of short coverings, we saw across these segments, such as PG Electroplast is definitely one of them, where we saw short coverings there. But interestingly, the open interest change wasn't that meaningful as expected. 11% open interest change, but short covering nonetheless. Some other ones were Voltas, where we'd seen extremely bearish momentum post Q1 results, but some short covering seen there as well. So very interesting. We might give some gains that we had yesterday in these sectors, but overall, fundamentally, a key positive with the GST rate reduction. The Nifty implied open stays absolutely flat to a negative bias as of now.
No big profit booking, at least, is what we're indicating. So that is one thing to look out for. All right, you've wrapped up the result season, which is why you're going to see our stocks to watch a little light because some action now waiting to pick up in terms of corporate action. But Tata Steel is something that I'm watching out for today. The Bombay High Court has annulled the tax notice on a loan waiver of 25,186 crores. The company was issued this income tax notice to reassess its taxable income for 2019-20. It involved a waived loan of 25,000 odd crores from Tata Steel BSL, which is now merged with Tata Steel. The company filed a petition with the High Court in March this year, and the judgment has come in their favor. The High Court has set aside the notice and all subsequent proceedings. So that is going to be one positive maybe for Tata Steel. Pipe makers are again on focus, and there's a Jeffries note on this as well. So what's happened is that India's DGTR has recommended an ADD, an additional duty, on imports of SPVC resin from various countries for 5 years. So India imports 45 to 50% of the demand for PVC, a majority of it from China. And this has been recommended on Chinese products at a higher level, that is 17 to 33% of duty. Lower duties are recommended for other countries. This imposition could actually arrest a fall in PVC prices and aid channel restocking. So watch out for Supreme Industries Phenolex pipes. These are a buy. As far as Jeffries is concerned, Astral is a hold. Marksans Pharma came during market hours yesterday, but just marking it out because in a lot of the excitement over GST yesterday, individual stocks and their stories have kind of got lost. So just talking about Marksans for a second, the arm has a marketing authorization from UK MHRA for metformin hydrochloride, Relon Chem tablets. I thought this was important. It is used to treat diabetes, and this is a theme that we've been talking about. Companies which are in the business of treating chronic ailments, as sad as it sounds, is something that a lot of our experts come and talk about because unfortunately, those are here to stay.
There is no choice.
Yeah.
There is no choice. That is something to keep an eye on. Reliance Industries is on my list, and this is a thumbs up. There are a couple of triggers, but I've chosen to focus on what Jio is doing, the telecom business. They've discontinued their entry-level 1 GB per day recharge plans. And that plan was priced in two forms, one for a 22-day that's at 209 and 28-day at 249. And now the understanding or the implication is that Jio subscribers will have to move up to 299 plan. That plan offers 1.5 GB per day for 28 days. Airtel and Vodafone start with a 299 plan, but they only offer 1 GB per day. So, therefore, the key question to ask, are Jio users likely to shift? And I think the answer to that is going to be no, because they are offering more at 299 than their competitors are currently. If Jio users move up the value chain, then what happens? That's the second question to ask. The average revenue per user increases from 211 to 253. That's a 20% hike. But if you look at the actual impact, assuming a base pack accounted for 20% of Jio recharges, the average revenue per user rises by 8.4 rupees, and that is an increase of 4% over the Q1 FY26 ARPU of 208.8. This is a calculation that was done by my colleague Soumit Sarkar, and it's, I think, quite an interesting one. Hindustan Zinc, this is also a thumbs up. It is approved setting up of a 10 million ton per annum tailings reprocessing plant. I'll come to that in just a bit about what that is. That new plant will be set up for 3,823 crore rupees. The completion of the plant is targeted in 28 months from day zero. Now, what is this plant? Tailings are the byproducts of initial ore processing. Effectively, it is the waste from a metals operation, and the tailings processing plant is in effect a recycling plant of that mining waste. Why is it set up? Well, it is economically lucrative and viable. It adds additional revenue streams, and this is in line with the company's overarching plans to double capacity over the course of the next 5 years. The initial phase of that was approved in June with a 250 kiloton per annum facility that is going to be set up in Debari in Udaipur. The last stock is just an update for you to keep an eye on. GMR Airports, the board is set to consider a fundraise, including a QIP or a bond issue or otherwise. They're set to raise they're planning to consider to raise up to 5,000 crore rupees. That's on 21st of the month.
Yeah, so and there's you have to admit that the number of stocks which will react much unlike yesterday are few and far in between. Yeah, I've maybe a couple of additions to both Tamanna and Alex's pieces, but the first stock on my list is All Time Plastics, wherein Vibhav Manish Chokhani has bought 3.5 lakh shares, which is 0.53% at 287 a piece. Now, this is the recent IPO done by DAM Capital. The fact that Manish Chokhani's son has bought in a small stake could only add to the luster maybe in the stock today. We will, during the course of the day, try and bring you some details about what this company is all about. Please do not follow an investor blindly. The reasons and the patience and the time horizon of any particular investor may be materially different than yours. So please do your own research before you act upon it, if any. But if the stock reacts, you should know why. Hence the idea of bringing this. Just keep in mind, Alex spoke about Jio. I think the Citi's come out with a note on Reliance, wherein they are saying that the minimum public issue size norms have been revised lower by SEBI,
yes,
which has positive implications for Jio's IPO as well.
And retail.
Right. So, and that's why Reliance, by virtue of this, if indeed Jio's ARPUs move up, if they do, I do not know how it happens, but if that does, plus this might just help Reliance today. And while Tata Steel individually has positive news, but I was just looking at the brokerage notes, and I think the Citi note on steel is interesting because they are saying that there's a twin-pronged impact, right? So DGTR has recommended final imposition of safeguard duty on imports and the duty on imports of certain flat steel products for 3 years, 12% in year one, 11.5% in the second, and 11% in third. So the fact that after 200 days of a temporary duty, there is a large recommendation for 3 years is positive, but the industry was seeking 25%. Expectations were a lot more optimistic. The fact that it is not happening that way, let's see if that kind of puts a cloud on some of the steel companies. So could be interesting timeline. It could be interesting to see what happens. But on a flat day for the markets, a few stocks.
Yeah, but the IPO regulations getting eased up is actually a big one that SEBI has done yesterday, the consultation paper, right? Because for large IPOs that could come in over the size of 50,000 crores, the minimum public shareholding norms have also been eased, and it just makes it easier. And Reliance is the first name that comes to mind because you know it's well known that they want to hive off some of those units, but others might also benefit
in
going forward.
Yep.
Yeah, in the fray as well. IPO action is actually larger today than anything else. So some of the offerings that are opening up, Shriji Shipping Global, one of them, the company will offer shares from Tuesday, price band 240 to 252. It's a 411 crore IPO, entirely a fresh issue. They've raised 123 crores from anchor investors. Gem Aromatics is the other one. The company will offer shares for bidding on Tuesday. That's today. Price band from 309 to 325 per share. It's a 451 crore IPO, combination of fresh issue of 175 crores, rest is offer for sale. They've raised 135 crores already. Vikram Solar is the other one that Street will be watching. Also opens today. 315 to 332 is the price band. That is a larger one than the first two that I spoke about, an over 2,000 crore IPO. At 1,500 crores is a fresh issue out of that, and they've raised 620 crores. There's also Patel Retail, which will offer shares from today. 237 to 255 is the price band, and that's about a 242 crore IPO, which is a combination of fresh issue and offer for sale. So those are some of the ones. Bluestone is listing today. The company's shares will debut and the issue price is 517. That was the largest one, a 1540 crore IPO, but subscribed 2.7 times. So not too much of enthusiasm there. Institutional investors actually led that back with about a 4.28 times subscription. Retail investors were at 1.28 times. So you might not have the hottest debut. We'll have to wait and see what happens with Bluestone. But we were talking about SEBI proposals of easing IPO rules for large companies valued above 50,000 crore rupees. Let me go across to Charu to talk about why this is significant and what has SEBI proposed.
Hi, so whenever a large company or any company at all is listing on the stock exchanges, they have to comply with certain regulations with regards to how much they are willing to divest to the public shareholders. This threshold is at about 25%. Now, as per the existing norms, the amount of time given to these companies is quite less, and to ease the entire process of divesting and to give them more time so that they can do it in a staggered manner, SEBI has proposed some rules and given them more time to do so. That is why it is a big relief for big companies. To get that into perspective, we must understand that currently for companies which have a market cap of about 1 lakh and above, they have to divest about 5,000 crore worth of shares or about some very small percentage, and then they have to reach the 25% threshold in the coming years. But now what SEBI has proposed is that up to 50,000 crore worth of market capitalization, they have to reach the 25% threshold within 3 years. After that, for companies which have a market capitalization of about 50,000 crore to 1 lakh crore, they have to give shares worth 5,000 crore to the public shareholders or about 8% of their shareholding. For companies which have a market cap of about 1 lakh to 5 lakh crore, they have to give about 6,250 crores worth of shares to the public shareholders or about 2.75% of their shares to the public shareholders. After that, for companies which have a market cap of above 5 lakh crores, they have to give about 15,000 crore worth of shares to public shareholders, and the percentage can remain between 1 to 2.5%. Now, the major relief comes in terms of timelines. So now companies which are listing with below 15% shareholding will get about 5% to reach the 15% threshold, and within 10 years they have to reach the 25% threshold. And companies which are already listing with above 5%, so 15% threshold, will get another 5 years to reach the 25% threshold. Apart from this, the previous proposal to reduce the IPO's retail investor allocation from 35% to 25% has been taken back by SEBI due to the suggestions that it has received. So let's see what other developments and suggestions are following suit.
Yep, absolutely. Charu, thanks so much for that update. And watch out for, what I will find interesting is, and I've asked whether we can pull up this list. If this is extended to companies that have IPO'd in the last 3 years, that are above 50,000 crore and that are yet to hit that threshold of 3 years, if they get an extension for 2 years, will that have any benefit?
Why would they retrospect anything? Why would they do
if
anything
you're giving companies that are set to IPO now, then why not extend it to companies that
this is a thought in Alex's head, by the way.
I'm very, very important.
I'm putting it out there. It was a question that I was asking.
This is a what if kind of a scenario. Yeah,
it's something to consider, right?
Yeah.
So
I think it'll be interesting to see which ones will benefit now, apart from the obvious ones.
The other thing to consider is whether Milan Subway will be open today.
Yeah. Are you going right after the show to check it out?
I was asking somebody in newsroom yesterday whether they know how to swim because they're heading northwards.
Yeah. It's a downpour this morning. Hope everyone is safe. In Mumbai. We'll take a very short break, but these are some of the pictures that are coming in this morning. So obviously where it's not flooded and there's massive traffic jams, so pretty much large parts of Mumbai city are seeing waterlogging and sluggish traffic as well. Those who have to leave for the airport, please be careful as well. Schools are shut, so school kids are happy this morning. And the
moms are happy this morning.
Are they?
Yeah.
No stress.
There's online school,
No
so
stress.
no stress to at least get them up. That's true.
That's the point.
Yeah.
Maharashtra Chief Minister Devendra Fadnavis said that Mumbai has received 170 millimeters of rainfall in the last 8 hours and said that there's waterlogging at 14 locations, but traffic was disrupted in only 2 places. So we'll have to wait and watch. So very quick break at this point, even as we cover what's happening in the markets. There's no waterlogging there. There's complete choke from what the implied open is showing you. Going to be a pretty flat morning. But what should be your strategy? We're coming back with all of that after this very small break. They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks,
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
All right, back with India Market Open. Some important flashes on your screen, of course, about Chinese Foreign Minister in China promising to address 3 key concerns of India. This is all source-based information. And remember, we will dwell upon it so you can read those flashes. But, you know, it's also important to take stock of earnings and big stock moves that happened yesterday. Ashok Leyland was one such name, right? Went up in trade, reported an inline set of numbers. But I think the momentum around auto is extremely positive because of the GST rejig. Hear out what Shenu Agarwal, MD and CEO for Ashok Leyland, had to say about the earnings and the outlook ahead.
Yeah, starting with quarter one, I can tell you that we are very happy with the performance. Actually, before the start of the quarter, it seemed like a really tough quarter because some new regulations were coming up, and we were not sure whether we'll be able to pass on the cost. Some pressure from the commodity side, especially steel, was building up. There were a lot of uncertainty about the tariffs on the steel and the import restrictions that were getting posed. So it was a lot of uncertainty, of course, coupled with all the geopolitical and tariff situations going. But we are very happy that we have been able to post a fantastic quarter. Actually, I say fantastic because we were able to increase market share in both MHCV and LCV. And alongside that, we were able to post about 50%, 50 basis point improvement in our EBITDA as well. We are still sitting on a net cash position, so which means we have a cash surplus. We have reduced our operating working capital. So I think on all fronts, we have been able to do well in quarter one. Now, coming to quarter two, you would recall that last year, quarter one had a high base. I mean, it had a 5% growth. And therefore, a 1% decline in MHCV industry in quarter one this year is not really very concerning. But I think going forward, quarter two last year had a very low base because we had seen a 14 to 15% degrowth in MHCV industry in quarter two last year. And therefore, now in July, August, and September, we are really sitting on a low base. And we really think that the industry would really show some growth signs in this quarter, which Ashok Leyland would also leverage. If we are able to continue to increase our market share, definitely our performance in Q2 would be much better than in Q1.
Okay, so that's of course a slice of what Shenu Agarwal said, and we'll of course talk to him about the whole thing a bit later on, post 9:30. But optimistic about what happens next, and there is a point or a reason to be optimistic on autos. I believe Amit Goel, partner in Blue Oak Wealth, who's joining us right now, is constructive on autos. But before we get to that, Amit, good morning to you. Thanks for joining in. The moot question would be, are you constructive on markets from where we are right now? Because we didn't quite sustain the highs yesterday. Is that acceptable?
I mean, I'll take what is given in the markets right now, given the current down move and recent uptick yesterday. Good morning to you and good morning to all the viewers at NDTV Profit. So yes, yesterday's move obviously has been because of the GST announcements by the Prime Minister and no negative news on the world front, right? Between the Trump tariffs and between the war, the ceasefire talks and everything. So no bad news is good news. The movement was good, but 25,000 seems to be a very strong resistance looking at the derivatives market and also the price action. So I'm a little worried about that primarily, but yes, I'm a little more hopeful also. So I would look to buy into the strength of the markets, the pockets where the strength is showing. Broad market indices, not so much. I will look for 25,000 to be taken care of and markets to sustain above it before I plan any long trades on the markets, on the broad markets.
Hi, Amit. Morning to you. So at this juncture, therefore, based on what you're saying, I get what you're saying, but are there still individual trades that you're looking at that you see opportunities in?
So as a basket, if you look at the biggest gainer would be the consumption theme, the domestic consumption theme, given what we have recently heard about the positive news flows and the tailwinds in from the GST reforms. So I'm looking at the consumption index also. It is showing an inverted head and shoulders pattern as a technical setup. And some of the large players in this basket, like Maruti on the auto space, Bajaj Auto, DMart or the Asian Paints, are the picks that I would play, but not really from an intraday perspective, more from a positional perspective, going into Diwali.
What would be the derivative strategy, Amit, after the kind of big up move we saw today? promises to be a quiet day, but what would be your Nifty, Bank Nifty strategy on the derivative side?
It continues to be a range-bound movement because yesterday we would have expected that there could be a very sharp and swift short covering rally, which was not to be. So 25,000 and 56,000 happen to be very, very strong resistances. And we have also gapped up. So there seems to be a fresh range, which has, of course, moved up, but there is still a range. Given that the implied vols are very, very low, very, very dismal, I would still try and, eke out something from there, purely from a non-directional setup. So maybe a short triangle or an iron condor could be a setup which one could consider to capture this, probably a sideways to a slightly bearish movement on the broad indices.
As I understand it, you were positive on 4 stocks. Please correct me if I'm wrong. Maruti, Bajaj, DMart and Asian Paints. Could we run through the specific levels and what the call is?
Yeah, sure. So as I said, the broad consumption theme is what I would like to play going into the festive season, especially with the tailwinds and the expected up move in these counters. So Maruti, I'm looking at a fresh leg of momentum. It has, closed at an all-time high, very strong volumes, very strong positive close yesterday. So any sustenance here at around 14,000 levels is where I would look to buy into it, keeping a stop loss at 13,650 for targets of 15,000. Maruti currently seems to be in a price discovery area because there is no resistance on the top. And this has been outperforming on a relative strength from the broad market also. So I would like to play into this strength along with the tailwinds of GST positive news flow.
Okay. All right. I do want to mention, we talked about the implications of the proposal to ease IPO norms that could benefit Reliance Industries. We also spoke about the move on the prepaid tariff by Jio. But there's a note that's come out on Reliance Industries by Jefferies that we should mark as well. They've maintained their buy rating, but they've cut their target price to 1,670. And this is because of a couple of reasons. They've looked at the annual report and they've seen that it shows a rise in capitalized costs in Jio and retail. The free cash flow improvement driven by Jio and the marginal rise in net debt is something that they've taken account of. And they say that the priorities going forward include broadband and enterprise in Jio, and improving growth is seen in both the FMCG and retail as well as in the renewable space. But I think what they have taken into account is the rise in capitalized costs and also the increase in net debt, which is something to bear in mind as well. So I just want to ask you, Amit, whether you have a call on Reliance Industries and whether you would initiate at this point?
I do not have a specific call on Reliance Industries, but being an index heavyweight and with the kind of market, with the kind of moves that the index is making, which is not very clear in terms of, a momentum either on the upside or on the downside, I would not really want to take any positional bet on Reliance because it is in a sideways territory. Let it break above 1400, 1420 to possibly give me some sort of a clue as to where it wants to go. And I would then want to go long in this stock.
Stay on with us, Amit. All right, it's that time of the morning when we go to Somit Sarkar for all the dealing room chatter. I think, Somit, the first question in all dealing rooms, like in our newsroom, will be like if people have made it to work in the rains, because it's quite bad. But apart from that, what are you picking up?
Well, multiple stocks that remain in focus. Firstly, it's Lodha and AB Capital, and dealers are indicating that there are buy flows on FIDs specifically in both these counters, so keep an eye out for that. Apart from that, it's Innova Captab, where there are sell flows on the large HNI desk because dealers believe that if at all there is a cut in the GST rate for pharma products, it could be negative for Innova Captab because they had established this facility in Jammu and Kashmir which was exempt from GST, and if there's a cut now that happens for other pharma products, then it could be negative for them. Apart from that, it's ITD Cementation, which also remains in focus. There's a buzz of a potential order win announcement that could come in from the company's side. For Info Edge, now if you look at that counter has been on a downtrend because a large prominent FI has been a seller or was a seller in this counter, and now dealers are indicating that the selling related to Info Edge is most likely over, so keep an eye out for that. When it comes to Eternal and Swiggy, there are sell flows seen at higher level because recent channel checks are indicating that Zepto might have taken the lead when it comes to the weekly average user data. So there are some sell flows when it comes to Swiggy and Eternal, that is Zomato, because of that. And lastly, Vedanta was part of our segment on August 14th, and we had clearly indicated that there were buy flows and some positive corporate development was expected, and the company will now be considering dividend, in fact a second interim dividend, and this was completely not expected at that point of time, and analysts are now expecting that if at all the company goes ahead and approves this dividend, it could be around 10 rupees per share, which implies a dividend yield of close to 2.3%, and also the record date for this is in this expiry only, that is August 27th.
So, Sumit, a couple of follow-ups. Are dealing room dealers now saying that if indeed it lives up to that expectation, Vedanta could have a further rally, or is this priced in already?
Well, when it comes to the cash segment, we could see some rally, but given the fact that the expiry is on the record date is in this expiry, there could be some negative reaction when it comes to futures and options, at least, because this dividend will get adjusted in the FNO.
Okay, so that's with regards to Vedanta. The other thing, Sumit, that you mentioned at the start, which is Lodha and AB Capital, two businesses which are rate sensitives. In Lodha's case or in real estate case, pummeled out of shape for the last few days. Is this buy flow on FIDs because of the GST reforms and just the market mood that has changed and a rising tide raising all boats, or could there be stock-specific reasons for both of these?
See, for Lodha, one of the reasons could also be that the valuations have become extremely cheap after the fall that we have seen for all the real estate companies, and yes, Lodha as well in that case. So that is one thing could be for Lodha. And AB Capital, we have seen a sharp turnaround in the Q1 numbers, and that could have also prompted FI flows in that counter.
Got it. Okay. Sumit, thanks so much for that. Interesting list out there. And just before we move further on other things, Amit, I just want to extend this piece a bit further because this is much sought after on our show. And buy flows on the FI desk on Lodha as well as Aditya Birla Capital, as well as some positive developments likely on Vedanta. These three names, either on the derivative side, on the chart side, how would you play them? Any of these three?
Let me check Vedanta. I mean, if I look at the chart of Vedanta, it's an absolute sideways momentum. Look at the long-term moving averages, the 200 or the important 50 DMAs. The price is hovering right between them. So until and unless it breaks out, decisively above, let's say 450 above, I don't really see any technical trade, so to speak. Okay. Which was the other counter you were asking, Neeraj?
Capital as well, and Lodha from the real estate pack, and I was looking at the month so far, it has not done too much, 1% higher if I'm not mistaken for Lodha, but it's down over the last 1 month as much as 14%. So the question is, does it make an up move, because there is dealing room buzz to suggest that there are buy flows that could come through?
Purely from a technical standpoint, Lodha yesterday also, it has not really lived up to the expectation of a gap up move, and the kind of pattern it has made is more like a spinning top on a bearish side. And both the important moving averages, the 200 DMA as well as the 50 DMA, are currently above the current market price, which is 1247. So until and unless it breaks out and consolidates above 1288, I don't really see a major up move coming into Lodha. I'm not all that bullish on these two counters which you have recently asked.
Sunny Garwal of SBI Cap Securities joining us this morning. Sunny, very good morning to you. And I'm just wondering, everybody's talking about this consumption play, everyone's talking about automotive, and we saw the moves in trade yesterday. The question is, would you go out and buy any of the automotive companies even after yesterday's rally, or would you hold your horses and wait for the real numbers to come through? I think you're on mute, Sunny.
Yeah.
No, we'll have to come back to you on that one. But you know what? Let's talk about the latest development that we were talking about earlier.
So this is the thing in markets. In with a lack of any other major triggers, what's happening in terms of India's BRICS participation is now becoming bigger. Dates out just a short while ago of Foreign Minister S. Jaishankar's visit to Russia. That's going to happen fairly quickly as well. On the other hand, exclusive details coming in from our colleagues at NDTV. Sources are telling us that China is looking to address India's concerns regarding fertilizers, rare earths and other matters as well. My colleague Mohammad Ghazali is joining us with the exclusive details after that pretty fruitful meet that we saw between the Chinese foreign minister and his Indian counterpart.
Yeah, certainly a big announcement, a kind of agreement from China that they will help India in three key areas. Three key concerns will be addressed, be it about the tunnel boring machines which were stuck in China because China was not exporting these materials to India, these machine parts which are assembled in China, these big heavy tunnel boring machines, due to which multiple infrastructure projects were also put on hold. And besides that, China has also agreed for the supply of fertilizer and the rare earth minerals. This is something very critical because rare earth minerals, as you know, is being used in different sectors, be it automobile sectors, be it for clean energy, be it in medical equipments as well. And besides that, fertilizer, China happens to be the largest producer and consumer for fertilizers. So at least in our agriculture sector also it will be very useful. And it perhaps shows that both countries are now working to move this entire relationship or the diplomatic relations towards a positive side, because China also started off by resuming the Kailash Mansarovar Yatra. India reciprocated by allowing Chinese nationals Indian visas, and now there are talks about cross-border trade between India and China as well. And these three assurances from Chinese side certainly shows that obviously there is a long way to go between the two countries, but these are the little steps which both countries are taking to improve their relations.
All right, thanks so much, Ghazali, for getting us those details, and certainly something to track. Geopolitics front and center, Tamanna, in everything that we're looking at, in the absence of individual cues, and there are only few and far between this morning. What is happening with China, and if there is any development?
No, I think one big booster will be, and from what Mohammad Ghazali is reporting, that any kind of reprieve on rare earth becomes important, because that's the big one, right?
For the automotive companies.
For the automotive companies and across the board, rare earth then will become a big relief. And also, it gives you a sense of what you can expect going forward with India bolstering its position on BRICS. So a lot of pieces there which are coming into play right now. But like back to markets and what we're expecting today, and in fact I'm going to go across to Mahima talking about the notes. So Q1 is wrapped up. That's one factor which is now behind us, but there's a slew of strategy notes released on what Q1 looked like. Mahima's put it all together for us.
Right, so three interesting notes coming in: Morgan Stanley, JP Morgan as well as Citi, and they've given a summarized version of what's happened in Q1 and what to expect going forward. The first one is by Morgan Stanley, and they've said that earnings growth have improved sequentially in Q1, which is marking a good recovery. There was beat driven due to strong expected revenue growth, and that exceeded the low analyst expectations, and beat on top line, while margin expansion was in line with what the street was expecting. In terms of the earnings growth, the breadth improved sequentially, while relative stock performance although has declined QOQ basis, and earnings for broader markets was also in line with where the narrow indices stand. In terms of the overall recent developments provide triggers for indices to make new highs sooner is what they're expecting. And the sell side expectations remain low and should be ready to beat over the next few quarters is what Morgan Stanley believes. Now JP Morgan again says that witnessed a largely inline quarter, high single digit earnings growth is what we've seen, and overall they're saying that this was on account of global headwinds and mixed domestic macro conditions. Income tax cuts, lower inflation as well as policy rate easing and good monsoons are some triggers that will augur growth in second half. Concerns remaining with respect to where the external environment is concerned could be still something that might impact the second half of the earnings, but overall the upgrade will be driven by domestic demand, policy tailwinds, expectations of production cuts in China, and these are the factors that will probably aid consumption going ahead as well. In terms of EPS growth, that will be in line with normal GDP growth is what they are expecting. And in terms of what sectors they are preferring domestics over exporters, and therefore they are liking banks, consumer, autos, hospitals, real estate, as well as defense and power. Lastly, they've also given the Nifty target. They've said that in a base case scenario, they're expecting Nifty to be around 26,500, and a bull case scenario, they're expecting Nifty to reach that 30,000 mark. Lastly, Citi, they believe Indian equities are set up well here despite of the kind of macro conditions. Q1 largely in line, multiple stimulus in place, and they're saying that the June Nifty target should be anywhere between 26,700 and has a 7% upside from here. And earnings estimates were already factored in some consumption that is picked up already, especially during the festive season. And lastly, key downside risk, they're saying slower than expectation consumption pickup could be a key downside is what they're saying. So this is the overall summary of how Q1 has panned out according to these brokerages.
And JP Morgan talking about 26,500 to 30,000 and then 50. Mahima, thanks so much for that. We're not going to hit those marks today, but we will tell you what to make of the open in just a bit. We have to slip into a very quick break. The stocks that you should keep on your radar coming up right after.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy.
All right, welcome back. Welcome back on this rainy day here, and we're just a couple of minutes from the pre-open session to go. Sunny Agarwal, let's hope your audio is working now, just to get a sense of what you're finding interesting in the markets this morning. Do you think that this excitement about auto continues? How would you look at a Maruti right now, for example?
Yeah, good morning and apology for the technical glitch. I think, again, Autopack seems to be very well placed if I take a longer term view. But my only worry is that because of this announcement of cutting GST, there is a probability that the sales volume may dip in the month of September till the time the actual GST cut is implemented, and which is a peak festival season. And from assuming that during the fag end of September, this cut GST rate cut is implemented, then we can see a pent-up demand in the month of October, which is a predominantly Diwali and Dashera month. So again, kind of deep and then kind of a pent-up demand in the month of October. So I think overall auto sector look good. Coming to Maruti, yes, I think Maruti predominantly, which has got a largest share as far as an entry-level vehicle is concerned, and predominantly a choice for an first-time car buyer, will be a key beneficiary. And the management timeline again has been highlighting this, that the affordability to buy the first car has reduced significantly over the last few years, and because of this GST rate cut, we can see a 10% reduction in prices, and that will definitely give boost to an entry-level vehicle like hatchback. And that augurs well for Maruti, and as well as to some extent for Hyundai. They also have got a decent portfolio at an entry-level car.
Sunny, the other thing that moved really strongly yesterday was EMS stocks, right? Now, they've always been expensive, but this bit of a leg up that they got yesterday because of this GST change or proposed change, do you think there is merit in staying long in any or all of those names? What do you like, what don't you within that bucket?
Among the EMS space, I think, Neeraj, again, air conditioning as a segment is still quite underpenetrated in India. And as we move ahead, I think the penetration is going to increase. And we believe that rather than playing this story through OEM, I would like to ride through EMS player like Amber or E-Pack Durable. I feel Amber again, because of the recent two acquisition, they have moving into a backward integration, wherein an electronic component as a segment command and higher margin. So we believe that Amber is the best play to ride on the recent uptick in AC, as well as a play on backward integration component manufacturing segment. So Amber is our top pick as in the EMS segment. And one undervalued company which we have coverage on is Syrma SGS. So again, they have got an exposure to auto and industrial by supplying a PCBA. So again, Syrma is another recommendation from the EMS segment.
By the way, since we heard that these platform companies are not operational, I opened my phone to take a look, and I was coerced into calling for chai, ginger chai.
Who coerced you?
I'm not going to say anything. It's one of the people at this table. I will say that.
Alex was kind enough.
Since I know that I am not the one,
so I was
told the beans.
I was told that since it's open, why don't you just call for it? Order.
Come on, this is weather for chai. So the reason we're doing it is an experiment, and an ode to all of the delivery people out there. Yeah. It's no massive rains. If we can get our chai delivered, let's say 45 minutes is what it says.
Yeah.
It's a test of the system, and it's really raining out there. So that's on another on an aside. But having said that, Sunny, how are you looking at the platform companies right now? We saw some impact on an Eternal coming in yesterday, and Somit Sarkar in his Heard on the Street segment even talked about channel checks showing Zepto catching up, and that might see some pressure on both a Swiggy and an Eternal.
Yeah, I think again, company time and again have alluded to the fact that the competition is pretty high. Competitive intensity is pretty high in a quick commerce as a business, and I think, but despite of that, Eternal has been able to deliver a very solid set of numbers, both on food delivery as well as on quick commerce front during the first quarter. And we believe that despite of competition, they have been able to gain the market share, or at least retain the market share on both the platforms. So I think again we continue to remain bullish on both the names, whether it is Swiggy and Eternal. Swiggy, there has been some issue with quick commerce business, but their food delivery business is holding up very well. But if I have to choose one stock among the Swiggy and Eternal, I think I would like to go ahead with Eternal at a current juncture.
Just take a look. So 3 minutes in to the pre-open session, taking a look at some of the movers, and frankly, there aren't many very big movers. Honeywell is up and about in trade today, 3% higher. Trent, by the way, I thought this was interesting. Burnt Toast is a new brand that they have, and they've opened the first branch of it in Surat. And I was looking at the
feed store.
So, but I was looking at the, I don't know about the size, but I was looking at the catalog. It seems like it's a premium space because broadly, and it's in the women ethnic wear space. I would like to hear what Mahima has to say about it. I was looking at it, but 7,000 to 10,000, 11,000, 12,000, that kind of range of product. It's interesting. It's a new avenue for them to grow in, and the stock is up and about 2.3% in the pre-open.
Unusual name for a
Burnt Toast.
For a apparel brand.
They're going for the Gen Z and the younger crowd, apparently. So I don't know. I don't get the reference.
Okay.
Maybe
it's
maybe
not,
we'll
you're
have to
not
ask
the target
her.
audience at all.
Clearly not.
So okay. So Trent in focus. I would say look at a JSW holding. I would say look at an RIL today as well because of the impact of these SEBI norms for IPOs for large companies. Do you see any impact there? 2 or 3 things why RIL might show some impact today. So we should pull up that chart if we can. Wellspun Living, Vardhaman Textiles. I'm seeing some action there on your textile space as well. Is this concerns of tariffs sort of easing? You could see that happening. Although Peter Navarro, the guy who advises Trump, has written an op-ed piece in one of the newspapers in the US where he's once again said that India is doing this and India is doing that as far as crude is concerned. But this may turn into a negotiating point as well by Russia if it goes down to the wire, because we are a big client. So it's in Russia's interest to protect India's ability to procure crude from them. So
and long-standing relationship as well.
Long-standing relationship, but you know, in the world of Trump, it's all about the deal. So that's the one to look at. So you could look at some of those tariff plays reversing is the long and short point of it in trade today. Godfrey Phillips seems to see some reversal as well after getting beaten down yesterday. This is just the first 5-6 minutes of the pre-open trade, so keep that in mind. But it's time for the big brokerage call of the morning, and Axis is what is in focus. Bernstein has maintained an outperform on Axis Bank. Harsh joins in to tell us why.
Well, yes, Bernstein has in fact analyzed both sides of the coin where Axis is concerned. Is it a value buy? Is it a value trap? And lots has been written about it, but they continue to sit on the fence that this continues to be a value buy. They've in fact reduced their target price from 1,300 to 1,250. Still a 17% upside available where an Axis is concerned, according to them. It was viewed earlier as a clear turnaround story, but that hasn't played out the way they have expected it to. So what's changed in the last 2 years? They say that the liability franchise has improved, especially since the Citi acquisition, but performance remains weak. Deposit growth, deposit cost, and deposit quality have stagnated. We've not seen growth operating profit wise as well. They're seeing that there have been also concerns with regard to asset quality, and all of those factors actually lend credence to the fact that this is actually a value trap. But what hasn't changed also in terms of the negatives is earnings volatility and management churn. But what they say is it's still a value buy. Only from a perspective that there is still value in the stock. They say that there is significant gaps versus peers, of course, so that's something to be looked at as well. They've cut their growth assumptions, they've lowered their EPS estimates, but they still give it a 17% upside despite all of the negatives that they've spoken about.
Well, let's see. Banks clearly haven't shown that spunk, to be honest. It's been a, you know, I think the street is tilted towards NBFCs at the current point of time, and maybe rightfully so. I wonder if Ruchit Jain has a different view here. He's VP Equity Tech Research, Wealth Management at Motilal Oswal Johnson right now. Ruchit, great having you as always. Thanks for joining in. A word on Axis, Ruchit, since we had a brokerage call there, and if it is showing any signs of strength, and of course your ideas. And then of course we'll talk about the index as well post-market open. But let's do Axis and your ideas for the morning.
Yeah, hi, very good morning, Neeraj. Very good morning to everyone. Well, I think if you look at Axis Bank and compare it to other stocks within the private sector bank itself, then this has been one of the underperforming stock. Although we have seen a decent amount of price-wise correction from the highs of 1230, 1240, which were recently seen, but still trend-wise, it's too early to say that it's a change in the trend. So overall, chart success are not that positive for Axis Bank. I think relatively, if you look at broader trend for other private banks such as HDFC Bank or ICICI Bank, they seem to be much positive because any dips that are coming in these private sector banks are getting bought. Whereas in Axis Bank, the stock is also trading below its 200-day moving average. So I think there could be some in-between pullback moves, but the structure does not seem to be positive for Axis within the private sector names.
Okay, and Ruchit, let's go through what you're looking at individually as well this morning. Triggers are few and far between, but there must still be individual stocks that you're looking at.
So a couple of names that we are looking, and one theme that we are looking right now is only look for those stocks which have shown a good relative outperformance in this last 1.5 months of corrective phase. So we can clearly see that there are certain pockets, when the markets were correcting, those stocks were not correcting. And when the markets now has started showing a positive signs, good buying interest seen in those names. So JSW Steel is first stock within such basket where last 5 months the stock has seen some consolidation within a range. Yesterday we saw a breakout of that consolidation. The stock ended around its all-time high levels post that 5 months consolidation. And another, as I was talking, when last 1.5 months the markets have corrected, we have not seen any kind of price-wise correction in this stock, which is a sign of a strength. So JSW Steel is one stock that we are recommending to buy today with stop loss below 1,050 for potential targets around 1,130. And Aditya Birla Capital is second name which fits in the similar category, where in recent market correction we have not seen any kind of price-wise major dip coming in the stock. In fact, even if you look at the volumes pattern, when the prices are going up, the volumes are good. But when there have been small bit of corrections, there is no volume-based selling seen over there. So I think this clear relative outperforming theme that we are looking at should play out well over next few weeks. So AB Capital can be bought at current levels with stop loss below 270, expecting target in the range of 305 to 310.
That was incidentally on Somit's list this morning as well. In case you missed it, tune in around 8:45 every day for Heard on the Street. This will get your ideas of what dealing rooms are talking about and what the chatter is. Sunny, in the textile space, would you say that there are any opportunities in beaten down names? Maybe, the point number 2 out of the 3 things that worked in favor of the markets yesterday, maybe this tariff conversation eases out for India going forward.
Yeah, I mean, definitely in case there is a likelihood of reduction in the tariff burden on the textile companies, I think the players like Gokaldas Export and Welspun Living, I believe, again, one is the play on ready-made garments, and one is Welspun Living is more of an home textile play. I think these 2 players clearly stands to be a key beneficiary. I think there is some rumor which is also going on wherein government has removed the import duty on import of raw cotton, which can for the next 40-45 days to tackle this tariff-related uncertainty, and that will help all these textile companies to lower the raw material cost. So I think that should again augur well for all these textile companies. So again, if I have to pick 2 names, one is Gokaldas Export for ready-made garment, and one is obviously a Welspun Living for an home textile play.
Looking at the insurance play, a lot of confusion yesterday with this claim or the speculation that insurance companies, and of course that will be moved to the 5% bracket. That seems fairly clear as far as GST is concerned, but they may not get input tax credit. And then some versions saying that yes, they will get input tax credit. Is insurance something that you see actually benefiting? Because there is clarity that the government wants to encourage more and more people to buy policies.
Yeah, this is for me,
Yes, Sunny, that's for you.
Yeah. So coming, I mean, again, that's a bit of gray area whether that input tax credit is available to the insurance companies or not. But I think the current law, GST law says that if some goods are under the 5% GST bracket, I think input tax credit is something which is not available to goods or services. So I think again, we need to hear from the management on exact impact. But coming to the demand side, definitely a reduction in burden on buying an insurance policy, whether it is life or health, definitely will help many other uncovered people to go and buy the insurance and cover their families, whether it is on life or health side. So I think in long term, definitely it's augurs well because of this reduction in burden on a consumer to buy the insurance and pay the premium. So I think we continue to remain constructive. So within general insurance space, I think we believe the way to play is ICICI Lombard, which is a leader in from a private sector space, and among the life, I think HDFC Life, which has been posting a very good numbers of late. So HDFC Life continue to remain the our buy list.
Your top pick, Ruchit, after the pre-open session?
So I think the two names which I've suggested, Aditya Birla Capital and JSWCL, within that, I think AB Capital should do well going in today's trading session as well. So I would go with the same. If I had to choose one, then AB Capital should be bought for today's trading session as well.
Okay. Well, about 20 seconds left for the markets to kickstart trade. Stay on, gentlemen. The question only is, after we start off flat, will we buckle down under a bit of pressure and will profit booking come in? Or can we build on? Because yesterday we did not hold on to the highs. We still ended up a respectable 1% or thereabout. So that will be the big thing. Okay, some exclusives raining on our screen today, but let's focus on the market for the time being because the markets have just opened. A flattish start, nothing otherwise anticipated. IT2 flat, mid caps and small caps, I doubt, are doing something materially different. No, they aren't. The mid cap index and the small cap index, it's as flat can be. Alex was joking that I should have just sat there and not come to the wall. He was right. Let's get the heat map because individual stocks might show some changes. So on expected lines, Reliance Industries is opening up higher, 1.45% higher. A couple of reasons, by the way. That oil prices have also marginally been higher is only secondary. But I think the geo tariff hike, maybe easing of IPO norms, all of that helping that stock today. NTPC 1.2% higher. Airtel is up about 1% as well. There is strength in Trent. Well, it's a new store format that they are trying out. Adani Ports is up 0.8%. Hero MotoCorp 0.5%. HUL is amongst the other gainers. But the good part to notice is that today, whatever gainers are there, they are not dominated by either consumption or autos. In fact, those are kind of behind. Maybe Hero MotoCorp is there, but otherwise not too many consumption and auto names there. On the flip side, Axis Bank corrects despite a positive brokerage note. Shriram Finance, HCL Tech, I saw M&M within this list and suddenly is moved out as well. So lots of moving parts on a very flat day. I think the one that is holding out is Reliance, and I dare say, just before I hand it over to Tamanna, if we can bring up the points chart, because if Reliance was not doing this, then the markets would have been in a tizzy of sorts. Look at that. Out of 63, 37 points contributed by Reliance. Strip that out, and almost even Stevens are actually a bit negative for the markets.
So it is actually one large cap that is pulling weight, and of course Bharti Adani Ports, NTPC also come into that play. The positive note on NTPC today as well, which is probably contributing to that mood. Let's pull up the broader markets as well and see if there's more action there than what we're seeing on the Sensex and the Nifty. A bit of pickup actually on the Nifty. 0.25% up on the mid cap 150. Let's pull up the small cap 250. That's also nearly 0.5%, over 0.25% up. You're going to see a quiet day, and that's all right after the kind of action that you've seen. I would still say watch out for autos, even as we pull up the sectoral heat map, because the news that we broke just a short while ago that China is now beginning to talk positively about rare earth supplies. And this is something that you would have heard from in commentary from management of auto companies across the pack on how this has been a pain point, especially for those who are big on electric vehicles. So rare earth continues to be a pain point. Oil and gas stocks are moving up. Today in trade, crude has been mildly up, largely benign. But if there is a Ukraine-Russia ceasefire or peace deal which comes in, this is one space that you need to look at very, very closely. Nifty Infra is doing okay. Energy, nothing major that you're seeing really in terms of action. Defense stocks continue to be a pain point. And just a quick programming reminder, we're doing a deep dive on defense stocks today and just telling you about what's gone wrong with them. and why there's been so much pain for a while. Nifty Auto moving back after yesterday's, rock and roll kind of a run, but not massively, less than 0.25% down. I want to pull up the India VIX just for a second and see what's happening there. And that's fine, just a little above 12, VIX in the negative, which is good news. So this is definitely a market where the bullish sentiment continues. There's a bit of a pause, if nothing else, in a massive amount of trade. Let's look at individual stocks. We talked about Axis Bank, and there was a very positive view from Bernstein, not playing out right now, it seems, but that's one stock that you should keep on your radar. A bit of recovery there from when markets open. PG Electroplast, Cera Sanitary are some of the stocks that you could look at. GST cut hopes will continue, even a Voltas actually, because consumer durables might be seeing a bit of the tailwind of that boost that we saw yesterday. Hindustan Zinc is the other one that we're looking at. They have approved a 3,823 crore reprocessing plant. Vedanta is believed to be considering a second interim dividend. We might see some action there, 1.5% up. NTPC has raised capacity targets. That's why you're seeing NTPC with some action. All-Time Plastics is the other stock we're talking about. Marquee investor is coming in on it, so 5.5% up this morning. GMR Airports will be raising 5,000 crores. So watch out on any action there. Completely flat actually. Nuvoco Vistas is the other one we're looking at. They've approved 600 crores NCD issuance. They're raising funds as well. Apart from that, a DCX system might be on the downside if we look at it, if the CFO resigns completely flat. So I think it's a bit of a struggle today to find stocks that are moving too much. It's quite placid in the markets today.
Yeah, you said it, Tamanna. But, the fact that we were talking about the textile companies, garment manufacturers, Vardhaman Textiles, Wellspun Living, there's Raymond as well. Raymond, by the way, moving up quite substantially as well. All gaining on the back of the government's latest move to provide perhaps a little bit of relief to this sector that was seeing quite a bit of trouble. And what they've done is that they've exempted the customs duty on imported cotton till the end of September from the data release that I can see or the gazetted notification that has come through, and this should be a positive for them. It is something that has come through overnight or this morning. Sunny, what do you make of this, and how much of a relief would this be in a scenario where already they would have had a bit of an impact on account of this trade uncertainty?
Yeah, I think at least, import of cotton, fine quality cotton definitely helps them to lower their input cost and will help them compete with another competitor, whether it is from Bangladesh or for that matter, China in terms of finished goods. So I think definitely it will help them to absorb the shock of this tariff which is likely to get implemented. And one has to keep in mind that for all these export-led textile companies, predominantly September quarter and December quarter are the peak quarter in terms of the sales. And I think a very timely relief given by the government, at least that will help them to compete with the other peers. And on the top of that, in case there is some delay on implementation of tariff by US on domestic exporter, I think that should help them to at least capture the peak season ahead of them. So I think overall positive development in terms of how much benefit that will flow through in terms of PNL. I think we need to discuss with the management and hear from the management what is the contribution of import-led cotton and domestic source cotton at the current juncture.
What's happening basically? India has removed duty on cotton imports till the 30th of September amidst tariff pressure. So that context is important as well. So look at what's happening in the last few days. India is not fighting back, but India is strengthening herself. So we're doing these meetings with top economic ministries, we're cleaning up GST, we're boosting consumption. And now if you have autos and textiles actually most vulnerable, then we're saying, okay, hey, let's remove our cotton import duties. And this was the key point, right, that India taxes so heavily. So we're responding to that. 11% duty on raw cotton imports for a period of 42 days have been removed till September 30th. Exemption will benefit textile chain, including yarn, fabric, garments and made-ups. It will provide temporary relief to textile industry. Government says in its notification that the move was necessary in public interest as well.
Yeah. It aids the ability of these companies to absorb the margin pressures due to the higher tariffs as well. So maybe some bit of pricing cuts and export competitiveness comes in, because remember, this is the key stocking season for Thanksgiving in the US. And you don't want to miss this, otherwise this year is gone. So yeah, this is very, very good news for them. And not
especially
surprising.
also in the context of it being such a labor-intensive sector in India.
Yeah, for the country. Yeah.
Just wanted to get a quick technical view from Ruchit on some of these textile stocks and what you're liking there. We heard Sunny's preferences. Ruchit, what are you liking right now in this space? This is going to be a key buzzer.
I think within the space, Vardhaman Textiles looks positive from here on. The stock has already seen a correction from 500 to 390, 400, which was yesterday or day before yesterday's low. And the kind of volumes that we have seen in this correction, we have not seen any kind of high volume based selling happening over there. The stock seems to have resumed its up move with a breakout above its at least short-term 20-day exponential moving average today. So Vardhaman Textile looks positively placed, and we could see a relative outperformance in this name.
Volume's already at 1.7 times the 30-day average at 9:24 in the morning.
Yep. Let's go across to Agnidev Bhattacharya. He's giving us a report on what is happening in Mumbai right now. He's at Dalal Street, if I'm not mistaken. Severe waterlogging is what we've been seeing since the morning. Sluggish traffic on multiple routes causing delays in local trains and flights. Agni, I'm sure you are drenched by now, living the reporter's life, as are so many people who have to go out and work today in Mumbai. But what is the update that you're getting in terms of services interrupted?
Right, good morning. So as you can see behind me, and if it's not very clear, it's a very congested and indeed a very wet morning here in Mumbai's BKC. In fact, not just BKC, the entirety of Mumbai is seeing very heavy rainfall. It's been a red alert declared across Mumbai and suburbs, and areas like Vikhroli, Baikala, Bandra and Santa Cruz have seen over 200 mm of rainfall in the day. Businesses across the city continue to be impacted for the second day in a row. Remember, quick commerce platforms like Swiggy, Zomato and Zepto have shut operations across multiple locations, and the locations where they are indeed serving are also showing delayed time for deliveries. Important thing to note is that medicine deliveries across these platforms are also unavailable in select pockets. Now remember, it's not just quick commerce, even cab fares have gone up across certain areas. I for myself found it a struggle to get a cab to get into office today, and this is a similar problem being faced by a lot of people. Those who don't have the luxury of cabs, trains are running delayed across the western, across the central and the harbour lines, but the delay is not as much as it was yesterday. Now 14 flights have been asked for go-arounds at Mumbai's airport. One flight from Ahmedabad to Mumbai has been diverted to another location, and this is a developing story. So remember, BMC has declared a holiday for private companies across Mumbai and across all private companies under the Disaster Management Act. So there is a red alert declared across the city. We'll keep bringing you more updates, so do stay tuned.
Agni, and stay dry if you can, possibly. But thank you so much for braving this and going out there and giving us a ground report. This is, of course, BKC and a clutch of other Mumbai areas waterlogged as well. Well, Pankaj Tibrewal would have reached office, of course. He's in BKC too, and which is why founder and CEO of Ikigai Asset Managers joins us right now on the show to talk about his view on the markets. Pankaj, any problems reaching office?
Actually, today was a great day. Flat 35 minutes you were in office because most of the people decided to have a cup of tea at their home.
Yeah, and we are having one, by the way, out here because we've just tested the Mumbai spirit by ordering it online. But Pankaj,
arriving in 17 minutes.
Arriving in 17
minutes.
On the way.
Update.
For now on card, yeah. Okay, great. So Pankaj, thank you for joining us, of course. And just wondering, how are you viewing all that's happened in the last, 72 hours, right? Because you call it from Friday evening onwards or Thursday afternoon onwards with the upgrade, what we call the trifecta yesterday, and now the Chinese premier visit and seemingly positive outcome of the Trump-Zelensky Europe meet. What does it mean for Indian equities?
So, Neeraj, if you look at it in two parts, and there are lots of moving parts over the last 15-20 days, and we have to decode it very carefully. First is the global issues. And I think post the 50% tariff on India, I think there's a lot of pessimism on the street. There are three case scenarios which you need to work with. The base case we are working with is the reciprocal tariff remains and the secondary tariff gets pushed out, postponed, or cancelled, which is the another 25%. The bear case is that both of that remains, which market is not expecting, and hence a knee-jerk reaction could be there if it gets implemented from 27th of August, which market is believing he will chicken it out, and there will be diplomacy at work. The bull case is that secondary tariffs get out, which is the another 25%, and the reciprocal tariff of 25 gets further down to 18, 19%. That's the bull case. So markets in our limited wisdom is making sure that we are at the base case, which is reciprocal tariff remains and the other breaks out. And there's a lot of effort been made by different countries to make sure that the Russia-Ukraine war stops or there's a ceasefire. Let's see how far we go on that. To be honest with you, it's all above our pay grade right now with the geopolitics at work. And different leaders, yesterday you saw at White House, it was the first time so many European leaders at one go at White House negotiating for a ceasefire or a stoppage of war. So that's a moving part. But I think we have to watch out for different sectors which might get impacted. And the broader level thought, Neeraj, is that there is a global rewiring of supply chains which will happen as you move into the next 2, 3, 5, 10 years. And there will be replications across different sectors as the rewiring happens of supply chains. Where the supply chain is concentrated, like, for example, electronics, semiconductors, I think it will not be an easy one for US to shift out there entirely at one go. It will lead to a lot of disruptions. In case of autos, for example, the hub is Mexico right now, but a large part of advanced auto systems is not produced in Mexico. So you will see a lot of rewiring negotiations between vendors, buyer, supplier. And I was just doing a rough maths, Neeraj. One, if you look at the import tariff on a monthly basis, it's now $35 billion. Assuming US collects $500 billion, it has to be split between three parties: the exporter, the importer, and the consumer. As far the data for the last 3 months has been released, when there was 10% tariff, large part of the burden has been taken by the importer in US right now. It may be a large corporate, it may be a middleman, it may be a trader, but they have absorbed the large 70% of the incremental tariff cost because they were confused whether it's 10%, 15, 20, 25. So once that clarity has started to emerge, our belief is that the profit pool of both exporter and the importer doesn't justify for anybody to absorb such $500 billion. I think large part will be passed on to the consumer, which is the US consumer at the end of the day. And our sense is over the next 6 to 12 months, inflation has already started inching up in US, and it will inch up further, which means that the 2% Fed target is nowhere to be achieved. And hence Fed will be in a dilemma. It will have just one chance in September to cut rates. Otherwise, inflation will not give that opportunity. And we are worried that US could see slower growth, higher inflation, which means stagflation situation going into the next 12 months. And if you look at the expect the unexpected, markets this year has made new highs. US market is up 34% from the April lows, and European markets is on fire. Greece, Spain, you look at the Asian markets, Korea, Vietnam, a sleepy market like Indonesia, all have done well. India has massively underperformed because of the growth concerns. 24% underperformance versus emerging market index. And I believe that a lot of concerns is in the price. This has happened after 15 years that India is underperforming emerging market to that extent. Normally we outperform by 3 to 5%. So there will be with all these actions by the government on GST and more actions to follow as in the next 100 days on reforms and some support to textile and other industries. I believe that there is a reasonable opportunity for us to move higher from a market. There will be a consolidation period, but I'm not so negative right now on the markets. Let it put it this way. We are constructive on the markets from here on. It will be a stock pickers market. Not everything will move up, based on earnings, based on growth, markets will reward those companies. So easy money era for the last 4-5 years, which we saw, Neeraj, is behind us. We have to be mindful of that. We have to moderate our return expectations from the market, and it will be a real fund manager test now from a bottom-up stock picking.
I got it. Pankaj, important points that you've made, and we were just discussing the relative valuations this morning. In fact, Neeraj had it in his trade setup as well. But I'm curious about whether or not you use dry powder, or whether over the course of the last couple of months you've already deployed. And we've also heard veteran fund managers talk about how they have rotated into large caps and more resilient counters amidst this uncertainty. Are you seeing opportunities to rotate back, if at all?
So I think that narrative started in January, February: sell mid and small cap, sell broader markets, move into large cap. The reality has been very different. From February and March lows, mid and small caps or the broader markets has significantly outperformed the large caps. And that's not in fluke. I think there is a reasoning behind it. Even in this quarter, if you look at the large caps, which is the top 100 stocks, have delivered 6-7% earnings growth, whereas the mid caps, the next 150, have delivered 17% earnings growth. And our belief is that though on a headline basis, the mid and small caps looks to be pricey and above a longer term average in terms of premium, but when you look at it from a peg basis, it's not that expensive, because for per unit of growth, what price you are paying. So for a 6-7% large cap earnings growth, you are ready to pay 22 times. But for a 13-14% earnings growth on mid and small caps, for example, you are worried about 27-28 times. So I think we need to change our lens. Till the growth continues, I don't think you will see a massive kind of a sell-off. There will be opportunities. And to be honest with you, the index headline returns actually mask the damage. There is a significant amount of damage which has been done in the broader markets over the last 6 to 8 months. And many stocks have still not recovered to the September highs of last year. So I think it's more, rather than taking a cap-wise approach, I think it's more of a bottom-up approach. Wherever you find opportunities in terms of growth at reasonable valuation in terms of both PEG and PE, I think that's the way to go about it. But we don't get floored by the narrative that sell large caps, move into sell mid and small caps and move into large cap.
Yeah.
In a quarterly newsletter in March, we wrote, and we gave 4-5 reasons that why it's not the correct narrative. We were cautious till February end, if you remember, all the while, and then we changed our stance. And I believe that the real test of a fund manager starts now. The easy era of money is behind us. Now the real test will be whether you can see through the noise, and can you pick up stocks which can deliver that earnings growth which is higher than the market earnings.
Pankaj, now having said that, and you started this interview with a very interesting statement that figuring out what these world leaders will do is way above our pay grade, but then speculating is completely free, so we can do that quite easily. Having said that, this kind of boost that we got on GST and India's own measures, we saw that with the import duties cut on cotton just this morning, and we're seeing the impact in the market. GST simplifying, more measures that we expect will likely come. What would be the play here? What would be the domestic focus here? Which sectors do you think will benefit the most?
So our sense is India worked during crisis, and this is another important time where we should not waste it. We used COVID as a brilliant opportunity. We did a lot of things which were right. Now, on the hindsight, we believe we were smart enough. But I think this is a time where if GST is implemented in full spirit, by full spirit, I mean that give the impetus to the end consumer, revive consumption. I think that should be the agenda. It should not be that if we are giving 1,50,000 crores or, bringing the 12% to 5% and 28 to 18%, there's a loss of 1,50,000, 1,60,000 crores. Try and make it from Sen boards, try and make it from that. I think the time is now to simplify the ease of doing business. And I think whenever I am going at the ground level, the demand conditions today is not good. For the last 2-3 months, demand has slowed down across the board. And that's the feedback we are getting, whether it be cement, steel, or whether it be the consumption related items. So I think from a government perspective, there are many things which government can do to unleash the animal spirits in the economy. See, India is a very peculiar country. Once people start feeling positive and optimistic about the future, they will plan and invest. And I think that time is now to give that confidence that we are behind this economy, and GST is a right step. Other things which can follow is giving stocks
but why is that peculiar? Wouldn't that be the investing pattern in most countries where consumer optimism or investor confidence drives markets?
Yes, obviously that's there in every country, but India to move such a large ship is not easy, and the results follow with a lag. And my optimism from the market and economy is coming from the fact that RBI has done a huge heavyweight lifting in the last 6 months. The impact of that we will see from September quarter onwards in maybe December and the March quarter, because it's a significant monetary easing. And if that's followed by fiscal, I think it's a great thing. And I would be on the camp that last 4 years, you consolidated your balance sheet very nicely on the fiscal side. Maybe if you need to compromise 20-30 basis points for growth in this volatile environment, please do that. Please don't shy away, because S&P has already upgraded your rating after 18 years. The next rating action will not happen immediately. So take that room of 20, 30, 40 basis points of extra fiscal expansion, go for growth right now, because that's the need of the hour. Unleash the animal spirits across sectors, whether it be electronics, whether it be the PLI across pharma, across manufacturing of footwear, across apparels, textiles, gems and jewelry. Support whatever is needed to the common businessman. Bring the simplification of GST so that the compliance increases. Think about it. When 12% becomes 5%, the large part of non-compliance world will move away. They will also like to contribute for 5% and become compliant. And a lot of black will convert into white. So our only recommendation is do this GST rationalization in full spirit and make sure that the ground level economy starts to pick up. Today, across the sectors, demand has been weak. That's the feedback we are getting across companies and across distribution channels.
Yeah. Fair point. Fair point. And India is doing some right noises. Pankaj, thank you so much for your thoughts today. But one of the things that India has done is that the finance ministry has removed the basic customs duty on raw cotton imports. So before we get in Pearl Global in this conversation, let's get in Mahima to quickly give us a synopsis. Mahima.
Right, so Neeraj, as you rightly mentioned, the finance ministry has announced that they will be removing custom duty for the next 42 days till 30th of September. That's charged at 11% currently, and this is on raw cotton imports for the next 42 odd days. And this exemption is set to benefit the entire textile chain, including yarn, fabric, garments, as well as the entire made-up garments as well. And this will provide a temporary relief to the entire textile space, considering the tariff uncertainty that's going on. And the government says that this move was pretty much necessary in public interest. In terms of what stocks can benefit from this includes counters like Pearl Global, Wellspun Living, Trident Limited, KPR Mill, Gokuldas, as well as Arvind Limited. So certainly a positive for the entire textile space.
Okay, and in fact, we'll take that question to Pallab Banerjee. Thank you for that, Mahima. Pallab Banerjee is MD of Pearl Global Industries, who joins in now. Pallab, very good morning to you. What is the quantum of impact that you see of this move coming in?
So it's too early to say, but at the same time, I think the advantages should be there. There's 11% tariff on any imported cotton. We do, certain requirements are there from, like say, from the Australia market or from US market to use their cotton. And that's where we were not competitive enough. So this 11% also is a positive direction that should give that advantage. And overall, if the cotton and the fabric becomes more competitive in the global market from India, then that's an advantage.
Pallab, sorry, we're looking for some guidance around how, good morning, Neeraj here, about how much this benefits an average Indian textile company which is exporting in the global competitiveness, this particular move.
So this will be the cotton gets into yarn, and then yarn gets into the fabric. So of course, the component of cotton and the final fabric price would be small, but still, at this point of time, I think every percent matters. when we are talking about a 25%, even like, if we don't consider the penalty that US has imposed on India, it's higher than the rest of the other competitors, competing countries, if I have to see. So that 5%, whatever we need to do to get advantage of that, 20 versus 25. And then of course, penalty is a staller at this point of time.
Yeah.
So penalty has to go away, and then we have to talk about that 20 versus 25.
Pallab, so let's assume the penalty is not there. Let's assume there is a positive outcome out there and the 25% penalty is not there. So 20 versus 25, there is a move that has happened on cotton which might help, whatever, 0.5%, 1%, 2%, you are better placed to answer that. But it is also the peak season for Thanksgiving. So my question is, let's assume that this move has been done. Will companies like yours or others maybe take a small hit on the margins to ensure that the volumes stay for this season or not?
So see, like what the US retailers are at this point of time undergoing, importing from India, the biggest challenge is what will happen to this penalty. So that was something like every retailer has come back to us to say, either you take the guarantee of this, that if it doesn't go away, then you take the penalty, or the other option is that you do it from outside India. Like we have production in Vietnam and Indonesia and other places. So that's the kind of problem that we were at this point of time fighting on. So yes, we can take a risk, say that, okay, we will take this 25% as a guarantee that most of it will move away, or we take some kind of, discount or hit in my bottom line. And then like the long-term competition would be this 19-20% that our competing countries have, and we have 25. So there, like I think all these small things, there have been like, we had a discussion with the ministry also, thanks to our Apparel Export Promotion Council and other, all the organizations. So there also we talked about a list of things that can make us more competitive. So it's very heartening to see that the Indian government is taking a quick action, and some of these actions has to come in now so that we don't miss this peak season that's going on.
Just give us a peek into what are the conversations right now between Indian textile exporters and their clients in the United States. Are any orders on pause right now? Question number one. Question number two, are there attempts to renegotiate some of the terms of the deal or reference? And then what are companies like yourselves and others doing to bypass this?
So the biggest concern is, once again, is this 25% penalty, because that's something most of the retailers are saying that they cannot take the, that kind of penalty or that kind of tariff they cannot pay to make it more competitive in the US market. So that's where the biggest dollar is coming at this point of time. And that's happening at a time of order placement, which is, in fact, already it was delayed. Most of the US retailers were waiting to see what's the final tariff on August 7th. And
so
then we have this.
Is anyone pausing orders right now?
So they have been pausing it till August 7th, and then the whole discussion started. What happens to this 25%? Who takes the risk of this 25%? So that's the negotiation I think is going on. Most of the Indian exporters are saying, okay, let's take this, at least like take the risk. Hopefully it will go away because, of course, the governments are speaking to each other and there will be some negotiation going on.
What more do textile exporters need? We've seen some custom duties. So one key ingredient or one key raw material, that cost comes down. But what else does the industry need right now to support while this gets sorted out?
So all the industry councils, like for example, apparel exporters, then the textiles, the cotton raw material that we are speaking about now. So all the councils have got together along with the ministry. There's a lot of work going on in the background to see how things can be improved. What are the things that can be done immediately? In fact, we got some assurance also from the government that whatever happens very fast. Within the next 15 days, there will be certain changes that we should expect. So those are things that is going on at this point of time. So I'm not the expert to really comment on it. But yes, and today's one is a positive one that we saw this morning.
Most certainly. Pallab, just one question, hypothetical as it may be, but you have facilities outside, so you might be able to execute it. For companies which don't have facilities outside, and if they take the risk of this 25% additional penalty, and should it not work out, does it result in a loss-making transaction, or does it result in a transaction which will have wafer-thin margins?
Absolutely loss-making.
Okay, fair call. Okay, really appreciate you joining us this morning on such a short request, Pallab. But all the best for this measures and more, and all the best for making the most of this season.
Thank you. Thank you.
That's so good to have Pearl Global right up when the news has come out, and certainly keeps the textile stocks firmly in focus. But I dare say the move is the right one, Tamanna. The government is looking inward to see what is it that
we can do
in order to ease the pressures as they are.
Yeah. So, if you listen to the Prime Minister's speech on Independence Day, the focus on Atmanirbhar, this is what it looks like when you play it out beyond the speech and what you actually see happening.
Exactly.
So, more of that. And the other part of that, of course, is the GST easing proposal. So, the government has proposed an overhaul in the GST regime that could shift gears for India's automobile sector, offering significant tax relief to small cars, two-wheelers and other segments as well, based on engine capacity. Before we get to our conversation on what the mood is now in the industry, let me bring in Puneet for more on this.
Well, thank you for that. So definitely a potential GST reduction on the cars for small cars. It'll go down from 28% currently to 18%, and that is expected to have a huge fillip for this segment, which has been under pressure due to increasing costs, and that's largely based on safety standards. So the share of small cars has actually fallen from 46% in 2019 to just 23% now, and that's largely because of a 50% cost reduction in the cost of safety of these smaller cars essentially. Now with this fillip, a 10% reduction in duty, that is expected to boost the small car sales, and players like Maruti, Hyundai as well as Tata Motors are expected to benefit from this. We also saw yesterday a very strong reaction on the entry level two-wheeler players, so they are benefiting. Tractor players benefit from a lower GST to 5% from 12%, and the auto ancillary space also benefit. But dealers who have been with the Maruti amongst others will get a key benefit of this. And to take this conversation further with the Dealers Association to just get a sense of what's the mood right now if this GST cut comes is going to be one of the key conversations and the highlight from this one.
Okay, in fact, let me take that question to C.S. Vigneshwar, President of FADA, who's joining in on the conversation. Mr. Vigneshwar, thank you so much for speaking to us. Just let's start with a bit of a mood check after this happens. Obviously, there will be some time before these play out, but do you expect a big customer boost? And what if it does not coincide with the festive season?
Thank you, Tamara. Thanks for having FADA over. And to be honest, I'm delighted. I'm over the moon that finally there's some kind of a rate rationalization for GST coming in. We had written to the government saying that we probably need to bring down the GST. It will really help the sales. It will also help the mobility of the Indian customers. And we are really over the moon that this has been done. More customers are going to be coming onto our showrooms. We're going to have much better sales. And this is really going to help India's mobility requirements, and also in terms of our own profitability. I think it's a great move, and we are very, very thankful to the government and grateful for them to consider this.
Okay, so now let's come to the second part of my question. Festive season is important for you, for the industry, and GST might not come into play by then. You have to already start stocking at the earlier GST rates. How are you managing that at the dealer level?
We need to speak to the government. We already have appointments with them we have to seek their appointments at that time. We'll be speaking to them in the next week. And the older GST rates, of course, will be taken care by the government. There will be some kind of reversal because it can't be, the old GST cars can't be lying with us. So I'm sure the government will take care of it.
No, take care of it how? I mean,
that would be a credit being given to the GST, which is already paid.
Okay.
I don't think it's good.
Okay, so are you positive about that happening?
Absolutely. Otherwise, it's going to be catastrophic.
Right. And in the interim, do you think that some of those discounts and GST offerings are already going to start trickling in? By when do you see that happening at the dealership level?
We don't know. This is too early for us to comment on that. So we probably need to watch what's happening in the next couple of days to a week, and then decide on how things need to go.
Okay. Well, let's get in a question in from Ashok Leland as well, because Shenu Agarwal is with us, and I wonder, Mr. Agarwal, what do you think happens due to these GST cuts? Is there pre-buying, or is the buying getting postponed to post GST, or will companies offer discounts and therefore that kind of works out?
Yeah, very interesting question. Let's look at it from different angles as far as CV industry is concerned. So first thing is that, any GST rate cuts would definitely help the Indian economy. And our industry's fortunes are very, very linked with the overall economy. Any significant rate cuts would also lead into a spurt in consumption, which indirectly means that there would be more freight or more load that needs to be carried. And therefore, our fleet utilization should go up. It should create positive sentiments in the fleet operators to go for the new purchases. So from that side, definitely it's a win for us. The other thing is that the prices of the commercial vehicles itself could go down, because all the commercial vehicles today are in 28% GST slab. And the government, what we are hearing is government is considering taking this 28% totally out. And the next available slab would be 18%, right? So 10% is not a small chunk of money, for a commercial vehicle where average price for a heavy duty truck may be 30, 40, 50 lakhs, right? So that's a pretty big amount. So that is going to be an additional boon for the CV industry, of course, if it all happens. And thirdly, I would say we are also hearing in news that RBI is considering to take some action to have a better credit supply and credit access for the automotive sector. Now, since commercial vehicle industry is totally dependent on financing, and therefore, if there is any relief from the RBI in terms of credit supply or credit access, then it will be something really, really good. And if both the things happen simultaneously, I think CV industry would have a good time. Last comment is that you and I know that the commercial vehicle aging of the fleet is at its all-time high, which is touching about 10 years now. And historically, it has been around 7.5 years. And we had all been wondering for last few quarters that what is that trigger which will actually unleash all that demand? So we do think that this could be the time, either RBI's measures or the GST or in combination. If that happens, definitely CV industry would have a much better time, not just for this year, but for few years to come.
Well, Mr. Agarwal, for Ashok Leyland specifically, you have the base effect of last year in Q2, new capacities coming on stream in Q4. Are you sounding a lot more upbeat than what I thought you would sound?
Yes, we are actually upbeat, and we do think that for the whole year, the MHCV industry should grow in mid-single digits, which is quite okay for us. We are also hearing about some news on the GST front and also on the RBI front, which if we factor, then possibly our own expectation from the industry would go up. But yes, for the overall year, we are very positive. We think that the industry should grow even without accounting for this news. Industry should grow by mid-single digits.
Okay, so positive on the GST front. Some details need to still be hammered out. So thank you so much, Mr. Vigneshwar, for speaking with us today on this. Thank you, Mr. Agarwal, for also giving us your input so we get that clear industry view. We'll take a very short break, but we're coming right back. Markets completely flat. Nothing much is changing there. Extremely range-bound today. It's all about, I would say, textile companies to some extent where there's some action happening and not much else. But we come back, we talk about insurance, we talk about more GST impact and what it means for various sectors, all of that after the break.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses.
Okay, welcome back. The IPO season continues unabated, and Bluestone is what we're looking at next. Is going to actually list in the next 40 seconds as well. But the pre-listing rate seems to have settled at slightly under the issue price. So watch out for what kind of a day Bluestone actually has when we move ahead. We'll get in Mahima in just a few seconds to tell you a bit about the company. That will be important to understand what exactly they're doing and what we should look at when we look at Bluestone. This picture is also, of course, on your screen. Mahima, tell us about Bluestone.
Right, so Tamana, it was a 1,540 crore IPO, of which fresh issue was 820 crores and 720 crores was offer for sale. The subscription, the issue was fully subscribed for 2.7 times, retail was 1.2 times, QIB was 4.2 times, and the non-institutional was around 0.5 times. Basically, it's into manufacturing of diamond, lightweight gold, platinum jewelry. And in terms of the financials, where the revenues have grown from 770 odd crores in FY23 to a 1,770 crores in FY25, but the losses for the company have in fact widened toward that 220 crore mark in FY25. The IPO basically was to raise 750 crores for working capital and 20 odd crores for general purposes. In terms of where the SWOT stands for this particular counter, their strengths like it's a digital first brand, plus it has omni-channel presence as well, it has stores as well, strong design innovation and diverse product portfolio and technologically driven, largely and vertically integrated as well. In terms of weakness, the losses are widening for the company, plus margins are below the industry average and negative cash flows persist as of now from operations. In terms of opportunity, of course, the Indian jewelry demand has been booming, but and plus there is a lightweight jewelry demand that is rising on the back of rising gold prices as well, but that also translates to a threat because there is both volatility in gold prices as well as the diamond prices, and plus the advent of lab-grown diamonds has an overall impact on lightweight jewelry as well. So this is the overall view of the IPO, the recently listed IPO, that is Bluestone.
Yep. Thanks, Mahima, for that. Thanks for getting us that update. Not the most impressive listing, just kind of flat for now is Bluestone Jewelry. Remember, all of these sectors are also under a cloud for the time being until clarity emerges on tariffs and more. Okay, but one sector which has actually done very well in Q1, and the GST rate reduction actually is a potential tailwind, is cement. And Mr. H.M. Bangur, chairman of Shree Cement Johnson right now, to give us his thoughts on what he thinks of business as it stands right now and the positives from the GST rate reduction. Mr. Bangur, so good talking to you. Good morning, this is Neeraj here. Thank you for speaking to us. How enthused are you by the possibility of a lower GST for additional demand due to possibly lower prices?
Definitely, it is a very encouraging news, and demand, though it is inelastic, but in the long term, a lower cost of infrastructure, housing, all these will definitely increase the demand. So this is a very positive news. Only thing is, we are reacting before the time. The government has only announced that they will rationalize and they have not said two rates, they have not said much, but it is the media which is creating. Let it come. We eagerly are awaiting it, but let it happen. That's all I can say at this point of time.
Most certainly, Mr. Bangur, we should let it happen. But right now, we are trying to tell our viewers that if that were to, through people like you, that if this were to happen, what is the implication, right? So, therefore, do you reckon, sir, that as and when it happens, if it happens, there could be a price reduction seen in cement prices?
Of course, the price reduction will be there, and naturally, the prices after a month or so will settle at the right level. The competition is as intense as it is today. It will remain the same. Prices will be lower. The project cost and everything will go down. Only one thing I will say, that right now, all the goods, because of the expectation of lower duty, I think that for the time being, demand will be little low. The dealers will not keep any stock. They will like to reduce the stock to the minimum workable limit. And suddenly after that, the demand, as soon as the GST happens, demand will be very healthy, and the companies are well prepared to fulfill the demand. So it is a matter of 1 month or 2 months before suddenly the demand spurt takes place.
Mr. Bangur, in terms of passing on, since demand tends to be inelastic in your space, just wanted to get a sense of whether you see some of these GST benefits impacting your margins or actually adding on to your margins completely, or to some extent. Do you see that possibility there?
Not completely. Part of the GST will definitely be passed to consumer, but because of the inertia effect, immediately the full cost reduction, neither the consumer knows how much is being gained. So for the time being of 3 to 6 months, there will be definitely much positive results. The margins will be higher. The demand will be very good. As I was saying, the pent-up demand will be there. Dealers' stock will be almost nil. So we feel very good time in the coming quarter, third quarter.
Okay. And what is the extent of pass on that you see? When we're seeing cement prices maybe lowering, what is the extent? One assessment is 30 to 40 rupees a bag. Do you agree with that? Is that in the right range, you think?
No, 30 to 40 rupees is the total reduction. Immediately 30 to 40 rupees cannot be passed. It will be passed gradually. Some of the margins will go to the consumer, some will go to the dealer, some will come to the manufacturer. So the whole supply chain to consumers, everybody will be benefited.
And how do you see this on your margins? How do you see this on your own balance sheet, Mr. Bangur?
No, this is very difficult. Quantitative analysis cannot be done.
Yeah.
It is the qualitative I have said. Because 10 to 20 rupees difference will always be there between what I am saying today and what will be on the ground. Because nobody knows the market reality at present.
Okay, Mr. Bangur, a word on demand per se. We've seen, as is always the case, different trends of demand between different parts of the country. But broadly, Q1, most management commentary has been constructive on both demand and pricing and the outlook ahead post monsoons. Do you second this, sir?
Yes, suppose after the first quarter, this was the thinking. But because of very good rains in the second quarter, Delhi and North India is now having good rains, even the Bombay side. So looking at this, I will say that demand has a little bit reduced, but it will increase many folds because of the good agriculture. If the rains are good, we always find that the one quarter is bad, then the next 4 quarters are very good because the village income increases.
So do you anticipate, sir, that second half of the current financial year will be a positive one, both on pricing and volumes?
I am convinced, not only expect, but I am convinced that second half will be much better because the Indian economy is doing good and the water is the blood vessel, I will say. Normally, India is water starved. If sufficient water is there, good GDP growth is expected.
Sir, so,
And
sir, sorry, may I ask, because you're sounding so optimistic, so I'm tempted to ask you one last question from my end. Revenues were up 2% for you in Q1 standalone, but the EBITDA numbers look very strong. You think both volumes, revenues and EBITDA numbers could really do well for FY26 for you?
in the second half, right now,
yes.
because of the price increase we have taken compared to the other manufacturers, our price increase was higher, our sales was little lower. Everything takes little time to homogenize with the whole system. 80% of it has been done. Within a month or so, we will be at par in volume with all others. So second half, I will say definitely that our volumes and prices both will be good. EBITDA, we don't know because it is a competitive market. At what price we will compete, that gives the EBITDA.
Thank you so much, sir, for speaking with us today and just giving us a sense. It's definitely positive. It's definitely positive. Demand should also, be impacted. Although demand for this space tends to be on other factors than just price. It's quite inelastic. If that appetite is there, then people will buy. But the view definitely positive. Markets, of course, flat on the other hand. The sectors that are moving, you should watch out for telecom because what Jio has done with its base case, its base package means that effectively the lowest tariff has moved to 299. So that's positive for the entire industry. It gives everyone a reason to move up. You're seeing RIL up though for a variety of reasons. Vodafone also 1% up and Bharti Airtel also seeing some action over there. Textile stocks are the other ones that you should watch out for because custom duty on cotton has come down. So you're seeing those up as well. Insurance is the other factor that we want to speak about because some confusion on what GST means for the insurance players, and Morgan Stanley sees it as a boon while MK stresses that they have to come with input tax credit. Otherwise, it will be a negative. In fact, Harsh is joining in to break that down.
Well, yes. So what analysts seem to be suggesting with regard to insurance is this reduction of rates was much awaited and is a clear positive. 18 to 5% will likely have a couple of variants. One, if there is no input tax credit to the 5% rate given, that's likely to be very, very limitedly positive, if at all positive. So that's the view coming in from MK. The second scenario is where input tax credit prevails as is, in which case the 5% lower, or rather the 13% lower rate and the 5% rate of GST will likely benefit both the customer as well as the life insurance company, because they will get input tax credit on it, and the life insurance company insurance company is likely to pass that on to customers. Now the third variant is where the input tax credit paid is also at a lower rate. Or rather claimed is also at a lower rate, in which case again it is the ideal scenario there because that will likely lower the rate and keep the input tax credit also at a lower rate. Both of those will likely help the customer. So under all these three scenarios, that's how analysts are viewing it. More positive than negative, but of course you have to wait and watch as to how input tax credit is going to be viewed from an insurance sector standpoint. That will be the key to understanding whether this is actually positive or negative. That's the broad understanding both from Morgan Stanley as well as MK.
Okay, so it's a bit of a mixed bag right now. Meanwhile, what is clearly a positive is SEBI's proposals on easing IPO rules for large companies valued above 50,000 crore rupees. For more on that and its implications, Charu Singh is joining in. Clearly, one company which this is positive for becomes RIL. But what are the rules that SEBI is proposing, Charu? Let's start with that first.
Hi, so the Securities and Exchange Board of India has come out with a very interesting proposal that is going to help the bigger companies wanting to list on the stock exchanges massively. Firstly, companies that are going to be having a market capital or capitalization of up to 50,000 crore rupees are going to have to follow the same norms. That is, they have to give public shareholding of about 25% to public shareholders in 3 years. But the companies that have a market cap of about 50,000 crore to 1 lakh crore will have to give about 5,000 crore worth of shares to their public shareholders or 8% of their shareholding, whereas companies that have more than 1 lakh crore as their market cap but less than 5 lakh crore will have to give about 6,250 crores worth of shares to public shareholders, or about 2.75% of their shareholdings. And the companies which have a market cap of over 5 lakh crore rupees will have to give about 15,000 crores worth of shares to public shareholders, or about 1 to 2.5% of their shareholdings. Now, this does not mean that they will not have to give 25% of the minimum public shareholdings eventually. Companies which list with less than 15% of minimum public shareholding will get 5 years to reach the 15% threshold, and will then get again 5 years time to reach the 25% mark. That is, in 10 years they will have to reach this mark. Earlier, this time period used to be much less, and which used to make it difficult for larger companies to divest their shareholding in a very small amount of time, which would act as a deterrent in some ways, because it would be very difficult for the markets to absorb very large IPOs as it happened in Hyundai Motors, and SEBI also gave examples of Hyundai as well as LIC. But now with these timelines, there is going to be a big benefit for them.
Okay.
Yes.
Okay, we'll wait for that to come in. Thank you so much for that, Charu. Now, we did a little experiment on the show today. We saw what our services look like, and especially your platform companies. And it's pouring buckets in Mumbai. If you're not in the city,
it's as dark as 10 p.m. outside right now.
Yeah, it's waterlogged, it's bad. And so we ordered a cup of tea, and it has actually arrived. So now we're going to have this chai that has come in. And should we mention which platform company we took it from? It's
Why
a listed
not?
player.
Shukriya, sir. Thank you very much.
To be fair, it's not like we tried the other one, so we don't want to be, biased towards one. But we did try from one company. The chai has come. It is hot. I think it's a big deal. I think it's a big deal that you can get that kind of service. This is what platform companies are giving you. And we're getting hot chai. We didn't have to move out of our studio. It took a little longer than it usually does. But, grateful to the person who delivered it.
But the joy of having a hot tea on a wet, rainy day is amazing. I wish I could do the suski out here, but we'll avoid that.
It's a good one, and it's fantastic.
It's fantastic.
Yep. So, all right, more news over here. While we enjoy our chai, Puneet, sorry, we didn't get any chai for you, but you can tell us about all of the IPO action this week.
Well, definitely. I think I'll have to catch hold of Sajid sir, get some samosas in the afternoon. I think that's one try. But Vikram Solar is the first one that we're tracking. It's one of the 5 main board IPOs, raising roughly 2,000 crores this week. IPO opens today. And let's get into the details. Apart from that, we're also seeing Patel Retail, Gem Aromatics, Shriji, as well as Mangal Electricals are the other main board IPOs. We also have 3 SME IPOs that will open today as well. But first, let's start with Vikram Solar. Now, specifically, one of the largest players in the renewable energy space with a production capacity of 4.5 gigawatts. While margins are lower compared to the existing players, it's looking to almost increase its capacity by 5 times over the next 2 years. So watch out for this one. The price band specifically is 315 to 320 rupees per share, and it's a 2,000 crore IPO, as I mentioned. The second one is Patel Retail, and we're seeing a lot of IPOs open between today as well as 21st August. This is, of course, the supermarket chain, 43 stores in suburban Maharashtra, and specifically we have seen a total size of 243 crore IPO. Price band between 237 and 255 as well. The third one is Gem Aromatics, Mumbai-based manufacturer of essential oil, aroma chemicals, as well as other specialty ingredients. This again is over a 400 crore IPO. 451 crores is what they're looking to raise, and the price band for this one is somewhere around 309 to 325 rupees per share. The fourth IPO, which we are tracking, is Shriji Shipping Global. Now it operates largely in the west coast of India, specifically let's go across to the next graphic. Focuses on non-major ports as well as coastal trade. It's an IPO which is specifically looking to raise 401 crores with a price band of somewhere between 240 to 252 rupees per share. They've already raised roughly about 123 crore in their anchor book, as well as some interesting names that are propped up as well. And finally, the fifth one, Mangal Electrical. This again is a key IPO, over 400 crores. It's a manufacturer of transformers as well as components for the same. I mentioned 400 crore IPO. It's a price band between 533 to 561 rupees per share. We've also seen 3 other SME IPOs open this week. Names on your screen. Classic Electrodes is also one of them, and specifically seen the listing of Bluestone, Tomorrow is the Regal Resources, that'll be the other one. But that's the key update on IPOs this week. Vikram Solar to largely be the main one to track, at least for the main board IPOs.
Okay, so those are the main board IPOs that you need to track. I want to look at what's happening to Bluestone, the new listing. The listing was a little tepid, to say the least, has not really fired up on opening. Slightly better now for Bluestone from where it listed almost flat, in fact slightly under the issue price, but picking up now about 2.5% up. Not necessarily what you expect from an IPO, but the subscription, to be fair, was not up to that extent. So keep an eye on some of these counters today, and that's the new one on the block. Meanwhile, the one that's really hurting are defense companies. Nifty India Defense Index has plummeted 8% this month. What's leading to this correction? What is the outlook for key defense players? Anushi joins in with a deep dive.
Well, thanks for that, Tabanna. So, just a few months ago, the narrative was about overall defense, the growth story, how the valuations were shaping up. But in the last 1 month or so, we've seen a decline in terms of where the overall index sector performance is concerned. In fact, if you look at the Nifty 50 and the Nifty Defense Index in particular, we are looking at a huge gap, and considering it has seen about an 8% of fall in this last 1 month itself. This is in contrast to what we've seen a year-to-date picture, wherein the index has seen over 19% of gains, double of what Nifty 50 has clocked in so far. In fact, if you're looking at the overall picture in terms of how these major defense players have performed in this 1 month to year-to-date period, we are looking at cuts across the board. This includes HAL, Bharat Electronics, Cochin Shipyard as well. The most prominent one being Zen Technologies, seeing cuts in the year-to-date basis as well as the 1 month period that we are looking at. Well, this is in contrast to the year-to-date picture wherein most of these companies have seen a solid 30 to 40% of returns overall. So this is the scenario that is playing out, and a lot of these has to do with the first quarter results also. If you look at the first quarter results and see if the companies have beat or missed estimates, it's a mixed picture that we are looking at in terms of here with the public owned companies like HAL, Bharat Electronics, Bharat Dynamics and Cochin Shipyard seeing a beat in terms of where the Q1 results were, but over here Masgao, Data Patterns and Zen Technologies disappointed in terms of where the first quarter numbers were. Particularly for Zen Technologies, it's not the first quarter wherein we've seen a weak set of numbers, but this has reflected now in the last 2-3 quarters, mainly due to the lack of ordering that we're looking at. But it's the outlook going forward which is important to keep track of, because if we are just watching the commentaries in terms of how these companies are doing and the order book also, the order book continues to remain healthy. Now HAL has about 6 times of a book-to-bill ratio with over 1.89 lakh crore of order book. Similar picture is what we are looking at over here. So the growth picture remains constructive in terms of how the future upcoming quarters are going to be, third quarter and fourth quarter being the most prominent ones. Valuations also, if we are looking at, or more or less we are looking at easing off these multiples going forward. So that is something that we are seeing in terms of how the analysts are recommending this one. HAL and BL, the stocks with the most buys that we are looking at, with a potential return of 24 to 11%, while for Data Patterns also 83% is the overall buy rating that we are seeing with a potential of 26%. Zen Technologies is the least one with a 40% of a buy rating but a 36% of a potential. So this is the overall picture that we are seeing for these defense players playing out.
Okay, so what is the concern? Let me take it across to Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities, on this, and see if this is, Jyoti, how are you looking at it? Is this just a retracement from the kind of push we saw during Operation Sindoor, etc., or are there any bigger concerns?
Hi, thank you. Good morning, and thank you so much for having me here. So I don't see any concerns when it comes to defense. Well, the sector is quiet because they are busy executing. If you see, the entire ecosystem is riding on a strong policy tailwinds and a record order pipeline in FY26, and that's quite reflective in your quarter one. While it has shown a mixed earnings by large PSUs, but order books remains quite robust. Approvals have been, continuously being there and underpinning medium-term demand medium-term demand. In fact, valuations are a bit elevated versus historical averages, and the execution and export growth has been priced in. So, if you ask me, you will actually start looking at numbers. In fact, the sector should surprise you on the positive side from the third and fourth quarter onwards.
So that's interesting, Jyoti. Which companies do you think are best placed for this positive surprise? And I like the way you put it, that they're quietly doing their work right now. It's the numbers that will show. Because when you look at Q1, there were more misses than hits.
Well, Q1, if you see for the entire industry, first half is always lumpy. There are a lot of certifications, approvals and testings and trials which keep happening. If the climate is not right, or if you don't have the right, if the environment is not conducive, many a times the trials fail. So that is something we take as a part of the industry. But third and fourth quarter is where you actually start seeing deliveries. So if you ask me surprises, HAL could surprise me on a positive side. Data patterns will surprise you. In fact, data patterns will actually achieve the numbers that they've been saying. Bell will surprise you on the positive side because they have such huge order book, and there are already timelines fixed, so they will start delivering their numbers. Bharat Dynamics will do it. So in fact, most of your large PSU names will surprise you on the positive side in the third and fourth quarter.
Jyoti, you guys turned constructive on defense at just the right time, right? So kudos to your team for turning bullish when the street wasn't necessarily so. Now my question is, do you reckon that is this, even there might be some short-term gyrations, but with a 1-year view or a 2-year view, there is significant money to be made in a set of companies. What is your pecking order at Nirmal Bang?
Like we keep releasing reports, we keep initiating coverage on the companies, and you see whatever numbers we have given, they have actually delivered. In fact, it's I'm bullish on the entire industry. What people don't understand is, see, it's an entire ecosystem where every company is dependent. It's co-dependence which is working. So let's say, for example, you have LCA Mark 1. It is not one company which is getting benefited. It's just not HAL. You will have HAL, L&T, Tata, Advanced Material System. There'll be so many other private companies. It is WEM Technologies. It's an entire ecosystem. So, for one platform, if you have 750 vendors, and if LCA Mark 1 comes through, obviously the entire ecosystem gets benefited. So, if you ask me specific names, while it's already there on our this thing, I am positive on the entire defense sector. Some will give you very good returns, while because if you just look at the last 5 years track record, they have not delivered. So the companies that have not delivered in the last 5 years are actually due to delivering their promise in the next 2 years, and you will see that coming through. And those are the companies you should very keenly or keep a hawkish eye and track them, and you will see that you will make a lot of money in the next 2 years in those stocks.
Well, those are lines that everybody loves to hear. A lot of money in those stocks. Thanks a lot for that. Thanks for joining in today and giving us your thoughts. Really appreciate your time. But viewers, on that note, with the markets kind of quiet, if you will, but in the green, we call it a day on this leg of India Market Open. But don't go anywhere, because Ask Profit comes up next. Put in all your questions and our guests will try their best to answer them.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में, चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, These leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak.
Hi, thanks so much for joining in. This is Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachajani. Good morning, Mahima.
Good morning, Alex.
You made it to work okay. All of us did, in fact, but it is a rainy day in Mumbai. And by the way, you're seeing the latest updates on the bottom of the screen. If you haven't left yet, and if you're tuning in from home and you are in Mumbai, if you can help it, stay at home. And the reason why that is that the Mithi River has reached the red point or the alert point, danger mark at certain locations. There is a warning, of course, of a red alert in Mumbai. And in fact, the National Defence Rescue Force has also been deployed at the Mithi River as we speak. For a lot of people working in Mumbai, this is of course the maximum city, the city that doesn't sleep. People don't have a choice. They do head out to work, but if you do have that choice, then you should stay at home. Of course, schools have already been closed. That announcement came through yesterday itself, the BMC being proactive and announcing that schools and colleges would be shut. It is not the best of situations out there. But the markets, let's look at what's happening. Yesterday, of course, you had a day of gains across the board for the benchmarks as well as for the broader markets. And today, it's a day of a bit of a breather, if you can call it that. We're still seeing gains of about 0.2%, but the gains are led by individual stocks. I'll come to that in just a bit. But the broader markets, before we do that, are doing better once again than the benchmark index. A third of a percent or so for the mid-cap index and 0.5% for the small-cap index. But take a look at the constituents of the Nifty 50 and the contributors, really. Reliance Industries, on account of multiple triggers, gaining ground in trade today and contributing roughly half of those gains. If it wasn't for Reliance Industries, then you would likely have a down day or marginal cuts for the benchmark Nifty 50. Let's pull up the heat map for the Nifty 50 also, just to give you a sense of what the patchwork is in. You have more declines than gainers for the benchmark Nifty 50. You have Reliance Industries, Tata Motors that are up and about, but that 2.3% gain for Reliance Industries is really what is moving the needle. In a sector that Mahima tracks, the stocks are buzzing, and this is in the textile space. Mahima, this seems to be another measure that the government is announcing to counteract the implications of tariffs.
Absolutely, and it's not just tariff. I think it's proper time to actually appreciate that the government is doing so much in order to boost consumption and probably protect the domestic play as a whole. And this, that Alex is recently talking about, is about textiles. The government has recently announced a basic custom duty that was being imposed on raw cotton imports has been paused or removed till 30th of September. For the next 42 days, there will be no custom duty imposed on import of these raw cotton imports, and the agriculture infrastructure development cess will also be removed till 30th of September. So that accounts around 11%, so that textile companies will get this boost of 11%, and because of that, overall, it will boost the consumption space, because a lot of these textile companies use raw cotton as their raw material, and this stands to benefit a lot of counters like Welspun Living, Trident Limited, KPR Mill, Pearl Global, Gokul Das, as well as Arvind Limited, and we are seeing strong moves coming in on all of these counters. So that's with regards to where the up move in textile companies is coming in from. So that's with regards to textile companies, but we are joined by Aditya Agrawala, who's the head of research and investments at Invest4Edu, joining us now, and Avinash Gorakshakar, Director Research at Profit Mart Securities, joining us now. Welcome to both of you gentlemen, and a very good morning to you. I hope you guys are sound and safe at your own houses. I'll take the first question from Satpati, who's writing us from Bengaluru, and he's holding NMDC Steel 9,000 odd shares at an average price of 47. He wants to hold from a longer term perspective, that is 2 to 3 odd years, and wants to know as to what should be the course of action for him. He's sitting on a loss of around 60,000 rupees right now. Avinash, hi, good morning to you. What is your with regards to where NMDC Steel stands?
Yeah, good morning, Mahima. My sense is, I think, if the investor can held on for the next 12 to 18 months, we've seen a good uptick in metal prices. Most of the metal companies have shown decent numbers. I would say that NMDC Steel has also started turning around. And I think if you look at the operational metrics for the Q1, my sense is that over the next, say, 3 to 4 quarters, if obviously these metrics improve further, then I think one could definitely expect a decent upside. See, this company was formed out of the demerger from NMDC. So clearly, I think the markets would be awaiting some more clarity in terms of the revenue growth, in terms of the margins. But I think definitely going forward, the second half looks better. So I would say that continue to hold. I don't think any further downtake is possible, because most of the negatives are in the price. And the Q1 numbers have been slowly showing a moderate improvement. The better thing would be to wait for the second half to pan out. Until that time, I think we suggest to hold.
View on NMDC Steel. It's been a pretty interesting ride for the company since it posted its numbers. Let's pull up the month-to-date chart or the 1 month chart if we can for NMDC Steel. It returned to the black. Okay, so there has been a spike, but I wonder, can we pull up the 3 month chart if at all? Because it seems to have then retraced some ground. All right, so it has retraced some ground. It saw a spike after its results though. Let's talk about Star Cement next. And we've got, Aditya, a question coming in from Daljit Singh, who wants to know the short-term targets for this counter. It's up about 0.7% at sub 300 levels. Would you suggest getting in at these levels?
Morning, Alex. Yes, one can actually get into the stock at these levels. It's more of a consolidation that we're witnessing in the stock at the moment after a decent up move. On the downside, 280 is a good support, so that should be a stop losses. And on the upside, stock in the shorter to medium term can test levels of 330 to about 340 on the upside. So keep a target of 330, 340 on the upside and a stop loss of 280 on the downside, and can enter at current levels, absolutely.
Okay, pay attention to what's happening at the bottom of the screen. That is where you get all the live updates, of course, and this is something that we've been speaking about since morning. The latest update, of course, is that China's finance minister has assured India that China is addressing its key concerns, and these relate to the need for fertilizer as well as rare earths. And rare earth really has been a point of a contention or point that needed addressing for the automotive sector in general, and quite a few of those vehicles requiring rare earths as a raw material. And seemingly this is a bid to move further in those trade talks. Of course, the Chinese finance minister has been having conversations with the Indian delegates and his counterpart in India. And those trade negotiations, of course, should be seen in the context of everything that's happening globally on trade. You've seen geopolitical updates over the course of the weekend that relate to the Ukraine and Russia situation. But amidst that, you have had conversations between the Chinese delegation, which is in India, as well as the Indian delegation that has been meeting them yesterday and seemingly today as well. And this is source-based information that was picked up by our colleague in NDTV just earlier today. And it seems to be something that is officially being announced right now. There's tunnel boring machines also that are being spoken about. Infrastructure play, particularly in those hilly regions, those mountainous regions, require this these machines, and this is something that is being spoken about in the context of that trade negotiation. But let's talk about the next question, and this has to do with IRB infrastructure. It's a question coming in from Shahul, who has bought 806 shares. He's incurring a loss of about 20% at this point. He wants to hold for the next 2 years. Avinash, the question is, should he do so, or should he book out those losses?
Yeah, I think my guess is, looking at the long-term opportunity of the toll business in India, I think, a lot remains to be done in terms of highways, super highways. So I think clearly IRB has been a market leader here. If the investor only has a long-term horizon, Alex, I think he should hold, because, this is a stock which has been a very slow mover. Despite the fact that company has shown a decent kind of visibility or revenue growth, numbers have been better. The stock has not been appreciating and performing that well. But I think if you keep a long-term view of at least 12 to 18 months, I think one could definitely expect a decent risk reward. So I would suggest him a hold. I think better numbers could come in for FY26, probably from the second half of this financial year.
All right. Okay, so that's with regards to where IRB Infra stands. We've got our next question on a very recent listing, that's Belrise Industry. Harjeet from Mohali is writing in. He's got 1,200 odd shares of this company at 135 a piece and wants to hold it from a longer term perspective. Is currently sitting on profits of around 24,000 odd rupees and wants to know if it's worth accumulating because the company's earnings were encouraging. Avinash, I'll come to you on this one. Any view on Belrise?
See, I think Belrise is a very prominent auto ancillary player to the two-wheeler sector, and I think two-wheeler sector has been doing pretty well. Now with the recent expectation that GST could be reduced to 18%, that is definitely going to be another driver for two-wheeler sales, and that definitely could have a positive rub-off for a company like Belrise. So I think he should continue to hold. If he at all wants to buy, I think look at levels of around 150 odd rupees, where I think he can accumulate slowly. But I think the fair value could anyway be between 190 to 200 over the next, say, 8 to 12 months.
Okay. Blue Jet Healthcare is the name of the counter that we're talking about next, and Manoj from Mumbai is asking about this. 875 is his buy price. He hasn't really specified what his time frame is. Do you have coverage on this, Avinash? And if so, what is the recommendation that you would give? He's incurring a loss right now.
No, I think, Alex, this is a very prominent player in the CDMO space, and I think the company has a very marquee list of clients. I believe the investor needs to give in some more time. If he's got a time frame of at least 12 to 18 months, he should stay invested. This is fundamentally a strong company operating in a very high growth area. And more importantly, FY26 could see definitely some project revenues which were not booked earlier. So my sense is he should continue to hold, but keep a long-term time frame. Maybe in the next 1 or 2 quarters, once more news flow comes on these orders and revenue starts flowing on the profit and loss and the cash flows, I think the stock should get regulated. So continue to hold, but keep a time frame of at least 12 to 18 months.
Continue to hold, but from a longer term perspective is the view that Avinash has on Blue Jet. Okay, we've got a first caller for the day. Shiva is calling us from Chennai. Shiva, hi, a very good morning to you. How can we help you today?
Hi, you've been doing a great job. Thanks for all of that.
Thank you so much, Shiva.
Just wondering which sectors are relatively fairly valued to enter as of now. Thank you.
Okay, that's an interesting question, Shiva, I must say. Avinash, what he's asking is that what sector are you currently looking at in terms of valuations, in terms of where valuations are attractive enough? And of course, if you can give us some stock names with regards to that sector as well.
Yeah, I think my guess is, I think travel and hospitality and some hospital stocks are some which we are recommending to our clients. Within the travel space, we continue to like, frontline companies like Indian Hotels. The stock has been consolidating for a long time, but I believe that this is going to be another strong year for the company. Last year, they reported a top line of almost 8,000 crores, bottom line of 2,000 crores. So this year also should be pretty good. Another travel hospitality connected company is BLS International. Very strong numbers. They are the number one player in India for the visa business and a very concentrated kind of market where there are just two players. I would say that, the stock has done remarkably well. Even in the first quarter, numbers have been very strong. So here also, I think at fair value around 540, 550 looks very much possible. But time frame has to be around 12 to 18 months.
To 18 months is what you should look at. And the hospitality space has been buzzing off late. Quite a few stocks to choose from as well, Shiva, and I wish you luck. We've got Aniket, who's writing in from Karnataka, and he's asking between a couple of stocks, and this is once again a long-term question. Aditya, sorry to keep you waiting. Transformers and rectifiers is one counter, JSW Energy is the other for the long term, which is 4 years. It seems like they want to play the energy space either through the equipment makers or through the producers. What would you say about these two counters though, Avinash?
No, I think JSW Energy seems to be much better. See, Transformers and Rectifiers is also a good company, but I think we have been seeing a little bit, underperformance on the counter for some time. And I think clearly JSW Energy has got a very strong kind of business trajectory, a very strong order book. So I think on the producing side, if the investor has got the next 18 to 24 months, then only I think the stock can give a kind of a decent risk reward. Because, in the very near term, the stock appears to be fairly valued. So my sense is that if you at all want to bet on energy within these two stocks, I think JSW Energy would be a better bet.
Okay, all right. JSW Energy is a better bet between Trill and JSW Energy is the view that Avinash has. Okay, we've got our next question from Deepthi, who's writing us from Vijayawada, and she's asking about Paradeep Phosphates. And from a shorter term perspective, she wants to know if she can hold or sell at the current moment. Aditya, I'll come to you on this one. What are the charts indicating for the counter?
So, Mahima, after a good up move, stock went enter into a narrow consolidation, a bit of a profit taking as well. But what is interesting is we did not witness any volume in the correction. So it all tells me that it was a temporary pullback after a good up move. One should continue to hold on to the stock with a stop loss somewhere on 190 on the downside and look for a target of at least 245 to about 260 on the upside. Give it some time, at least a quarter or so, and you will see decent upside from here on. And if you are sitting on good gains, I would recommend to start trading your stop losses as well.
A quick view is being sought on Enviro Infra. Aditya, this one's for you. Slightly longer term perspective is being sought. This is Manoharan, who's writing in from Chennai. He's got an 18-month time horizon. He's bought at levels of 283. What's the view?
One should continue to hold. My sense is you have to give it some time in the stock for it to see higher levels. But overall, I think this is a good bet to hold on to your portfolio. On the upside, you can clearly see levels of around 160 to about 170 in the medium term. And if you hold on to it for some more time, this is Enviro Infra I'm talking about, right?
Got it. Yeah.
Correct. So we could be looking at a target of around 290 to about 310 on the upside, and then on the downside, 240 is a good support area. So my sense is one should continue to hold here.
The latest listing today, and the new kid on the block, so to speak, Bluestone, is what everyone's talking about. They rang the bell. not too long back at the National Stock Exchange, and they're trading with gains of about 2.7% in a dreary day for the equity markets. I wonder if gains will be built in over the course of the day. But Agni, our reporter on the ground, is in conversation with the Chairman and Managing Director, the Chief Executive Officer, Gaurav Singh Kushwaha. Agni, over to you.
Right, Alex, thanks for that. We are joined by Bluestone CMD Gaurav Kushwaha on the occasion of the company's listing. Mr. Kushwaha, thank you so much for joining us. It's a great occasion for Bluestone today, and I would like to begin by asking you what your experience with the listing has been. We saw it was off to somewhat of a tepid start, and now the stock has risen up and is outperforming the market. So in terms of a listing, are you excited about the growth story of the company going forward?
Yeah, so I think what excites us most is that we are now a publicly listed company. I think that gives a lot of visibility to people on how we work, what we work, and I think it gives a lot of attention to a lot of investors to actually start tracking the company very, very carefully, and that is, I think, one of the core objective, along with the other benefits of going public. I think, see, one day share price here, there, and basis that saying that we outperform the market, etc. I'm saying it's an overstatement. Honestly, I've not even looked at the ticket since the morning. I think what's important is it's a joyous moment for all of us, for the company, for the family, for everyone. And I think we are right now, we're just living in that moment. See, someday price will go up by 2%, someday price will go down by 2%, and so on and so forth. I don't think that matters in the long run. I think our core focus in the company is 3 years, 4 years, 5 years down the line. What is it that we intend to do? And every day are we focused on that or not? And share price, I think, is something that market will decide and market will take care of.
Right, so I would then like to ask you about what is actually in your control as the management of the company.
Inputs are in our control, right? So the number of stores that we open, the kind of marketing that we do, the kind of designs that we create, the kind of experience that we provide, I think these are all inputs. Output of all these things is the revenue we generate, the profit we generate, and so on. And further output of that is the share value. So I'm saying output is in no one's control anyways, right? So input is in our control, and that is what we are steadfast.
Let's talk about profitability then, because that is in your control. The company on an after-tax level reported a bottom line of around 200 crore in losses, and I know there are accounting standards which make sure that certain provisions are made in the first few years. So on a profit before tax level, what has the bottom line looked like, and what kind of a CAGR are you expecting going forward?
Yeah, so I think a couple of things on that profitability thing. A lot has been talked about it. I think more savvy investors understand that reported PAT is one thing, but then because of India's accounting standard, there are certain things which actually start showing with the P&L and might not actually be the real thing in the business. For example, if you look at the entire ESOP cost, the way the accounting is done, that even if ESOPs are vesting in 6 years, you actually have to front load a lot of those in your P&L. Then there's another thing called 116 accounting of rentals. So in our case, when we have 275, 300 stores, almost bulk of it, 2/3 of those being opened in last 3 years, the way India's accounts for rental is, there's something called lease accounting. So wherein you have to actually create an asset for it, and then you have to depreciate that asset. So what that ends up doing is, even if your rental is this much, you have to actually account for this much in your P&L. So I think a lot of those are kind of non-cash accounting losses, which obviously when we look at the numbers, we clean them out and we look at the real number, and basis that we take a call of how many stores to open, are we profitable, are we not profitable. Because honestly, all these accounting things will eventually catch up. So it's not something that we should worry
about. On a before
about.
tax level, what is the profitability looking like?
All these adjustments we'll be demarcating all these adjustments very, very clearly when we come out with our quarterly results. But for last year, I think ESOP, so again, non-cash charge. It was a non-cash charge of ESOP would be somewhere between 40 to 60 crore. Similarly, this accounting delta on lease accounting might be somewhere between 20 to 40 crore, right? So and these are significantly big now because we are so young. So many stores are new. Hence, this delta is more. Had most of the stores been, let's say, 3, 4, 5 years old, this would have actually settled down. It might have actually reversed also. Right, so that is one thing, and I think the second thing is when we are growing at 40% year over year, then the difference between quarter 1 and quarter 4 is also significant. Right now, in the annual number, in the RHP, DRHP, etc., the numbers that we see are the annual number, full blended numbers. But on a run rate basis, the story is very different, and we'll definitely cover that in our quarterly results.
Okay, all right. So that's the management of Bluestone. It's an exciting space, and festive season is right around the corner. I wonder what their sales will be, and I guess we will find out the next time we speak to them. Incidentally, we do have a question on Bluestone. Shivam from Kolkata got allotted 2 lots during the IPO phase, and he's asking whether he should add or exit at this point. And obviously, I'm going to go to the fundamental expert on this one. Avinash, do you have a view on this one? Did you have a buy call on it?
Alex, I think, the investor has asked questions like whether he should exit or whether he should add. I think, the stock is just up by about 2%. So I think, you need to give some time for the company. Bluestone is a young company, has been a very, strong player in the, diamond and jewelry space. And I think clearly, this issue actually will now, introduce them to the capital market. So performance has got to be now better for the coming 1 or 2 quarters. So I think, given some time of at least 6 to 12 months before you could see some deliverables being put out and the numbers being coming out, as the management pointed out, that there are a lot of non-cash items which the company has accounted on the profit and loss account, and that's why the company has incurred a loss. So I think markets would first await for the fact that the company comes back in the black as soon as possible, and that would re-rate the stock initially. My sense is, the second half is now going to be very important, because that's the time when a lot of festivals start, and obviously their sales would also get a big kind of a ramp up. So I think please hold on for the next 6 to 12 months, and then one can evaluate this company very well, because it's a new player on the block. Post the listing, I think what kind of performance comes is a very important barometer for the markets.
Got it. All right. Avinash, Aditya, do stay with us. We have to slip into a very quick break. We've got a lot of questions lined up. Viewers will be back on the other side to take them, so do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversations.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen in a bit. There you go. There they are. You can either WhatsApp us or call us. We've got our next question from Renuka, who's asking about embassy developments. She's bought at the levels of 119, holding 250 odd shares, and wants to know if she can continue to hold or not. I'll take this up with Aditya. You, embassy developments, what are the charts indicating? Because she's sitting on losses of around 4,800 rupees.
Nothing much is happening here, to be honest. My sense is one should actually look at opportunities to exit the stock. There are better plays in this space. Look for them, larger names and better names. Those will be better bets, like a DLF or maybe a Godrej Properties or an Ajmera Oberoi. These are better bets. I would recommend exit, book out whatever losses you are incurring, and park the money in a better name within this real estate space.
Aditya, quick follow-up then. Out of the entire pack that you just mentioned and the names that you spoke about, which according to you is the best entry price at this point, and what are the specific levels in stop loss that you would give on that trade?
So Ajmera and DLF, these are the two top bets, Alex, for me. Let's talk about DLF first. I would be a buyer at current levels with a stop loss at 740 on the downside. We'll look for a target of at least 860 to about 920 on the upside. So 860, 920, these are two targets for me on DLF with a stop loss at 740, 720 on the downside. Ajmera Realty 2 is a buy at current levels for a target of 1,000 and then 1,100 on the upside with a stop loss at 850 on the downside.
Okay, quick question on Reliance Power then, we've got a viewer, Mr. Thansir, who's writing in. He's bought at levels of 65, which is elevated levels. This has seen quite a bit of chop and churn because of everything that's happening with the promoter. And so therefore, the question to you, Aditya, would you hold at this point now at 44.5, or would you exit with losses?
I would again exit. Same is the case here also. There are better plays within the power space. Look for a Tata Power. That is a better bet for me. Or maybe look for an Adani Power. These are the two alternatives that I would recommend and exit at current levels. If you're going long on Tata Powers, look for a target of 460 to about 500 on the upside with a stop loss at 370 on the downside. And if you want an Adani Power, then the targets on the upside will be around 750 with a stop loss on the downside at 550.
Standard disclaimer, Adani Power is also a part of the Adani group of company, and so is NDTV Profit. All right, we've got our next question from Rajesh, who's writing us from Bengaluru, and wants to know about Biocon and the target for the next 2 odd months. He's holding about 3,000 odd shares at an average price of 383, so incurring a loss of around 53,000 odd rupees. Aditya, your view on the charts?
Mahima, I think stock is poised to test levels of 380 to about 390 on the upside, so one can continue to hold. There's a pullback that we're witnessing in the stock. Place a stop loss somewhere around 355 on the downside.
Got it. GMR Airports is the name of the counter we're talking about next, and this is a question all the way from Frankfurt, and Kumar is writing in. He's asking what a good entry point would be, and would you invest for the next 2 to 3 years? The question is for you, Avinash, and I read a notification that they sent out yesterday that they're looking to raise funds, or at least the board will meet on the 21st to consider a fundraise of 5,000 crore rupees, either through a QIP or through bonds. And we recently saw the traffic data as well. It doesn't look all bad. It's decent, actually. So would you say, though, having said that, it's a company that has not yet made profits. It's been quite a while. So would you invest for a period of 2 to 3 years?
I think, Alex, the right time would be, once the dilution happens, because, already the equity capital is very large. And secondly, whenever the management talks about a large, dilution or a large capex funded by equity, it would be wise to wait for this, dilution to get over. After that, I think, the investor would get a good chance to accumulate the stock, because typically, companies which are loss making and which have already got a very high capital structure normally see a little bit of profits selling after this dilution effect takes place. So yes, longer term prospects are very promising. The next 2 to 3 years appear to be very rock solid, but the company is in a very high capital intensive business and is yet not profitable. So I would say that please don't hurry. I think you'll get good opportunities to accumulate the stock at a later point of time.
All right, so that's with regards to where GMR Airport stands. We've got our next caller. Somin is calling us from Kolkata. Somin, hi, a very good morning to you. How can we help you today?
Ma'am, I bought Aditya Birla Capital, 53 shares at the price of 270. Now I am sitting into the profit of 950 approx.
Right.
So what should I do?
Okay.
My view is 6 months. It's okay.
6 months. Okay, Somin, I got your question. Aditya, I'll take this up with you. Aditya Birla Capital, what are the charts indicating for the next 6 odd months?
Oh, Mahima, continue to hold without a doubt. Look for a target of 310 on the upside. That's the first target. If that is taken out, 330 is the next target. And I would recommend him to up his stop loss, trail it to his cost price. That will be the best advice.
Target, sorry, in case I missed it, can you repeat?
The targets 310, 330, these are two targets, Alex. And stop loss, I would recommend 280. He can increase his up his target stop loss to 280.
Yeah, I mean, I didn't want to. I used the dialogue by mistake. Can you repeat? But it's from one of my favorite movies, Rocky or Rani Ki Prem Kahani.
Oh God.
Okay, but incidentally, in all seriousness, see, she said, "Oh God, what a horrible jokes Alex is cracking this morning." But having said that, Somit, who is our colleague in the research team and who anchors a show at 1:30 on small caps, also does a segment on India Market Open and India Market Close. This is called Heard on the Street. You should watch out for that at 8:45 in the morning and 2:30 in the afternoon, where he talks about the buzz in the dealing rooms. And on his list today, incidentally, was AB Capital, where apparently there are institutional buy flows that he picked up on or he heard about for this company. And in fact, there are positive triggers for this as well. So watch out for that in trade. And you should tune in, of course, to the 8:45 morning Heard on the Street, or in the afternoon as well at 2:30. The next question is on Hitachi Energy. And we've got Mahi who's writing in, and he's bought at levels of 20,070 rupees per share. He's got 90 shares. He's asking whether he can hold or exit. Aditya, what's the view?
Can continue to hold. This is an expensive space, Alex. So it will go through some kind of a time and price correction. On the downside, my sense is 18,300, 18,400 is something that can be tested. But if he holds on to it for at least a year or so, or maybe 2 years, he will see levels of 24,000 on the upside. As a disclosure, these stocks have been recommended to our clients, could be in their portfolio.
Okay, all right. So that's with regards to a Hitachi Energy stance. We've got our next question from Raghu Kiran, who's writing us from Vijayawada. Not sure if this is Brigade Enterprises or Brigade, let me check. It should be Brigade Enterprises, yes. So he's bought Brigade Enterprises at the levels of 1150 and wants to know from a 2-year perspective whether he can hold, average or sell. Avinash, I'll come to you on this one. What's the view like?
Yeah, I think from a longer term perspective, I think Brigade has got a very decent kind of asset portfolio. And I think, if the investor can wait for the next 12 to 18 months, definitely I think traction could be seen in the second half of this financial year. A lot of new projects have been announced. So I think, clearly looking at the current trajectory, I think if the investor can give in some more time, because currently the stock has underperformed, but if investor can hold on for the next 1 to 1.5 years, I think he could expect a decent risk reward. So I think I would suggest him to hold on and patiently wait, till the numbers don't show up. But definitely it's a good structural bet on the real estate market.
Okay, all right. So that's with regards to where Brigade Enterprises stands, and hold is the view. We've got our next caller. Shankar is calling us from Chennai. Shankar, hi, a very good morning to you. How can we help you today?
Fine. How are you?
I'm very good. Shankar, how are you?
It's correct time to buy BEL and BHEL for absolutely long term.
Okay, absolutely long term. Can you define that for me? 10 years?
Hello?
Yeah, I can hear you, Shankar. When you say absolute long term, do you mean 10 years?
No, 3 to 5 years.
3 to 5 years, okay.
I think it's long term for our market. 3 to 5 years,
All right.
Or the current bull time.
All right. Okay, Shankar, I got your question. I'll take this up with Avinash. Avinash, do you think BEL or BHEL, which one should he choose for the next 3 to 5 odd years? Or maybe invest in both and divide the money that he has?
No, I think Bharat Electronics could be a better bet, Mahima. And I think here also I would like to tell the investor that use a SIP strategy, because the markets are going to be volatile. So rather than buying everything at the current odd levels of 370, 380, he can start an SIP and gradually accumulate the stock. Because, in most of these defense companies, the order book visibility is very strong for the next, say, 2 to 3 years. But defense orders are going to come in over the next 3 to 5 years. So I think the trajectory for the defense companies is very clear. It's upwards, because the government wants to promote the Make in India initiative. So I think make a SIP strategy in place, and then I think, he would definitely gain if he's got a time frame of at least next 3 to 5 years.
Got it. All right. Mani has got the next question. He's writing in from Andhra Pradesh. Mani, very good morning to you. And Finolex Cables is the name of the counter that he wants to talk about. Can you see a positive uptrend in this particular stock? He's bought at levels of 954. He's incurring a loss, therefore, because the stock price is currently trading at 831. Aditya, what's the view on the charts?
It's not that good looking, Alex, honestly, but still I would recommend keep a stop loss around 780, 790. That is an immediate support level. If he can book out losses, there are better plays within the space like a Polycab and KEI. These are names that you should look at. If you're looking at KEI, maybe look for a target of 4,500 on the upside. And if you're looking at a Polycab, look for a target of at least 7,500 on the upside, and both can be bought at current levels.
All right, okay, so that's with regards to where KEI Industries and, of course, the entire cable space stands. We've got our next question from Chandrasekhar, who's calling us from Hyderabad. Chandrasekhar, hi, a very good morning to you. How can we help you today?
Yeah, I'm holding NDTV shares around 4,000 shares at a price of 245.
Okay.
I'm sitting at a loss of 98,000.
Mm-hmm.
Can I have a view from Aditya sir this for next 6 months? I can hold for next 6 months to 9 months.
Okay, I got your question, Chandrasekhar. Aditya, your view on the charts for NCC? Do you think he'll be able to recover his losses and maybe make some profits in the next 6 months or 9 months?
Possibilities there, Baima, because it's a good consolidation that we're witnessing in the stock. So maybe hold on to it with a stop loss around 210 on the downside. Immediate hurdle is around 240. Once that is taken out, my sense is stock can test level 260 as well. So 240, 260, these are two targets. I would suggest continue to hold on to NCC at current levels.
Chandrasekhar, are you still on the line?
Yes, sir.
I'm just wondering, you've gotten 4,000 shares. I'm wondering why you've taken such a large position. Is this a very large portion of your portfolio?
It is around 10% of my portfolio.
10%. Okay, 10%. And so what was the thinking? You've clearly thought about it from a shorter term time frame. Why 4,000 shares? It's a pretty large quantity.
Yeah, Yes, this is an infrastructure company which is a pretty old company and doing very good in the infrastructure space and is having a very good order book as well. And is consistently posting a decent returns in the P&L.
So it seems like you've studied the fundamentals. I'm just wondering, why do you want to hold only for 6 months?
No, I've been holding for the past 9 months this year, and I bought actually at some shares at 285 and averaged it at 220 levels. So it has come to an average price of 245.
So you know what? Let me also get you a view on the fundamentals, because it seems like you bought it based on the fundamentals. So on the fundamentals, Avinash, would you hold on to this one, and what are the prospects on the upside?
No, I think, clearly, fundamentally, the company is on a very strong wicket. Most of the construction and EPC companies are getting large orders from the government. And I think, this process is going to continue. First half of the financial year was not a good time for most of these EPC construction companies. But I think the kind of order book the company enjoys, there's a decent revenue visibility for the next 1 to 1.5 years. And I think NCC is a very old player in the construction market, and scalability of the business is quite evident. So I would say that if he can hold on for the next 12 to 18 months, he could not only recover his cost, but I think he could decently make a good risk reward. So I'm also structurally positive here, but I think you need to give in a slightly medium to long term time frame here.
Okay, all right. So that's with regards to where NCC stands. We've got our next question from Harsh, who is writing us from Dadar in Mumbai. Harsh, I hope you're staying indoors and you and your family is safe. His question is on BSE. He's holding 15 odd shares, bought at 2560 a piece. So seems to be a recent buy. And wants to know if he can hold or sell at the current moment, not given the time period. I think I'll come to you on this one. BSE, how is it looking on charts?
Continue to hold Mahima without a doubt, and I would suggest give it a longer term time duration, because this space, capital market space, will do well in the medium to longer term. So coming to targets, 2800 to 3200, these are the two targets that I'm playing with BSE on a shorter term time frame. If you have a slightly longer term time horizon and you can continue to hold on to the stock, place a stop loss somewhere around 2200 and look for a target of 4500 on the upside.
Okay, so that's a view on BSE. Sejal is calling us from Mumbai. Hi Sejal, have you stayed at home today, or have you braved the rains?
I haven't braved the rain. I'm very much at home looking at your channel.
So you can have a cup of chai and you can think of us. We're sitting in office.
Absolutely.
So how can we help you today?
So I'm holding about 3,500 shares of Ambuja Cement at an average price of 580 rupees.
Okay.
Should I keep holding them, and what is the upside that one sees in them?
What is the time frame that... Okay, yeah, please go ahead.
For the next 1 year or 2 years?
1 year to 2 years, okay. So you're seeking a fundamental view essentially, right?
Yes.
Okay. So Avinash, I'll come to you on this one. Cement as a space overall has had a pretty decent run. The numbers looked particularly good, and there were some fears of an early monsoon playing spoilsport, but that was not really visible in the numbers that came through. Pricing seems to be positive, even if in certain pockets volumes are not really taking off. Would you say that now is the time to reinforce your bets on cement? And what is the kind of upside that you see over the next 1 year, specifically for Ambuja?
No, I think, Ambuja Cements is definitely a promising player in the cement pack. And our sense is that large players like Ambuja Cements would get the benefit of pricing as well as volume growth. More importantly, as you rightly mentioned, Alex, in this quarter, which typically is the monsoon quarter, construction activities take a backseat. But despite that, we have seen good numbers posted by most of the cement companies. And typically the second half is supposed to be a much more stronger kind of period for the cement industry as a whole. So I would say that, if the investor can hold on for the next 12 to 15 months, a price of 630, 640 can definitely be possible. I would suggest that, the investor should keep invested here. I mean, despite the fact that there's some small gains which the investor has made, a bigger gain can happen post the second half performance. So I think around 640, 650 can be a reasonable target which one can expect over the next 12 to 15 months.
We've got Sunil Patil, who I forgot to mention. By the way, standard disclaimer, Ambuja Cement is part of the Adani Group, and so is NDTV Profit, which is part of the NDTV Group. We've got Sunil Patil, who's writing in from Jalgaon, who says that he's a big fan of the channel, but he regrets to inform that we never take his question on the show. Apologies, we're not missing you out on purpose, Sunil. There are just so many questions to take. The question that he has, and this one's for you, Aditya, on the charts, he's got a very large quantity of Yes Bank, 50,000 shares at a price of 21.3, and so he's incurring a loss because of that, and it probably is a pretty substantial one on account of the quantity. What is the advice that you would give for a 3-month time frame?
Unfortunately, Alex, he's picked up the stock at the wrong point of time, and stock doesn't look all that attractive to me on the charts as of now. But because he's picked up a very large quantity, I would suggest keep a proper stop loss somewhere around 18.5 on the downside, and hope that the stock reclaims levels of 21, 22 on the upside, though it will take some time for the stock to do so. And I would strongly recommend, if you get your buying prices anywhere above your buying price in the stock in the near term to medium term, exit the stock and look for better plays within the space, because you've seen the stock time and again see that pop and again come back to its 52-week lows. So don't get too excited after that 10-15% kind of an up move on an odd day, because the stock again claws back to its 52-week lows. So it's better to avoid this stock. I'm okay buying higher levels, but once the trend has reversed completely, that is the point of time I would look to get into the stock.
All right, okay. So that's with regards to where charts are concerned for Yes Bank. We've got our next caller. Mohammed is calling us from Dubai. Mohammed, hi, a very good morning to you. How can we help you today?
Good morning, very good morning. See, I want to just inquire about Tata Motors. You know, is the right time to buy because of the recent developments in GST and all. You know, they're saying about 5% GST of the spare parts automobile.
Right.
So, they're Jaguar or whatever, this will have any impact in the, US, the sale of,
Okay, got your question, Mohammed. I'll take this up with Avinash. Avinash, the likely beneficiaries of this GST cut are the companies that make smaller cars, 1200cc and below, if I'm not wrong, and not the luxury cars. What is your reading with regards to where Tata Motors is concerned with the new GST reforms?
Yeah, I think, Tata Motors would benefit, more on the commercial vehicle side, Mahima, because that is where the GST is the highest. And I think clearly, post the Q1 numbers and the presentation made to analysts, I think one thing is very clear that things are getting better for commercial vehicles. A good monsoon, a lower interest rate kind of regime is definitely something which is going to help the industry. And if at all this GST structure comes in, then I think Tata Motors would definitely be a key beneficiary, especially for the CV business. As far as the Jaguar, product is concerned, it's a luxury product vehicle. So unlikely that, any impact would be made here, because most of the vehicles are exported to markets like Europe and US. I would believe that, now the company is going to be demerged into two entities, and the company has clearly made it already visible that by October or November, the company demerger would be complete. So I think, somebody who wants to bet on two separate companies would get an opportunity, and shareholders would benefit from this value unlocking. So I think the investor should definitely look at holding on this share for the next 12 to 18 months. Definitely better times lie ahead.
So Mahesh is calling us on Hitachi Energy, but Mahesh, we already took this question on the show. So forgive me, I'm going to cut things short today. I would request you to call us tomorrow, and we can take perhaps another stock. For now, let me go to Centum Electronics, and we've got a question from Hariharan, who's writing in from Mumbai. Quick view is being sought, Aditya, on the charts. 1 year time frame. If you want to put 1 lakh in, would you do it right now?
I would, Alex, with the stop loss at 2,500 on the downside, look for a target of 3,000 on the upside for a 1 year time horizon.
Okay, it's time now for the rapid fire round. Gentlemen, you know what this means. I'm going to throw as many questions at you over the course of the next 2 minutes. Let's take the first question on HCC, Hindustan Construction Company. Bordered levels of 26.4, is 35 on the cards. What's the view, Aditya?
Yes, continue to hold 35 on cards, stop loss 24.
All right, the next question is from Sunena, who's writing us from Bengaluru. She's asking about CDSL. She's holding 100 odd shares at 1747 a piece. Wants to know if she can exit or average at the current levels. Aditya, your view?
Continue to hold average at current levels, stop loss 1,500, target 1,800 on the upside.
Kalyan Jewelers, Jose wants to know, holding since December last year, current quantity is 148, 612 is the buy price. Short-term basis, should you hold or exit? Aditya?
exit, Alex, or probably put a stop loss at 495 on the downside. Once that is broken, exit.
Okay, PTC India is the next counter. Whether the person can hold from a longer term perspective or not, Satpathy is asking this question. Avinash, your view?
Yeah, I think you can hold on for the next 12 to 18 months.
Porshad wants to know about HBL Engineering. Would you hold or book profit at this point? I don't know the buy price. Aditya, what's the view?
Continue to hold, look for a target of 820 on the upside.
Okay, PC Jewellers is the next counter. The person is holding 2 lakh shares at an average price of 15. An entry at the current levels is advisable, Aditya?
Not at all.
Okay, Aditya
Completely
Birla.
not.
Okay, Aditya Birla AMC is the name of the counter, holding at an average price of 370. Would you hold or exit? Avinash?
I think continue to hold.
Okay, M&M is the next counter. 2948 is the entry price, Bhavika, and she's got 10 odd shares. Your view, Avinash, on this?
Yeah, continue to hold.
Got it. Airtel is the name of the counter, and Mr. Muzumdar wants to know, bought at levels of 422. Would you hold for the long term? Avinash?
Yeah, I think for the next 12 to 18 months, one should hold on.
Okay, Karnataka Bank is the next counter, bought at 196 levels. Aditya, on the charts, how is it looking?
Not good, Mahima. Place a stop loss at 165 on the downside. If that is broken, exit from the trade.
Okay, Transrail Lighting bought 3 lakh quantity, time horizon of 3 months. Would you hold or exit? Ashok Pai wants to know. Aditya?
Continue to hold, target 850 on the upside. Very strong stock.
All right. Well, gentlemen, thanks so much for joining and for answering all the questions at this juncture. Live visuals coming through from the streets of Mumbai. It is a red alert, and we told you about this at the start of the program. If you are tuning in from Mumbai, hopefully you are safe. If you haven't ventured out, then I would encourage you to stay at home, because that really is the advice that is going out. There are security personnel from the NDRF that have been deployed in the city. Mithi River is at a danger point in certain locations of the city. So bear that in mind and do stay tuned. There's lots coming up over the course of the morning, whatever is left of it, and also the session on NDTV Profit. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandani, and today we're going to talk about Suven Life Sciences. The entire company largely depends on the success of a single drug, and the stock price has doubled over the last 6 months, and therefore we find it interesting to try and analyze this one. Let me start off with what I want to know, and this is going to hold the key, right? How large is the opportunity size with regard to the Alzheimer's drug they're developing, and the second piece is, where will they sell it? What are the margins on these products? What's the opportunity size like with regard to the product? Will they license it or will they partner? How exactly will this work? All of it is what we'll try to understand. The expectation is this will happen as early as calendar year 2026, and therefore the numbers will change dramatically if this one turns out to be a success. So that's the first piece. The second one, cash balances, and they've raised around 850 crore. As of now, the cash balances are minuscule as of FY25 end. But with this 856 crore or 57 crore fundraise, it should give some amount of bandwidth, some amount of comfort with regard to the investment that they continue to make in R&D, given that otherwise the business is largely zero when it comes to both profitability as well as top line. When you're looking at products, I'd also want to know what the other products might contribute if this one were to fail. So products in the pipeline, timelines, how likely of some or all of those products being successful, and how large is the size for the other products outside of the Alzheimer's drug that they're developing. How certain is profitability? They need to be profitable. Analysts want them to be. There have been questions asked around this, so I'd want to know how certain is it that they are looking at profitability. The sixth possible question that I'd want to ask them is, how was investor interest in the fundraise? Now, it was a large fundraise, and therefore to try and assess as to whether there is a possibility of more fundraising if at all the company needs it, and that will possibly be determined by the answer he gives us to this question. The last one is, how will Suven look beyond 2027? Now, there are lots of unknowns where Suven is concerned, and therefore this will be a tough question to answer standalone. But what we will ask him is, under both scenarios, one, Alzheimer's becomes successful and Alzheimer's doesn't successfully come through as a product, in which case how does Suven look in both of those cases beyond 2027? So I'd want to know a lot around some of these aspects and angles. But Varsha, as always, about the company.
Yeah. So, you know, Harsh, this is something like a 0 to 1 game, I would say, when it comes to, you know, Suven Life Sciences. Let's see what that company does. I'll try to simplify as much as possible. Now, a company develops molecules which are focused on CNS space. That means CNS drugs are nothing but which treat conditions affecting brain and spinal cord, and they develop novel therapies and also provides contract research and development services. So basically, in a very simple language, they make molecules which affect brain and spinal cord. You know, let's talk about the products, because that is what defines Suven and why investors are bullish, or why investors like this company, because of the pipeline that they have. You know, starting with one of the main product that this company has is SUVN 502, which is nothing but the drug which is being developed for agitation when it comes to, you know, Alzheimer's patients. So one is you make drug which is used for treating Alzheimer's, and the other is drugs which is used to treat agitation in Alzheimer's. That is nothing but the, you know, side effects, like you know.
If I can interrupt, let's bring the graphics with regard to SUVN 502, team. If we can pull that one up, because that's what we're talking about first off with regard to where Alzheimer's is concerned. That's right. This is the one we're talking about. Perfect.
So this is nothing but the drugs which is being developed for agitation in Alzheimer's patient. In simple language, when a person has Alzheimer's, they do have side effects, you know, like you have irritation, you have, you know, restlessness or emotional distress. So these are nothing but the side effects when you have Alzheimer's. So to treat that side effects, this drug will be used, which is Suven 502. Now, this is currently in phase 3 global trials for Alzheimer's agitation, and now this is mainly people are talking about that this represents a multi-billion-dollar opportunity. We'll ask the management about that, and the expected completion for this is by end of FY26.
Before I go forward, or rather before you go forward, what does phase 3 mean? So say we are in phase 3, can we pull up that graphic again? Perfect. Phase 3 global trials, what does this mean, and how far are we from possible completion? How many phases to go? What do the phases which are completed mean? Give us that, give viewers that perspective.
So phase 3 is nothing but the last phase. So any drug which wants to go into the market has to go through 3 phases, which we call clinical trials, meaning you know, before a drug is given to a person, that drug has to be tested. So that drug has to be tested in 3 phases, that is phase 1, phase 2, phase 3. phase 1 mein you have certain number of people to whom drugs is being tested. Then if that is positive, the drugs goes from phase 1 to phase 2. Then in phase 2 this drug has been given to certain number of people, and then if that the results are positive, then it goes to phase 3. And phase 3 is the final one, wherein if the drug is positive, then all the launches, activities, marketing comes, and then the actual commercialization of the drug comes in. So this,
what are my options post phase 3 approval? So say phase 3 global approval comes through. What are my options? Do I license? Do I manufacture on my own? Is there a third option available?
That depends on you.
What are my options?
That depends on you.
But these are my two options.
Yeah,
one is I license it for someone else to manufacture and market both.
Yes.
And second is I market it and a third party manufactures it. And then the third option is I manufacture it, I market it.
That depends on the unit economics that you
But
follow.
this is broadly the way in which it works.
This is broadly the way in which any pharma company works with a drug.
And is it possible that I don't get a global approval and that I get a approval for a specific geography, or is that not really heard of?
You have to get. I mean, if you want to, if you are developing a drug, okay, and so the main point over here is you want to sell it to US,
right?
Which is a regulated market.
Correct.
So for that you need that US FDA approval.
And therefore they have a subsidiary sitting in the US, which is also doing trials.
Yes.
Just for viewer perspective, they've been pushing money there as well to ensure that trials in the US become successful, because that's the largest market which you want to cater to. But okay, that's the first product. We'll breeze through the others because this is the key one.
This is the key one, exactly. Yes. So everyone is betting on this product. And also for viewers, so Suven actually failed so it was developing a product for Alzheimer's, to treat the Alzheimer's, but they failed in trials, and then they got to know that this drug is actually positive on people dealing with the side effects of Alzheimer's. That is the agitation, which we were speaking about.
Yes.
And that's when they found out that okay, let's
cure the side effects.
Let's cure the side effects,
which should hopefully aid Alzheimer's itself.
Exactly. So this is the whole story basically.
Interesting one.
Now the next drug which they have is let's go for SUVN G3031, which has completed phase 2 trial for chronic neurological disorder. Chronic neurological disorder is a long-term condition that affect brain, spinal cord, or your nerves throughout the body, and they are engaging for FDA phase 3 trial approval, which are expected somewhere around 25 to 26. Now next drug which they are focusing on is SUVN T4010, that is 4010, which targets cognitive disorder. It's nothing but what is cognitive disorder? This affect person's ability to think, to learn, or memory, perception. So basically your day-to-day life get affected when it comes to cognitive disorder, and they are planning for phase 2 over there. Then next is Suven 911, which is nothing but used for major depressive disorder. In a simple language, depression, that's it. They've completed their phase 2A trial with positive results, and results are expected by 2027. So Harsha, this is what Suven does, and these are what the main products, I would say, which Suven is focusing on, considering the biggest one would be the Alzheimer's.
Yeah. So let's pull up all of this as a summary. These are all the drugs which are there under development. This is broadly a summary of all of those, kind of giving you a snapshot into what's playing out and at what phase each of those drugs are in. So this gives you a quick, brief snapshot. We won't get into the details of it, but this one is the key, right? This one, we've spoken about it quite a bit, so we'll quickly move on now. Therefore, now you already know a large part of what the company is about, and this is the crucial part of it. Let's therefore look at the metrics now, and as one would understand, the metrics will not be the best because a lot of these drugs are still under development and there's no sales that the company is able to demonstrate. We'll start off with the income statement, balance sheet, cash flow, return ratios. We'll look at shareholding, street cred, street coverage, and we will look at outlook. So 8 parameters. Varsha, to start with the income statement.
Yeah. So, on the face, if you see income statement doesn't look good, you will only see losses there, starting from EBITDA. Look at the revenue, it's like deteriorating. So one of the reasons I would say why this is deteriorating is company previously had CDMO business, and the sale or demerger of this segment has actually, affected the revenue for the company. And now the core business for the company is developing their novel drugs, which we just, saw, which has a very long gestation period. Single drug will require, you have to, when you make your own drug, you have to go through the phase 3 trials, and then that requires a lots of times 4-5 years, and that's one of the reason why this doesn't look good. Even the company has high R&D expenditure, which drags the profitability, and one of the reasons why you're seeing losses for this company. So overall, because of no CDMO in the revenue and high R&D expenditure and long gestation period of the novel products that they are going into is one of the reasons why the income statement doesn't look good.
Okay, but a clear thumbs down on the back of that. Let's look at the balance sheet. And the balance sheet has equity, or used to have a very large quantum of equity in comparison to where it is right now, because you are booking all of those losses. But the good part is there is very low to no borrowing on the balance sheet. Also, they've done a fundraise in May of 2025, which through which they've raised around 857 crore rupees of equity, which basically again takes care of what is the cash required for all the R&D they're doing. So again, it gives you the ability to continue to make losses at a period when you're still developing your business, which is again a key positive. So we've given this a neutral because one, they have the ability to raise money. Two, you don't have any borrowing on the balance sheet. And typically if you don't have any borrowing on the balance sheet, you can't call the balance sheet bad, and therefore we've given this a neutral. Let's talk about cash flow, Varsha.
Yeah, so Harsh, considering the overall financial that this company has, the cash flow doesn't look bad.
Yes.
And that's one of the reasons why we've given neutral rating, because if you see, company has been receiving money in 2023 also. Company had received money, and that is the reason. If you see, the net cash flow, in 2023 was what, 32 crores positive. In 2024 it is negative 22 crore. In 25 it is 0. So company has been receiving money to survive, and considering the size of the company, considering the financial losses that the company has seen, the cash flow doesn't look bad. So that's the reason why we've given over here the neutral rating to the cash flow statement.
Perfect. I'll quickly cover return ratios and shareholding. Return ratios are negative, and therefore we've given it a thumbs down. No questions asked, unfortunately loss making, and therefore that's what you're seeing. What you're looking at in terms of shareholding pattern as well, nearly 67% of the shares outstanding share capital is held by promoters, so it's well held. Also, you have some interesting names cropping up on the DII side, which is the domestic institutional investors. You have Quant, Abacus, which hold 2% and 1.5% each, and therefore that part of the metrics looks very, very interesting, where you have good, decent investors who have come in, vindicating the way in which they look at the company. Second, you have a very large promoter holding, nearly 67.5%, which also kind of vindicates everything with regard to the company. It's a 5,000 crore market cap company now, after the stock has doubled in the last 3 months. So something, or rather the last 6 months. So that's something you want to know. But Varsha, the next metric.
Yeah, so I would take street cred and
yes,
outlook
please.
for the company. The street cred, if you see, as Harsh was mentioning, in the last 1 month, there is a negative returns to the investors of 20%, but last 6 months, yes, almost 100%, the money has been doubled. But what is interesting when it comes to Suven is outlook. Not the present condition, but outlook. So one is the Alzheimer's drug, which we were speaking about, creates $1 million opportunity for the company if that goes successful. And of all the products that we have seen, even if one product goes into licensing, or if even one product goes successful, Suven could change tables for itself. So also, if you see, maybe a company may need more capital for multiple clinical trials over the next 2 years. And very interesting part, Harsh. So if you see, for Walk Hard, Zenich was the lead drug, right? For Glenmark, if you see ISB 2001, which we just had a discussion about that was the lead drug. Maybe for Suven, that agitation and Alzheimer's drug maybe would turn tables for itself. You don't know.
Yeah, we'll quiz the management on that, but that's basically with regard to the outlook. We've given that, of course, a neutral because it's tough to know which side of the fence to sit on. Street coverage, there's absolutely no street coverage, therefore we've been forced to give this a thumbs down. Let's quickly add up all of the metrics and give it a rating, which we always do on KYC. Of course, keep in mind that it's a 0 to 1 game, which Varsha keeps speaking about, but that's how all of the metrics stack up. And of course, it's a very risky 3.5 on 8 that we have given on our KYC final rating. Let's bring on board Mr. Venkateswarlu Jasti, who is the Chairman and Managing Director at Suven Life Sciences, joining us. Great having you, Mr. Jasti. Good morning, this is Harsh. So let me start off by first understanding from you, what is the likelihood of the phase 3 trial getting successfully completed for an SUVN 502? Give us your take, give us your perspective from the horse's mouth.
Hey, you have to take it with a grain of salt, whatever we say here.
Of course.
The thing, drug discovery, as she was telling, it's a binary outcome. There is no percentage of success or anything like that. And it's a long drawn process. Each drug takes 10 to 15 years before you see whether it is going forward or not going at all. In this case, when you're asking me whether you're going to be successful, I'm not sure, because we thought 502 when we did for the Alzheimer's, because this was a double-blind study based on the DSMB, drug safety monitoring based data, no questions asked for 4 years. But at the same time, when you got the result, it was not statistically significant. Similarly, here we see the data based on the post-facto analysis of the same clinical trial, and we see very good outlook for that. And based on that, we went to the US FDA, asked for direct phase 3 study for the agitation and aggression in Alzheimer's. Usually we had to do again a phase 2, but based on the safety aspects, they have given, and now it's running. So we are very hopeful of that, but doesn't mean a thing until the check is in the bank. So you have to take, as I said, it is 0 as of now, but everything will be known only in 2027.
If I can ask you a follow-up, everything will be known in 2027. Are you talking about calendar year, financial year? Give us that timeline. Calendar year 2027. So we're still 2 years away from any type of recognition in terms of top line.
Any type of success to start with.
Sure.
Only success will give you the any kind of money. Sure. Otherwise, nothing.
Sure. And how large is the opportunity, sir? While I have you still with me, and then I hand it over to Varsha.
This is a new indication. There are no real NCEs that were tried for this. Only one NCE which was used for some other thing has been used, and it can be a multi-billion dollars according to street estimates, but we don't know. But it's a new indication, and not only for Alzheimer type dementia, this agitation also occurs in other dementias. So based on that, it has a huge potential, but only time will tell. First, we need to move to that approval level. That's what our intention is.
Right. Hi, Mr. Jasti. Varsha this side. Pleasure to have you on NDTV Profit. Mr. Jasti, the recent, 857 crore fundraising which you have done was a significant event. Now, wanted to know what are the specific milestones that you have tied up, and any more funding is been required considering the huge pipeline, that you have.
As you know, this is the first time an Indian company sitting in India doing drug discovery alone, nothing, no revenue base. Street has put in about $50 million. And myself has put in $50 million. Out of the $100 million, $50 million comes from the family and $50 million from the street. We have not given any kind of things. If you have seen my annual report, it clearly tells you what exactly it is. We are saying it will be only during that time that can happen when the 2027, not only this molecule, but other molecules are also coming up at the same time, like 3031 and 911. The results also will be during the calendar year 2027.
Okay. And sir, how was the interest on from investors, when it comes to fundraising that you have done? I think, Harsh, we have lost him.
We have. Mr. Jasti, are you with us? Okay. Okay. So we believe that we've lost him. And while we try and patch him back in, Varsha, he's obviously non-committal with regard to that key drug that we're talking about. He was also non-committal on the size of the opportunity, which was a bit off for me, because it's a multi-billion-dollar opportunity. That's a known fact. But how much of that does Suven likely capture?
Lots of uncertainty, I would say. Lots and lots of uncertainty.
Yeah. But see, the good part about the conversation that we had, or hopefully we can have if he logs back in, is okay. Mr. Jasti, are you with us? Can you hear us?
Okay. Yes, I can hear you.
Okay. Mr. Jasti, just wanting to understand, Varsha and myself, what was the kind of investor interest that you saw? Of course, you've got some marquee investors who've come in, but how large was the investor interest is what we're trying to understand.
I mean, I think we have to propagate that something has to be funded, the investments into the drug discovery. We cannot be depending on the global outlook and all that stuff, getting drugs from outside. Only that kind of a mindset they have put it in. I think those people who have put in about 23 people, including funds, they're all looking at kind of a new way of looking at innovation. Otherwise, there is not much interest, to be honest with you. So we have to propagate that. And the second thing is, since management is putting 50% of the money, I think I've been putting all these times. I think that is another thing that gave them these, okay, let us try and put some money in this. That's the way it has been.
Understood. Mr. Jasti, I know that, that FY27 decides everything, but any target that you have or any, idea that you have, when can Suven be on the path of profitability? Any ballpark target that you have set in?
No profitability in the next few years until a molecule is successful, because we do not have any revenue. As you know, we do only the drug discovery and development. We don't do any CRO business, which I used to do, or CDMO business, which I used to do in the Suven Pharma, which not anymore. That's why I have demerged it and focusing on this one, because I need to fund this one. If I'm in the same company, it is being penalized. That's
Mr. Jasti, got your point. Sorry, but we're out of time. Just one quick piece. How long should this fundraise therefore last you?
Should it be 2 years? 2027.
Perfect.
So that if something happens, then I don't need any more funding for the next foreseeable future.
Got it.
Otherwise, I have to put myself or look for partners.
Perfect. Thank you so much, sir, for joining us and giving us that perspective and being very candid about it. You yourself started the conversation by saying that it's a binary outcome. Viewers, a tricky company, a tricky set of ratings that we've put out, but of course it's an objective rating that we've given, and of course you've heard straight from the management. So it's over to you. But from Varsha, myself, and everyone who puts the show together, thanks so much for watching.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio.
Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to
ICICI
invest?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak.
China lifts select curbs on India. Beijing's finance ministry assures External Affairs Minister S. Jaishankar that the country is addressing India's needs of fertilizers and rare earths. Meanwhile, the SEBI suggests relaxed IPO norms for companies with market caps above 50,000 crore rupees, offering more time to meet the 25% public shareholding rule. And largely a tepid listing for Bluestone Jewelry lists at a 1.5% discount to the issue price. The 1,500 crore rupees IPO was subscribed 2.7 times with strong demand from QIBs. Good afternoon, you're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at what the markets are doing. And when you take a look at the Nifty, it's largely hovering close to those 25,000 levels. In fact, 24,900 is a level that it's managed to uphold through the course of the day largely. When you take a look at the sectoral picture as well, looking tilted in the favor of green. So you have oil and gas, auto, media, energy, metal, PSU bank as well as consumption leading gains. On the flip side, there's defense and finance as well that are on the losing side of things. So holding on to a tinge of red as we speak. But largely, let's also take a look at some of the top gainers from within the Nifty 50 pack. It's Tata Motors, that's up 3.5%. Reliance Industries, 2.1% thereabout. Adani Ports, Adani Enterprises up anywhere between 1.5% to 2%. Bajaj Auto, Hero MotoCorp, some of your other gainers from within the Nifty 50 pack. And when you take a look at the list of top losers as well, there's a Bajaj Finserv, Hindalco, Grasim Industries, BEL as well as Power Grid making it to that list. So that largely is what you're looking at when it comes to some of your sectors that you're looking at. But tell you what, let's also take the conversation forward and take a look at Patel Retail, because that's one important company that we should be watching out for. In fact, we caught up with Manish Rambabu Agarwal, CFO at Patel Retail, as well as Dhanji Raghavji of Patel Retail as well, who's the CEO. Let's go across and listen into a slice of that conversation then.
मिस्टर पटेल, आपसे शुरुआत करते हैं। सर, आपकी कंपनी जो है रिटेल सेक्टर में है, तो ज़रा हमें बताइए कि आपकी कंपनी किस तरह से बनी है और इसका बिजनेस मॉडल कैसा है।
हमारी कंपनी हम 2 भाइयों ने स्टार्ट किया। मैं मेरा पहला पर्सनल जर्नी बता देता हूँ। मैं गुजरात में एक छोटा सा गांव दुधई का नेटिव प्लेस है, और मेरी पढ़ाई वगैरह वहीं गुजरात में हुई, दुधई गांव में हुई। और बेचर भाई मेरे से पहले बॉम्बे आए, और मैं पढ़ाई करते करते थोड़ा सा कुछ करने की इच्छा थी, तो पढ़ाई मैं 8 तक पढ़ाई किया। फिर भाई के साथ बॉम्बे आ गए और एक कुछ टाइम नौकरी किया। बाद में कुछ गांव से आए थे तो कुछ बनने का सोच के तो आए थे, तो दिमाग में चल रहा था कि भाई कामकाज सीख ले हुए और फिर कुछ अपना धंधा करेंगे। तो फिर कुछ समय नौकरी किया और बाद में हम दोनों भाई ने एक छोटी सी किराने की दुकान चालू कर दी। वो बढ़िया चला, फिर उसको ही बढ़ाते गए और फिर एक ट्रेडिशनल किराने की दुकान में से फिर मॉडर्नाइज का कल्चर आ गया था। तो हम लोगों ने फिर अपना धंधे को मॉडर्नाइज करने के लिए सुपरमार्केट पहला खोला, दोनों ने भाई ने मिलके। और फिर वो सुपरमार्केट धंधा बढ़ते गया, आगे हम 1, 2, 3, 4 करते गए, और फिर साथ में फैमिली के लोग भी जुड़ते गए। और आज हम थाना रीजन में, थाना रायगढ़ में फ्रॉम टुडे 44 स्टोर रन कर रहे हैं, और आगे पूना की तरफ भी देख रहे हैं, और मतलब बॉम्बे में बोरीवली के उस तरफ दहीसर, भाईंदर, मीरा रोड, वहाँ भी हम रिटेल स्टोर अपने देख रहे हैं।
मिस्टर पटेल, ये भी बताइए कि
तो
आपका जो पूरा बिजनेस नेटवर्क है, बिजनेस मॉडल है, उसमें एक तो रिटेल है जो आपने बताया कि आपने कैसे शुरू किया, किराने से शुरू करके 44 स्टोर तक आप गए, और आपका जो रेवेन्यू मॉडल है उसमें आपका नॉन रिटेल भी आता है, जिसमें आप एक्सपोर्ट करते हैं, एग्री कमोडिटीज़ करते हैं, शुगर, राइस वगैरह। तो ये दोनों जो मॉडल है वो किस तरह से काम करते हैं आपके लिए?
अभी ये रिटेल काम करते करते बीच में हम लोग की बाइंग बहुत अच्छी हो गई थी, तो काफ़ी एक्सपोर्टर हमसे माल खरीदते थे। तो हमने भी सोचा कि फिर अपनी बाइंग इतनी अच्छी है तो हम लोग एक्सपोर्ट क्यों नहीं करें। तो फिर हमने फैमिली के लोग जुड़ गए, तो एक्सपोर्ट का धंधा स्टार्ट किया हमने, तो वो भी अच्छा सेट हो गया। तो फिर ऐसा सोचा कि अभी इसमें वैल्यू एड कैसा करें। वैल्यू एड करना है तो फिर अपना खुद का वाला मैन्युफैक्चरिंग सिस्टम फैक्ट्री लगावे। तो हमने फिर कच्छ में एक पहला यूनिट लगाया एग्री रिलेटेड, उसमें क्यूमिंग सीड्स, कोरिएंडर, पीनट का काम करते थे। तो मतलब एक प्रोसेस हो गया, और जो हम लोग का रिटेल में एक अच्छी बाइंग थी, तो एक अच्छा एक प्राइस वगैरह बनता था, और फिर ग्राहकों को अच्छा प्राइस मिलेगा तो नो डाउट्स तो आते हैं। तो फिर वो तो एक 3 प्रोडक्ट ही में हम काम कर रहे थे, तो फिर कि अभी उसको वैल्यूएट कैसा करें, तो हमने और एक यूनिट खोला जिसके अंदर हम ब्लेंडेड स्पाइसेस और काफ़ी और भी एग्रीकल्चर प्रोसेस के काम करते हैं हम उसमें। तो इस तरह से हम लोग ने ये रिटेल के साथ हमने एक्सपोर्ट और प्रोसेस जो ब्लेंडेड स्पाइसेस, आज हम एक्सपोर्ट के साथ हम डोमेस्टिक भी काम करते हैं। जैसे हमारी ब्रांड है इंडियन चस्का, जो डोमेस्टिक लगभग अभी तक 5 स्टेट में हम लोग ऑलरेडी हम लोग का डिस्ट्रीब्यूशन नेटवर्क बन गया है। तो इस तरह से मेरा तीनों बिजनेस का है ये।
Manish, if you can come in here and give us an indication of the margins that you are sitting on, because for FY25 your margin is around 6.97%. Is that the kind of optimum margin that you have? And because there is an issue with respect to bulk exports, especially sugar, is there going to be volatility in your numbers?
Yes, sir. Now we have shifted our focus from trading to retail and processing. As you may from our numbers you can see there were trading sales of sugar, export sugar in the fiscal 23 of 351 crores. Post restriction implied by the government of India, in the fiscal 25 it was 0. So we are now mainly focused on retail and processing, and trading is opportunity based. So if we get something worth doing it, then we'll do it.
And so now your growth will completely come from retail and processing?
Yes, sir. Our growth will come through retail, wherein we'll open around 15 stores this financial year, new stores, and through processing, wherein we have already launched in last October our blended spices. So that will scale up, and those are the two main reasons that will boost our growth.
All right, then let's move on. That's about Patel Retail, and that, of course, is the roadmap as far as their expansion plans are concerned. But tell you what, let's take the conversation also forward with the management of Shriji Group. In fact, we're being joined on this show by Krishnaraj Lal, who's the director group company of Shriji Group. Thank you so much for taking time out and joining us this afternoon. First things first, I wanted to talk about your plans for utilization of this particular fundraise. Are you looking at debt reduction? What are you looking to utilize this fundraise towards?
Very good afternoon. First of all, thank you very much for giving me an opportunity to speak to you. So to understand the further growth plan, we are Shriji Shipping Global, 30-year-old company, which started with a partnership firm in 1995. So we are having our USP in minor and tidal port handling. So we generate revenues and volumes from tidal and minor ports of Gujarat, West Coast, and Sri Lanka. So the main mantra for next decade will be moving from the east toward moving to the east from the west. So yeah, we are planning to buy 2 dry bulk Supramax vessels for our end users, and they will be we'll be doing a long-term contract with them. It will be within a payback period of say 3 to 4 years with interest. So yeah, to avoid the volatility and the freight market exposure, we will be giving that comfort to our end users. We are giving services to reputed clients such as Arsenal, Vittal and Nippon Steel, Ambuja, Torrent Power, AMNS, Tata International. All these are our reputed clients. So, and for debt, the company practically has a cash and cash equivalent in the balance sheet of about 106 crores. And the other debt which you are referring to is promoters FD against which overdraft, bank overdraft is being utilized for about 150 crores. So practically there's only a debt of about 23 crores, which is working capital. So it's practically not the debt for which we are raising the funds. It's for the growth trajectory to move on to the other ports. So we are handling up at about 20 different minor ports in India and Sri Lanka. Yeah, so I hope I have answered your question. And we are having more than 80 marine assets which we have built on our books of Shriji, and more than 370 earth-moving equipments.
Just about answers my question. I also, for the benefit of our viewers, also wanted to take the viewers through the roadmap as far as the IPO is concerned, some of the key details as well. IPO, of course, opens for subscription today, that is 19th, and it's going to be open until 21st. You're looking at a price band of 240 to 252 rupees per share as far as this IPO is concerned. When you take a look at the total size as well, there's 400 crores that you're highlighting for the total size, and a lot size is about 58 shares. When you take a look at the plans for utilizing the proceeds, just like the management mentioned, it's going to be debt reduction that they're going to be focusing on. But tell you what, let's also talk about the bulk of operations that operate via non-major ports. I wanted to get a sense of what you think about that, because in the light of the operation mechanism that you have, what are your plans to tackle volatility? Because there's a lot of geopolitical concerns that we're looking at.
Ma'am, I beg your pardon, but the company is not going to reduce debt. I'd like to correct you there again. The company on its book is not having any debt. It's having it's a cash and cash equivalent of 106 crores on the balance sheet. But for geopolitical situation, ma'am, the countries which are involved in this geopolitical situation do not have any, the source of the material. We are basically in dry bulk raw materials. So these raw materials from where they are sourced are Indonesia, South Africa, Australia. So they are not having practically any much concerns, and geopolitical situation would not impact our business because we are a service providing company and we do not have any sensitivity or any impact on the volatility of the freight or shipping market as such.
All right, then, absolutely understood. Thank you so much for helping us out with the outlook. Quickly, just wanted to get a sense of what your plans also look like as far as expansion then is concerned.
Ma'am, we are planning to increase volumes. The volumes we will increase by making non-monsoon ports operational, by designing additional coastal vessels in future. So, you know, government is giving a lot of boost to Sagarmala projects, Bharatmala projects, railway corridors. And so to reduce the road congestion and rail traffic, we are planning to build additional coastal vessels, which will be youngest fleet. We are having 7 new coastal vessels, which is youngest in India. So another is we are creating additional intermediate storage facilities outside the minor ports to create additional volumes at these ports. Apart from that, we are going to create new waterfronts for different places, which is nearby to the industry and hinterland, and the cargo will be diverted from any major port, which is currently being an expensive and it will be a cost-effective solution for the industry. So currently, an industry which is importing their cargo from a far major port will then be shifting their cargo to a minor port, which is much closer to its proximity than it is currently now. So we'll be generating more volumes. Apart from that, we have got an 15-year contract with a letter of intent from the only riverine port, major port in India, which is Shyama Prasad Mukherjee Port, Kolkata Port. We'll be starting shifting our cargo from dry bulk to containers. So we, as per Kolkata Port's estimate, we'll be lightering containers from floating cranes of about 85,000 containers in a year.
Right. Point taken. Thank you so much. Thank you so much, Krishna Rajlal sir, for helping us out with that understanding as far as your plans for growth are concerned. So insulated from geopolitical tensions, key commentary coming in from the management of Shriji Group, Shriji Shipping, that is. Let's cut across to an interesting conversation, a very important one at that. And let's listen into the word coming in from Arundhati Bhattacharya, the President and CEO of Salesforce South Asia.
It's not that I didn't learn from it. I did learn from the exercise. But the fact is that the mere insistence that I do a few things before I can do something else, no matter how many times I might have done it before, that's a lot of bureaucracy. And yeah, you face that kind of bureaucracy in an organization like Salesforce, no matter the fact that it is in the private sector. So there are a number of things like these, that I can talk about. And that's why I tell my colleagues sometimes, maybe in jest, maybe in half seriousness, that my next book should be something that's called Bursting the Myths of the Public and the Private Sector. Because there are a lot of myths and stories about what the public sector should be and what the private sector should be. Lots of them in myths and stories, And I would love to have a time sometime when I just discuss that and nothing else.
Yeah, no, of course. We can discuss anything you want. But one of the things that I definitely want your view on, and this is a fascinating insight, that you think that SBI was sometimes less bureaucratic than a Salesforce in the way it worked. Just want to understand that right now the big scare, hope, fear, buzzword, everything is AI, artificial intelligence. You are at the vantage point of seeing how this plays out. In the Indian context, in your view, what are the sectors that are going to be shaken up the most?
So, I don't believe there is a single sector that is going to remain unaffected. It doesn't matter which sector you are in. You are going to have to use AI if you want to retain your efficiency and your productivity, and if you want to do better. It might be used in a context of lack of labor in the developed market. In the markets like India, it's going to be used in the context of actually providing far better services to your very populous nation, which cannot be done in the brick and mortar manner. You are aware that, for instance, 600,000 villages, we couldn't cover them under financial inclusion till we took the help of technology in the form of Aadhaar for KYC and mobiles for its ubiquitous connectiveness. So that's what the JAM Trinity was all about. The Jandhan account, the Aadhaar for KYC, and the mobile for connectivity. When we brought into play all of these three elements, that is when we could do true financial inclusion in India. At that point of time, yes, 97% of the accounts that we opened did not have any balance. Today, however, if you ask SBI, the amount of balances in those accounts, it's humongous. And not only that, it has allowed the QR code culture of doing payments to improve to a level where now a lot of people who were financially excluded because they could not establish a cash flow can now actually establish a cash flow. How many of us are using QR codes how many times in the day to make payments? And because I'm making these payments to even small vendors are becoming bankable. What does it mean for them? It means they no longer have to tap the unorganized sector for money, which costs them huge amount of interest. They are able to retain that margin with themselves. Retaining of that margin means two things. One, their standard of living goes up. And second, they can invest in their business in order to make it bigger. So, both ways, they then become what is called true financially included people. And this all happened on account of technology. Today, again, what AI is giving us an opportunity, a country like India, the opportunity to do, is to really and truly ensure that we bring a much better quality of life to our farmers, because AI can give you the right inputs for you to sow the right products at the right time, and also ensure that those particular produce is actually guarded. And if necessary, is insured and you get the right amount of reparation in case something goes wrong. Secondly, it also gives you the ability to bring about a true democratization of education, which is the basic foundation for the progress of any nation or any people. Because today, the quality of education that you can get in a metro is normally far better than what you can get in the rural areas. Now, AI is something that can make education ubiquitous across the board. It doesn't matter what the number is. Similarly with healthcare. Healthcare today, which you cannot get at hospitals unless they are very highly priced hospitals, can now slowly begin to filter down, right down to the villages, because AI can make it possible for you to take it there. So, whether it be the basic social services, whether it be advanced systems like even weaponry systems, even systems like, diagnostic systems, the genetically diagnosing people for individual drug regimes, all of these can only happen if you use AI in the manner which is ethical, which is transparent, but which actually is being used for the good of humanity. So AI has enormous capability, and I really cannot see any particular area where it won't impact. And again, unlike a lot of people who are doomsday sayers, I'm not saying that I'm also not, apprehensive, but I still believe that AI is going to give us back the ability to become more human. It will make humans more human, because the amount
No, but
of time
my question is, will it make humans more unemployed? Maybe we'll come to a time when, mundane tasks are done by AI. Right now, AI is writing poetry and writing mails instead of doing all of the mundane tasks. My question is, before it makes us more human, will it make us more unemployed? That's already a concern we're seeing in some sectors, especially IT, etc. We are hearing that banking might be hit. Our reports show that even sectors such as FMCG or mid-tier, mid-management staff especially will be in trouble because of AI.
So, while your research is correct, but why should we not use the time that we used to spend on, answering, say, 500 calls that we get or 500 messages that we get at the time of, say, any occasion? Why can you not use that time to make the 10 calls that really matter to you while AI answers those particular messages? Why do you not think that people cannot do more productive jobs, jobs that make human connections, jobs that really matter, while the mundane is taken care of by AI? Consider a state hospital. What happens in a state hospital today? If you look at the people who are lined up for the services, and if you look at the state of the doctors hardly get any time to talk to the patients, because they have to do the mundane work of taking down all their symptoms and coming up with a diagnosis on the fly. What happens if AI does a lot of that groundwork and presents the doctor with a patient where the doctor has time to look up and actually have a conversation with that patient? Is it not possible that that diagnosis becomes more refined, becomes better? Why are we not considering the fact that there are a lot of unexplored and unaddressed areas of service that we will now be able to address, because the mundane goes with the AI. The AI gives you the preliminary pieces, and then you can...
And there you go. That's a very important conversation when it comes to AI and the evolution, the road ahead. In fact, we've managed to discuss a couple of IPOs that opened for subscription today out of the 4 that are already open for subscription as of today. But that's all the time that we have on the show. Thank you so much for tuning in.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. This is Hiral Datia and with me is Alex Matthew. An interesting day of trade. We've reclaimed that 25,000 mark yet again in terms of Nifty 50. We're trading nearly at the day's highest levels as we speak. 0.5% gains coming in on that front. Bank Nifty, those slight underperformance is what you're seeing, with gains of around 0.3 to 0.4% there as well, but pretty much inching towards that 56,000 mark. Let's quickly look at sectoral indices as well and see what's happening on that front. Which are the sectors which are actually boosting the markets? It's only defense which is seeing profit booking, and we did have an interesting analysis today as well, Alex, which Anushi brought to us, clearly indicating that defense as a sector has been plummeting. And if you have to look at the valuations as well currently in comparison to where we are right now versus what the forward and the average is looking like, you still have brokerages which are recommending buying at current levels. So I think this is going to be a sector where you will see some bit of an accumulation from a long-term perspective that is happening. So probably an opportunity in the making. But apart from defense, if you look at the heat map, all the sectors are trading in the positive. If we can just quickly pull up that one on the screens yet again. You have oil and gas, 1.4% up move. Auto continues the upward trend. For a second consecutive session, you have infra, energy, and the consumption pack, which is seeing some smart moves. Let's quickly take a look at the heat map in terms of Nifty 50 as well to see which are the stocks which are taking the stride. Tata Motors, 3% up move, strong moves there. Reliance Industries, in fact, we will try getting you details as to which and what are the reasons, what is, actually supporting an up move in terms of Reliance Industries today. Adani Ports, Eternal, Adani Enterprises are a few of the gainers. Hindalco trading under pressure. Grasim, Bajaj Finserv, as well as Power Grid, which are down in trade. So that's in terms of the large caps. Broader markets also, the trends have been pretty interesting.
Yeah, absolutely. But it is a story of Reliance Industries today. Look at the contributors. Let's pull that up as well. We've looked at the heat map for the Nifty 50, but take a look at the contributors. 52 points being contributed just by Reliance Industries, about 1/3 of the contributors right now. And it's turned just a tad bit. Earlier on in the session, you had less gainers than losers in the Nifty 50. Right now you have 30 stocks that are advancing. But as Cyril pointed out, let's also take a look at the broader markets. They outperformed in trade yesterday, the indices, mid-cap as well as the small-cap indices. And today as well, you have the mid-cap and the small-cap indices that are trading at the high point of the day. And I do want to talk about the textile companies, because if at all there is one story to talk about today, it is the measure that was taken by the government to bolster this sector that has been under a little bit of pressure on account of tariffs. Of course, the announcement that came through is the waiving or the exemption of the customs duty on raw cotton that is brought into the country. And this is a shot in the arm for the sector that has seen supply disruptions on account of the tariffs that have been levied, and the announcement of additional tariffs as well that are yet to come about and hopefully will not come about. But let's also take a look at the derivative space. And you've seen that foreign institutions have been a net short for quite a while, and they've been more short than long. But what's happening in the option space as well? Let's take a look at some of those key triggers, and Vansh joining in to tell you about that. Vansh, what are you picking up?
Thank you for that, Alex. So, as we can clearly see, the Nifty is trading with about a gains of about 130 odd points at day's high. So, if we talk about the FI space, now the FI long short ratio stands at 0.11, and which indicates that 90% of the positions held by FIs are in short. So, it indicates a clear bearish momentum coming in from the FIs front. Now, if we talk about the open interest, we see strong call writing at the 25,000 mark for Nifty, which is acting as a strong resistance for the market, and 24,800 mark acting as a strong support for the Nifty, followed by strong put writing. So if we are able to sustain about the 25,000 mark, we can see a follow-up action coming in from there. Now moving on, let's look at the stock specific action. Now we can clearly see long positions being built up for Kotak Bank, NMDC, Varun Beverages, and we can see long and short positions being built up for Polycab, NTPC, Glenmark Pharma, and long unwinding for Divi's Lab, Grasim, ICICI Prudential, and short covering is being seen for BOB, Havells, and Geo Finance. So these are some of the stocks that are focusing today.
Thank you so much for that. In fact, short covering seeing the names like Adani, Total, NMDC, LIC Housing, SJVN and SAIL. These are interesting names, that you are watching out for in terms of today's session. But before we get on to our market conversation, the big story today in Mumbai is heavy rains, and that has led to severe waterlogging and sluggish traffic on multiple routes. And this is causing delays in local trains and flights. In fact, citizens are facing disruption as the city struggles with the monsoon's impact. NDTV Profit is bringing you live ground reports, speaking to people and understanding the on-ground situation to keep you informed and connected with real-time updates. My colleague Anuj joins us live. Anuj, over to you.
I'm standing here in Kurla and I'll just let you watch what the visuals look like here, because you can very clearly see that the water here has not receded even by a bit in the last few hours. Why does this particular place and the waterlogging here become so important? Well, it's for you to see. You see so many people use this road to travel either for their work or for their daily life purposes. There are so many vehicles here which have broken down. People are coming off their vehicles and are choosing to walk instead. One can see that the level at which the water is there is pretty much above one's knees. There are people who are traveling for their work or for other purposes. And because the waterlogging here is so intense that it is not just difficult but clearly impossible for certain vehicles to move. As you can very clearly see on your screen, that is the best bus, right? The bus has been stranded here for last half an hour and it's been here unable to move because there's clearly no way where it can go ahead, and the machinery has also broken down. In fact, that is not the only bus which is broken down here, but on the other side of the road as well you can see another BEST bus with no, it's a stranded bus with no residents inside it, just the driver and the conductor. There is an open gutter is what the residents of Kurla tell us, and they are also here to help people guide them, because unlike what was the situation in other places where there were BMC employees and workers present, there are none of them present here, and there are a few open gutters which make it a very dangerous kind of a situation, because one doesn't really know where the gutter is, because it's tough to make out which is the footpath and which is the road. And of course there are a few gutters, as we have been pointing it out since morning, which are open, and that makes this entire situation, as I said earlier, far more dangerous. Now, looking at the traffic, right, this is the lower lying area of Kurla. On my left hand side, of course, one can see vehicles which are finding it, as I said earlier, impossible to cross through this entire region. And on the other side as well, that is the road that goes to the BKC. That is like one of the most premium commercial and corporate hubs of the city. And right in between, there is this immense amount of waterlogging which has not just slowed down the traffic, but has completely shunned it off.
Absolutely. Anuj, thanks so much for joining us. Do stay safe where you are. And viewers, if you're tuning in, if you haven't ventured out, if you intend to, a few things to bear in mind. Of course, ideally you should not, but if you have to, don't take an electric vehicle out if you can. Avoid it. And if you are driving a four-wheeler that is internal combustion or petrol or diesel driven, if it stalls, then don't crank it, because if you are covered on insurance, this is something that the auto insurance companies make sure to tell you. But if you haven't heard it, this is a PSA for you. Don't crank the engine, or they might not settle any claims that you might have on engine damage.
And to add to this, the interesting conversation I was just having with someone in my coffee break right now was that everyone is actually covering areas which are flooded, but no one is really covering, the kind of, the work PMC people are putting in machines and sucking up the water. So a lot of areas, all of that has been carried out, and I think that's one of the reasons why, though there is a standstill,
at least there
is movement as well. Exactly. So that's going to be an interesting aspect, from a flood monsoon perspective. For how long this continues, let's see.
Yeah, absolutely. You said it. Stay safe is the operative word. Now, let's go back to the latest. And we've got a slew of India strategy notes that have been released as Q1 comes to an end. Of course, the earnings season is over. What are they saying? And Mahima is joining in with some of those key takeaways. Coming in from Morgan Stanley, JP Morgan, as well as Citi. Mahima, I found the targets that they've given for the Nifty 50 quite interesting. JP Morgan, I think.
Yes, absolutely, Alex. JP Morgan has given the Nifty target. Base case scenario, they're saying 26,700, and a bull case scenario, they've targeted 30,000 on the Nifty. So that's with regards, of course, the levels that JP Morgan has given. But Morgan Stanley, I'll start with, earnings growth improved sequentially in Q1 is what they're saying, and that marks a recovery in terms of earnings growth. The beat was driven by stronger than expected revenue growth, exceeded low expectations of analysts. Beat on top line, while margin expansion in line with expectations. expectations. In terms of earnings growth, the breadth improved sequentially while relative stock performance declined on QoQ basis. Likely improving growth coupled with recent developments provide triggers for indices to make new highs sooner than later, and sell side expectations remain low. Should be ready for a beat over the next few quarters is what Morgan Stanley believes. JP Morgan has said that they witnessed largely in-line quarter, high single-digit earnings growth amid global headwinds and mixed domestic macro economic conditions as well. They're saying income tax cuts, lower inflation, policy rates easing, good monsoon and festive demand will lead to further recovery in second half of FY26. In terms of the concerns that remain over the external environment, particularly with regards to US growth slowdown and evolving tariff situation, they are of course keeping an eye out there and being cautious about that. But overall, what they're saying is that EPS growth to be in line with nominal GDP growth in calendar year 25 as well as 26, and they're saying that they reiterate preference for domestics over exporters. So they prefer banks, consumer, removing auto aside, hospitals, real estate as well as defense and power. And like I mentioned earlier, Nifty 50 target is 26,500 and bull case target is 30,000. Lastly, in terms of Citi, they believe Indian equities are set up well with regards to where macro aspects are concerned and valuation premium to emerging markets as well. Q1 earnings largely in line, multiple stimulus measures, domestic flows supportive of sharp underperformance calendar year to date, and June Nifty target they've given at 26,700, and that provides an upside of 7% from here. Plus they're saying that key downside risks could relate to slower than expected consumption pickup. So this is the overall view of brokerages with regards to where Q1 earnings stand.
Thank you so much, Mahima, for that. The targets seem to be absolutely interesting from a Nifty and markets perspective. In fact, let's also get in our guest. We have Mr. Vaibhav Vidwani, who's joining in as well from Bonanza. Vaibhav, good afternoon and welcome to the show. And pleasure to speak to you as always on NDTV Profit. You've just heard my colleague Mahima, who took us through what Citi or a JP Morgan and Morgan Stanley make of India post the Q1 numbers and where they're looking at in terms of Nifty 50 hitting targets. We're looking at a range of 26,000 odd to even at 30,000. How are you reading it? And secondly, what are your targets in mind right now?
So what I expect, I'm also quite optimistic for Indian market. As our government is also taking initiatives. Recently, there is a bill that they are discussing about that they will reduce taxes. So all these factors will support our market, and in our indices, major proportion is of financial companies. So our government is also taking initiatives so that stress can be reduced on those financial companies. So all these factors will support our indices and HDFC, ICICI are the stocks which have delivered very, I will say, impressive numbers, or the numbers as per the market expectations. So these things will support our indices and our market. So yes, we can expect a good upside from our indices in near terms.
Vaibhav, hi. Specifically on the textile pack, because that's something that we're focusing in on, the latest move from the finance ministry to remove the basic customs duty on raw cotton. I want to ask you about that in just a bit, but let me set it up for our viewers beforehand. And I want your view about how you would look at investing in some of these perhaps, and what the implications of tariffs and everything else are. But Mahima, I'll come back to you on this one. What is the announcement and what are the implications? Who benefits?
Right. So, Alex, basically the announcement is that the government has decided to kind of remove import duty on the import of raw cotton till 30th of September. That's 42 days from here. And they've also removed the agriculture, infrastructure and development cess till 30th of September. The rate at which this was charged was at 11%, which has now been removed. So that's a big relief when it comes to the textile companies. And government said that this is a much necessary, move in order to protect the domestic players, as well as and this also relates to the tariff uncertainty that's going on and has been an overhang on the entire textile space as well. In terms of stocks that could benefit from this include Welspun Living, Trident Limited, KPR Mills, Gokuldas Export, Pearl Global, as well as Irwin Limited. Now, in terms of volumes are being seen in these counters today on the back of this news. Welspun Living with highest volumes of around 2.5 times its 30-day average, followed by Trident Limited at 0.42 times, Pearl Global at 0.26 times, and so on. In terms of the analyst recommendations for these counters, Welspun Living has got 6 buys and 5 holds, Pearl Global has got 2 buys, Gokuldas has got 5 buys and 3 holds, and Irwin Limited has got 7 buys. So no sell recommendations for all of these textile companies as to where analyst recommendation stands as per Global.
Thanks so much, Mahima, for getting us that update. So this is one in a slew of measures that has been taken in the recent past to bolster domestic consumption and domestic producers of goods. Incidentally, Hiral, I just saw a note, I can't remember exactly who, but talking about the potential repercussions of the GST proposals, if they do come through, could lead to an uptick of GDP of 0.4 to 0.6 percentage points, which very neatly counter affects
the tariff impact. And to add to that, just staying with the import duty cut that we are seeing in terms of cotton, the interesting aspect is this relief is only limited to 40 days, right? So that is what we need to keep in mind, because this could put pressure in terms of your domestic cotton prices. And if that happens, it's an immediate impact to your farmers, right?
Yeah.
So taking that aspect into consideration, we need to absolutely bear in mind that probably that upside that will come in, we're looking at 40 days, but what after 40 days is something we will have to wait and watch and see. And that is going to be the interesting aspect, because the companies will benefit, but the farmers will not, and that's not in national interest right now.
No, 100%. And in the context of what Prime Minister Modi has repeatedly said in the recent past, that the interests of the farmers will be protected above all else. Vaibhav, I want to come to you about the textile companies. And of course, the question about whether or not these higher tariffs will go through is something that nobody has an answer to yet. So in the context of what we know, how would you deal with this? Would you enter at lower levels? Several opportunities are currently available.
First of all, my view is that in near terms, the companies like Vardhaman Textile, Ambika Cotton Mill, so these companies will get benefit as raw material costs will reduce and their EBITDA margin will improve. But I think so these initiatives are taken so that competitiveness of our domestic companies can improve, as US have imposed 50% tariff and Bangladesh have 20% tariff while Vietnam have 30%. So these are the countries which give us very high competition at international level. So these things will support our domestic companies for the business at international level. But for near terms, these things will support our businesses. We should look at what will be the initiative for the longer term, and as per that, we should take our initiatives.
Right. So, that's with regards to where, the recommendation comes in for the textile players. But we did speak to the management of Pearl Global as well, who's categorically indicated that this is a positive step, and the kind of duty benefits that they get, when they import. And once they import the raw material, that is cotton, and then re-export the finished product to that respective country, that duty benefit is a positive. And the 11% increase that we've seen in terms of the duties or the tariffs, that becomes competitive as well from a pricing standpoint. And Bangladesh has been talking a lot about this pattern, and that's the reason why you will see benefits coming in. Let's quickly listen into that conversation.
Too early to say, but at the same time, I think the advantages should be there. There's 11% tariff on any imported cotton. We do, certain requirements are there from, like say, from the Australia market or from US market to use their cotton. And that's where we were not competitive enough. So this 11% also I think, is a positive direction that should give that advantage. And overall, if the cotton and the fabric becomes more competitive in the global market from India, then that's an advantage.
So that's with regards to where Pearl Global goes and the kind of benefits that you should be watching out for. But moving on, if you talk about the overall auto pack, a lot of benefits that come in on the back of GST. But apart from GST, the other aspect that you are considering right now is the rare earth import ban, or the export ban from China. That is a potential that will be lifted as well. On the back of it, it's a double positive that's coming in for the auto sector, and that's the reason why you're seeing the kind of gains that you're seeing in terms of today's session. Joining us to discuss more, we have Ashwin Patil, Senior Research Analyst at LKP Securities. Ashwin, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, let's club in both the angles. One, you're talking of GST benefits that could be coming in the form of reforms, and your entry-level cars, something below a 1200cc is what will benefit. And two, now you're talking about the export ban with regards to rare earth metals that will be lifted from China as well. Taking these two aspects into consideration, your view, and how do you see benefits coming in?
Well, thanks again for calling me on your channel. First of all, talking about GST, I would say that, just two brackets of 5% and 18% on, various goods in India, and that is a very, very welcoming thing. And as far as the auto pack is concerned, under 1200cc, vehicles will be attracting, in that packet itself. So that is a very, very, positive thing, because earlier it was at about 28%, and, adding some other taxes, it used to, go above 30%, 35%. So that was a taxing thing, and that was also taking a toll on the lower end vehicles as well. For the higher end, that is not an issue, but still for the lower end, about below 1200cc, as you said, that is going to boost demand up to a good extent, because already the lower segment was not doing good in the passenger vehicles. So that move is definitely going to attract higher demand in the lower space. And I would say that there are certain beneficiaries definitely in the auto space, like Maruti, Hyundai, Tata Motors. All these companies will be benefiting to a good extent. So that is a very welcome move, and I think that these stocks which are buzzing since last couple of days on this news, it's quite evident from that. We can see a good boost in the demand, and that segment, I would say, is a good chunk of volume coming from Maruti, like about 35% coming from from this segment for Maruti Suzuki. Also for Hyundai, at about 12 to 15% is coming from this segment. For Tata Motors, also a significant amount is coming from this segment, though they have diversified into the higher now. So I think it's a good benefit for the auto segment.
It would be if once it comes through. Ashwin, I'm just wondering in the interim what happens, because really this is a debate that we've been having here in the newsroom as well. I wonder if you have an opinion on this. You have stock that has been built up by automotive companies at the dealer level. So this gets, of course, it's something that is billed at the factory level, and so taxes are paid to that extent. And this is sitting at the dealership level ahead of the festive season. If indeed these GST reforms come through ahead of the festive season, then you ultimately have dealers that are sitting on higher priced inventories. At least that's the reading that we have. What happens to those inventories? And also, would you have a little bit of hesitancy by buyers to say, wait, let's wait for the GST rates to come through, and would that have a bearing on short-term sales?
Definitely. I mean, people will be waiting for that GST to come through. If it comes before the festive season, then definitely, it is slightly negative for the dealers, because their margins will get hurt, because they are sitting on some sort of inventory, as you said before. And so it depends on the government when they bring it into the foray. So I think that definitely, the inventory which is is built up at dealer level because of lesser demand on the retail side. Though the inventory is being built up by the OEM, so that is going to hurt the margins. But we'll see how it pans out. So we believe that maybe it should come after the festive season, but on short-term basis, definitely there is some sort of concern. But if you look at the longer picture in FY27 and all, this is going to benefit the dealers as well as the OEM.
Interesting conversation that I was having with a couple of car dealers and financiers as well, but they were indicating that the kind of input tax benefits that they could take that will settle down, because cars is not the only things that the dealers are selling. They do write it off with the auto parts and the accessories that they sell, but that takes a long time. The major hit is going to be in the short term in terms of where the working capital of these dealers go, and that is what will get impacted. But taking all the aspects into consideration for auto as a sector and auto Inc. Right now, with the tailwinds that do come in, which would your top picks be?
Like I was talking on the rare earth minerals also, that considering that those companies which are higher on the EV side, because EVs will be benefiting out of the rare earth minerals ban, which may get lifted from China. So considering that certain companies like TVS looks good to us, then Bajaj Auto with Chetak, and Hero MotoCorp, certain companies like TVS looks good to us, then Bajaj Auto with Chetak, and Hero MotoCorp expanding into their Vida dealerships. I think Hero looks good to us along with TVS. And on the passenger vehicle side, we like M&M better than the others.
All right. Thanks so much for joining us today, Ashwin, and for that perspective. Certainly a sector to track going forward as well. But we're joined by Narendra Solanki, Head of Fundamental Research and Investment Services at Anand Rathi Shares and Stock Broking. Thanks so much for joining us, Narendra. We wanted to speak to you about the move in the markets, and we've reclaimed the 25,000 mark. I'm just wondering, in the recent past, of course, in trade yesterday as well, we saw selling at those higher levels. Does that continue, or do you think that we're poised for an up move from this point? Are you going out and suggesting that your clients buy at these levels?
Yeah, definitely. The kind of selling which we have seen in past few weeks, I think it's much respect for the markets in the last 2 days, and even the buying, the bounce back was on the back of positive fundamental news, which was mainly the announcement of GST by the government and the sectors it is going to support going ahead, which would certainly cheer the festive demand. Plus, today's announcement of global geopolitical uncertainty fading out, plus China also opening up its ban on some key raw materials for India. So that is also adding tailwinds to the market. So I think definitely the stock-specific pickings are present in the market post the recent fall, and one can start grabbing those opportunities for the better S2 which is anticipated.
So Narendra, taking the current euphoria into consideration as well, because we are talking about a lot of factors from a macro perspective as well that could be supporting the markets. Do you think this is something which is going to be short-lived, and there could be a knee-jerk reaction that could be coming in specifically because GST will be implemented only post-October? A lot of your purchases from consumer durables to auto that probably will get deferred. And if that happens, your second quarter automatically is going to start looking weaker. If that happens, there would be another opportunity that investors could get to look at buying. So should they wait for this opportunity, or would you advise staggered buying, and what would you advise?
Yeah, definitely. Since the GST implementation would be delayed, so there might be some demand which would be rolling over post the announcement of the GST. But having said that, I think if you see the overall positioning of the market anyways post the Q1 results have factored in that H1 would be weaker than the S2, and the recovery would be only coming in S2. So Q2 somewhat earnings have been discounted by the markets, and the staggered buying in select stocks should be the right strategy. And I think if you also see the flows, domestic flows have remained consistently strong. So don't see any further sharp downside from here. So investors can start looking at stock specific opportunity from here onwards.
Narendra, thanks so much for joining us today. Pleasure speaking with you as always, and look forward to the next chat. In the meanwhile, we have to slip into a very quick break. We are hovering very close to that 25,000 mark on the Nifty 50. More stocks to talk about. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories.
Welcome back. You're watching Profit Buzzers on NDTV Profit. But let's quickly look at one stock, that we've been talking about, which could be a beneficiary of rare earth exports that are being lifted, plus everything that's happening in and around its Sankalp 2025 event. They've actually showcased a couple of models and their outlook going ahead. The stock also see at the day's highest levels with gains of nearly 10% coming in there. My colleague Puneet is standing by to tell us more as to what is he picking up. And we had my colleague Tamanna Inamdar, who did speak to the management, that's Bhavesh Agarwal as well. We'll take you through a few of the excerpts of that conversation. Puneet, over to you.
Well, thank you for that. So definitely we've seen the company host the Sankalp event, which is their annual event on 15th of August. They've announced 6 key measures. The first one was, of course, announcement of integration of the in-house lithium-ion batteries. This will start with starting September of 2025 on 2 models. The Roadster will be the first one. Will get this as well, and it's expected to help the company reduce their cost as well as increase gross margins. The second one was the showcase of the new Gen 4 platform. They've just unveiled the Gen 3 6 months ago, so this will be some time away, but is expected to reduce cost materially compared to Gen 1 by almost 41% is what the company has claimed. The third one is the announcement of the company and foray into the sports scooter segment. They're looking to launch the S1 Pro Sport starting January of 2026 and will be the entry in this new segment. So that'll be very interesting to watch out for. They've announced MoveOS 6, which is the software product sold with the scooter. And why is this important? Because this is a very high margin product for across automakers. So it could be very interesting of what are the new features there. They've also mentioned that they'll be looking at, and this they had announced on the back of the rare earth ban, that they'll be looking at non-rare earth motors as well, which is essentially ferrite motors. So they actually saw that from Q3 they could start using that as well. That was the fifth one, and the final one is the new diamond head motorcycle, which they'll launch. It's some time away, but it'll be very, very premium priced at 5 lakh rupees as well. But my colleague Tamanna Inamdar also spoke to Bhavesh Agarwal inside the factory for the lithium-ion cells and questioned about the PLI scheme and what are the kind of benefits they are getting currently. Listen in to what he had to say.
No, that's a fair question. We have also decided that we will not expand beyond 5 gigawatt hour right now.
Okay.
For the PLI, we had to grow till 20.
Okay.
So, but we're the only one in that scheme who has put up a factory and is producing commercial cells.
Yeah.
So we are engaging with the government and telling them that we might need a little bit extra time.
Okay.
And the government is fairly empathetic because of the complexity that goes with this kind of a manufacturing setup. The fact that it's the first in India. So let's see, but we are very hopeful that the government appreciates our point of view on this. So I think the geostrategic landscape, Tamanna, is increasingly getting more complicated. And I think there's broad consensus that the geostrategic landscape is only going to get more and more complicated over the next few years. As countries now start looking out for themselves, globalization is going through a different phase now. So, and this is also coming at a place where in India's journey, we are looking towards a Viksit Bharat dream, like the Prime Minister has said, where we have to develop ourselves. Now, how do we choose to develop ourselves? It's a very conscious choice we have to make, that we have to invest in technologies of the future so that we can control the narratives of the future, the products of the future, supply chains of the future. Cell and this energy is one of them. Rare earths is another one, and we can see how our neighbors are really using it as leverage against us in a trade negotiation or whatever. The way forward for us is twofold, Tamanna. We have to partner with other countries. It's not as if only one country has the source. We have to partner with other countries, like-minded countries in Southeast Asia, elsewhere, western part of the world. And there are also, we have to leapfrog technologies. So now motors, electric motors today use rare earths. But the whole world has moved to rare earth free motors now, increasingly.
Okay.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. Our entire two-wheeler lineup will, by next quarter, be rare earth free.
Rare earth free lineup is what Ola is looking at. The stock trading at the day's highest levels. In fact, let me get in Akshay Bhagwat from JM Financial as well. And we have Weber Vidwani who's still with us. Akshay, if you have to look at the entire auto pack, 2 consecutive sessions of smart moves coming in, would you still recommend a buy at current levels, or would you say this is the time to book profits and wait for some bit of a correction?
Good afternoon.
So yes, since last couple of days, there has been a very strong momentum upsurge in majority of the auto names. So from here, as you rightly mentioned, should the question be, should I buy at the current market price or wait? So it all depends what time horizon you can give for the trade, because the development in last couple of days in many of the auto stocks is really very impressive and does suggest that there is still some more upside to go. But probably if you give some more holding, probably a month or time frame of holding would do more justice to these trades. So the top two picks here from the charts perspective would be Tata Motors. First of all, if you look at Tata Motors, there is a very strong upsurge in today's trade. We are at a resistance zone of 700, 710 as it currently trades. But the way the overall positioning is, the chances are high the stock is moving for upside till 760. That's the upside you can look for. Downside is capped. There's a good support at 670 and 760 is the target you can look forward to. And Ashok Leyland is the other name here which you can look forward. Again, an excellent chart structure, a very strong momentum which we seen yesterday with the breakout of 127 levels, and there's a continuation in today's trade as well. Here the targets you can anticipate are 145 on a short-term trading perspective. So these are the two top chart picks from the auto space. Rest also will do well, but it's about giving some more time at the current levels where majority of the stocks are placed.
Okay, so that's an interesting comment coming in with regards to auto majors. But let's shift focus and stay with the GST aspect, where we are talking about the impact in terms of white goods. My colleague Shesha is with us to tell us more, because here what we are saying is that there is a potential that after Prime Minister Narendra Modi's announcement on the 15th of August, the reforms seem to have impacted the purchasers of white goods and they have deferred their purchases. Shesha, if you could tell us more about the same.
Right, appliances makers are bracing for a lull in demand over the next 2 months as shoppers await a possible GST rate cut from 28% to 18% on certain products, including air conditioners and large screen TVs. Now, industry executives believe that the revised rates, if announced around Diwali in October, could spur a surge in purchases later in the festive season, especially when paired with offers and easy financing. But until formal announcements are made, the industry is worried that consumers will defer high-value purchases hoping for lower prices, and this could potentially dent demand during peak sale periods such as Ganesh Chaturthi, Onam, as well as Durga Puja. Dealers are already reluctant to stock up. E-commerce firms on the other hand, are reassessing how to go about their flagship sales event that usually kick off, around Navratri. The rate cut is expected to lower the final bill amount by roughly 10%. Manufacturers and retailers, however, are now awaiting clarity on how the government will merge the existing GST slabs, whether state governments are on board with the new rates, and if there would be any additional cess beyond the proposed 18% GST. The retailers also, say that an early announcement before the crucial festive season would have helped them plan their inventory in advance, maximizing their festive impact from the GST cuts aimed at boosting domestic consumption. Key players such as Blue Star, Godrej Appliances are monitoring policy developments very closely. Remember, the festive season accounts for about 30 to 35% of the overall sales for these companies. Overall, the tax reduction is seen as a boon for electronics industry, which has seen sluggish sales for quite some time now. Early monsoons also dampened summer demand for appliances this year. Now all eyes are on when the revised rates will take effect.
Interesting story. Thank you so much for getting us the details. In fact, Vaibhav, let me come to you on this. Taking into consideration that consumer durables were on the weaker side, especially on the way the room air conditioner sales had panned out in the first quarter. In fact, a lot of them have gone ahead and cut their guidance as well for the full year. Are you expecting to see further pressure on the back of this, at least in the second quarter? What would you advise investors to do?
First of all, yes, I am also expecting there can be some stress for the upcoming quarter results. But if we see, consider the valuation part. So valuations are always given on the basis of what will be the revenue growth in upcoming years or upcoming year. So if we consider that, so in upcoming quarters, that demand will also get covered. When prices will decrease, companies will come up with attractive offers and competitive prices, and which will help them to support their revenue and in their revenue growth also. So I am expecting that if these stocks are available at attractive valuation because of stress result in upcoming quarter, we should surely enter into these stocks, because our government support will support their revenue growth in upcoming quarters.
Okay, so valuation still slightly compelling with regards to where consumer durables go. But moving on, the fertilizer space that is in focus as well in today's session. Let's quickly pull up all the stocks. You'll see the kind of moves that are coming in from a company like Coromandel International, Paradigm Phosphates, Chambal Fertilizers, RCF, as well as GSF. All of these that were seeing some bit of a buzz in today's session. And this is because Chinese Foreign Minister Wang Yi has assured Honorable Minister Jaishankar, that China is addressing India's needs with regards to where fertilizers go. But let's understand, how are these benefits going to help fertilizer companies? Varsha joins it with more details.
Yeah, thank you for that. This is actually a positive news, because India heavily, is import dependent when it comes to fertilizers, and China is the sole supplier of, DAP, that is diammonium phosphate, and water soluble fertilizers. And previously, the curb on these fertilizers by China had actually impacted, Indian fertilizer companies or maybe the farmers. Now what are the benefits of this resumed, Chinese fertilizers? One is, of course, because of the more supply by China, we'll see this prices would be stabilized for farmers. So stabilization of the prices is one of the benefits that the Indian farmers and Indian fertilizer companies will have. Also, because of the easing supply by China, farmers will have timely availability of these fertilizers, which will cater to India's national food security. And also this ease of supply will actually complement supplies from Russia and Saudi Arabia. Because of this curve from China, India had moved towards Russia and Saudi Arabia for for benefiting or for filling that gap of fertilizer scarcity. But now, because of this will actually complement, and we'll have more supply avenues. And but which are the companies which will be benefited? One is Coromandel International, of course, and then you have Paradeep Phosphates, you have Rashtriya Chemical Fertilizers, you have GNFC, and basically all the fertilizer companies, because India is heavily dependent when it comes to importing of this fertilizer. So these are all the stocks which will be impacted. But the crucial point is, this is one thing to notice, this will benefit for next crop season, because for this crop season we have already made the agreements.
Got it. So this is a long-term benefit that would be coming in. In fact, let me take a quick question with Akshay as well. Akshay, some good moves that are coming in on a couple of fertilizer stocks. Anything that you would recommend to buy?
Yeah, so I was going through all the stocks which you spoke about, and they look more of a short-term trading pullback based on the news which you just mentioned. Because technically, see, majority of the charts of these stocks are still in a downtrend, and still we do not have any concrete evidence as yet about a possible reversal scenario in majority of them. So if I were to pick one name out of the entire stocks which you mentioned, I think GSFC, Gujarat State Fertilizers and Chemicals, would be one promising bet here. Still the reversal has not been confirmed, but what initially the price volume action is picking up is that there might be a breakout in the making. So if you look at the chart structure, it's been more range bound. There is an important level of 218, which the stock has to surpass, post which you get a breakout scenario. The volumes have been pretty heavy in this stock in the last few days, suggestive of buying intent. And once this level of 218 is broken, then you can look forward for positional upside my target still around 240 to 250 zone. So if a bet has to be taken out of the fertilizers pack, I would like to take it on GSFC post the breakout about 218 levels.
So GSFC post a breakout, that could be a stock you should be watching out for. But that Varsha is still with us. Another stock that is buzzing in trade is Inox Wind. In fact, the company has actually gone ahead and sold a stake worth almost 175 odd crores in its renewable arm. Varsha is standing by with more details. The stock's in gains of little over 3%, Varsha, though cooled off from the day's highs. What are the details that you're picking up?
So basically, Hiral, they sold 49.7 lakh shares of the subsidiary company called, IRSL, which is Inox Renewable Solutions, and the transaction is worth of almost 7,400 odd crores. Now this transaction will be completed in next 7 days. About the subsidiary company, that is Inox Renewable Solution, which forms almost 6% of the consolidated revenue that Inox Wind has, and of course 14% of a net worth that the Inox Wind has. So overall, yes, they have divested a stake of around 175 crore, and this is one of the reasons why the stock is up, or rather the stock is buzzing in trade today.
Thank you so much, Varsha, for that. Inox with little gains over 3% coming in there. Vaibhav, a quick view with regards to where Inox Wind goes. Any view that you have for the sector as well?
If we see in power sector, there are no much newly initiatives which can support their future valuation in near terms. But companies are taking their initiatives which can support. So I will say that the funds that company will get from the sale of their subsidiary, it will support their capex in upcoming quarters, and which will support their profitability. So yes, my view is quite positive for Inox Wind in near terms.
Okay, positive view coming in with regards to where Inox Wind goes. But moving on, Reliance Industries, that's another company to focus on in today's day. 2.5% up move at the day's highest levels. Let's quickly look at the Nifty contributors as well. I think it's contributing a little over 50 points in terms of Nifty 50 today. So out of the 150 points up move, the 50 points contribution coming in from a single stock. And that counter is in focus. Let's head across to my colleague Somit to understand what are the factors that are actually working for Reliance Industries in trade today. Over to you, Somit.
Well, yes, Reliance Industries remain in focus. The stock is one of the top gainers in the Nifty 50, and if you look at the gains that Reliance Industries has clocked today, it is the highest that we have seen since July 2025. Now, what could have led to this rally? Firstly, what is leading to this rally is the fact that there could be value unlocking on cards, and this is because SEBI's recent proposal is to reduce the minimum public share offer in any IPO from 5% to 2.5%. Now, this basically what it does is that, given the fact that Reliance Industries was looking to do an IPO or listing of Jio Platforms and Reliance Retail, and given the fact that the size of both these companies is so big, if 5% of the float would have come into the market, then there would have been a supply overhang. But this reduction, or this proposal of reducing this from 5% to 2.5%, removes that supply overhang that could happen if there's an IPO of Jio Platform or Reliance Retail, and also clears the way for Reliance Industries to go ahead and think about an IPO for both these companies. Now, if you look at the valuations of Jio Platform that currently analysts are valuing, it stands at close to 11.9 lakh crore, and for Reliance Retail, analysts are valuing this unit at close to 9.4 lakh crore rupees. Also, Reliance Industries will be holding their AGM, that is the annual general meeting, on August 29th, and the main focus of this will now be towards any commentary that will be coming in towards the IPO or listing of Jio Platforms and Reliance Retail. So that is one of the reason. The second is the fact that the telecom arm, that is Reliance Jio, has had discontinued the entry-level 1 GB per day online recharge of two of its scheme, that is 209 rupee scheme, which was valid for 22 days, and the 249 scheme that was valid for 28 days. Now, most customers will likely move to the other plan, that is a 299 plan, and that could result into more ARPU that the company can generate from these users. Now, on a 249 plan, the company used to generate an ARPU of close to 211 rupees, and on a 299 plan, they will generate an ARPU of close to 253 rupees, which means that there would be a clear hike of 20% on the base plan for Reliance Jio. Now, assuming that 20% of their users are or were on this plan, and if they choose to 299 plan, then there could be an ARPU uplift for Reliance Jio. Overall ARPU uplift could be as much as 4% as per analysts. Apart from that, if you look at the valuations of Reliance Industries as a whole company, it continues to be trading below its 5-year average. The 12-month forward EV to EBITDA stands at close to 11.3 times, while the 5-year average EV to EBITDA stands at close to 12.6 times. And analysts also continue to remain quite positive on this counter. 92% of the analysts tracking this company have a buy rating. The consensus target price of Reliance Industries stands at close to 1,629, which suggests a return potential of close to 16%. The highest target price on the street is 1,950, which suggests an upside of 38%, while the lowest target price on the street is 1,300 rupees, which also suggests that the downside is quite limited. It's just 8%. That is the lowest target price of 1,300 rupees.
Thank you so much, and that's really comprehensive, Somit, because that helps us understand what's happening with the counter. Akshay, what are charts indicating? Further strength?
Yeah, so if you look at the price chart of Reliance, we had been in a downtrend. So technically still the trend is down, but the last couple of weeks price action and especially the momentum which the stock has caught up today is giving us confirmations that at least a definite price support of 1375 is in place going by the current readings. So yes, although the momentum is up today, it might again resist around 1425. So it will take some time. Right now it is trying to reverse, till no concrete evidence that you have a breakout scenario. So 1375 support, and possibly with some time giving this time some trade, or probably from an investment horizon, I think the stock will again try to get past 1400 levels in the days to come. So hold is what the recommendation will be on Reliance.
A whole recommendation from a technical perspective. I wish I could take a question with Vaibhav, but we're completely out of time on this edition of Profit Buzzers. Thank you, Vaibhav. Thank you, Akshay, so much for joining us on the show and sharing your views. Thank you from the team that put the show together, Alex and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit and stay safe in these monsoon seasons.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies. Building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories.
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, when you look at the markets, the benchmark is gaining over 100 points, but they're still struggling to cross 25,000 level, while the Nifty Bank Index, that is up more than 150 points in trade. But let's go across to Anushi to understand what's been buzzing when it comes to the small cap segment.
Well, thank you for that, Somit. So I'll start off with the benchmark indices since you were just speaking about the 25,000 mark, us being a little bit away from that. So in terms of how the benchmark indices is doing currently, in terms of Nifty 50, we are looking at gains of over 0.4%. Somit was speaking about Nifty Bank, so let's check the levels out for that one as well. In terms of how Nifty Bank is faring currently, up over 0.3% in trade today. In terms of how the overall sectoral heat map is panning out to be, if you are looking at sectors in particular, it's overall the sectors mostly in the green. Firstly, Nifty Oil and Gas and Nifty Auto leading the pack with seeing gains of more than 1% in trade today. Nifty Auto also has been in focus in the past two sessions on the basis of the GST rationalization that we are looking at. While what is not doing so well is Nifty India Defence pack. Now that is down over 1% in this last 1 month or so. It has seen sharp cuts, and a lot of this is attributable to the Q1 earnings as well. So that's in terms of where the sectors is. In terms of how the mid cap and the small cap 250 is doing considerably, mirroring some of those moves that we are looking in terms of the benchmark indices. In fact, Nifty mid cap 150, if you'll pull out that one out, seeing gains of over 0.5% currently, and Nifty small cap 250 up over 0.6% as well. So similar kind of a moves that we are looking at. But let's talk about some of these stocks which are in focus in terms of the mid cap space over here. So Motherson Wiring, Tube Investments seeing gains of over 6 to 3%, while Bandhan Bank also clocking in gains of 4% as well. Now a lot of these auto names are again in focus on the back of China and the China talking about lifting off those export curbs in terms of rare earth minerals as well. While in terms of losers, we are seeing Bharat Dynamics losing some bit of that steam, down about 3%. Kalyan Jewellers, Solar Industries as well, down about 2% in trade. In terms of the small cap gainers now, in small cap space, we are seeing a lot of these textile companies buzzing in terms of how they're considering cuts in terms of the custom excise duty over here. Vardhaman Textile up over 7%. Raymond, another stock, up over 5%. And Electra Green also seeing strong up moves today in trade, over 4.3%. Just on a quick perspective, if you are looking at BSE 500 as well, on the loser side also we are seeing cuts across the board. This is with Intellect Design, Chola Holdings and Schneider Electric seeing cuts of over 3% as well. So this is the overall picture that we are seeing in terms of where the small cap, mid cap indices are doing and in terms of how the benchmark indices are also faring out. But Somit, over to you on this one.
Well, thank you, Anishi, for that extensive market check when it comes to the small cap segment. Well, with that, let's go across to our first management on the show, Vishal Vittal Kamath, the Executive Director with Kamath Hotels India. Sir, thank you for joining us. Firstly, the biggest buzz on the street or biggest news on the street is that there is a possibility of a GST rate cut that could happen when it comes to hotel charges, a hotel where room charges are less than 7,500 per night. Your category or your segment hotels largely come under this category. How are you looking at this news? Was any presentation made to the government, and how much do you see this happening as a possibility currently?
Namaskar. Yes, it's a great news that the entire nation has received from the Honorable Prime Minister on the rationalization and reduction of GST. I think this is an industry demand which has been there from ever since the inception of GST coming in, with various slabs coming in. Ultimately, the goal is to have one nation, one tax, not one nation, multiple tax, multiple slabs. So in this direction, I think it's a great move. This will also spur a holistic. See, tourism is not only about hotels and restaurants, it's about an entire ecosystem change. And what we've seen is that this will free up a lot of cash flow and a lot of savings for industry and individuals alike. So I think we'll benefit greatly in the long run and in the short run.
If you could also give us some idea of how much percentage of your rooms fall under that category, that is less than 7,500 charge per night.
We basically have a limited number of hotels which are under the 7,500 category, but the overall dynamics which we see is that there could be a overall rationalization of all slabs. So in this particular case, I think it's a great move. Today, around almost 70% of our business, 65 to 70% of our business is from the rooms, whereas 35% is from the F&B. Even within the F&B, a lot of it is in the 18% because Orchid Hotels being a five-star segment, Fort Jadavgarh being luxury, and then we have even our Era by Orchid in Ayodhya or Mumbai, which are all in the 7499 and above category. So overall, I think we'll benefit greatly, but it's not because there's only a cut in the GST. Cut will definitely spur growth, but overall people are still traveling. Overall, people are buoyant in terms of the holiday season. We had an excellent Independence Day. Yesterday, we signed another Era by Orchid in Goa. There Panchgani Orchid Hotel will open on September 15th, as will Orchid Hotel Dehradun, Dwarka. Not Dwarka, sorry, Rishikesh, whereas Dwarka is also opening, which is an Era by Orchid in September. So you see the kind of buoyancy that we have as an industry and as Kamath Hotels, and that same sentiments is carrying forward.
Also, the recent pack that you signed for a luxury hotel in North Goa, could you share some more details on how much room capacity, how much room are we expecting that you're launching here? Any more details on this property?
So it's just been signed. It's not a luxury property. It's a business hotel at Porvorim, and that's a 44-room hotel, which basically is there. Apart from that, there are various other things which are also happening. Like I said, the Orchid Hotel in Panchgani, that's a 72-room, that's an upscale hotel. Then we have Era by Orchid in Dwarka, which is the upper mid-market premium type hotel. Then right next to the temple also. So we already have the Orchid Jamnagar. Then we have opening up in the month of December. As you can see, we have a big lag in terms of demography, because today the biggest challenge which is there is that we have to see the overall, we don't want to be dependent on one place. Today, Mumbai is raining heavily, yet the occupancies are good. But if tomorrow something else happens, so we have an overall national chain to deleverage us.
Hi Vishal, this is Anushi joining in as well. I'm just looking at in terms of your expansion strategy, wherein your target is to reach about 25 hotels by the year end. Just want to get perspective in terms of new openings and signings. How do you proceed in terms of the overall strategy on that front? Is it on the basis of asset light? How do you decide if it has to be an asset light or a own property? If you can give us more perspective on that front.
So, firstly, our target is to have 30 operational hotels by this 31st of March, not 25. 25 is already what we have in hand. 25, 26 is already what we have in hand. But Porvorim was not included in that, as with not many others which are, once they get signed up, we will share the good news with you particularly. So, 30 hotels by this year. Most of them are all asset light. Either they are management or they are revenue share. because this is basically something where very few hospitality players are still keen to look at revenue share, whereas we are open to it because but the product has to be such. So qualitative product, qualitative owner, the mindset should match, and based on that, this is apart from the other hotels which we have in pipeline, like our Jagannath Puri. We have Orchid Hotel, which work is in progress. We have certain other locations where work is going on. So this I'm only talking about 30 operational hotels, which will be by 31st of March.
Right, sir. Sir, some qualitative details if you could share on how have been the bookings so far in the second quarter, and how are the forward bookings looking like for Q3? How's the wedding season? How has been the pickup in bookings for the third quarter, which is, I guess, the key season for you, given the fact that weddings also line up during that quarter?
So this year will be a bonanza year for the industry. The reason being that Ganpati and Diwali both are preponed because of the calendar that we follow. The Hindu calendar basically this year has these events preponed as compared to normally where we are used to in the November early week or October end. This time Ganpati also, as you are aware or should be aware, is now only on 27th of this month in August. So it's not in mid-September or third week of September, which would have spoiled the September week in terms of, because Ganpati being a very important holiday for those, especially first 5 days, and then on the 10th day, business does get affected in Maharashtra and few of the other states like Andhra, like Hyderabad and others. So this is basically where the business on books is very robust for the month of September, October, and November, because of the Diwali getting preponed and the Ganpati getting preponed particularly. This is, I'm just giving examples. There are various other festivals also. So the industry will have an excellent long operational opportunity in these months. So we'll have a very good third and fourth quarter.
So that's in terms of the bookings that we are looking at, and this is, I believe, with a blended ARR target of 7,500 or so. Just want to get in terms of occupancies also, what's the kind of blended rate that we are looking at by the year end?
So we definitely will target for the maximum occupancy. Occupancy cannot be, we can target to achieve it. And based on what we are seeing right now, we are seeing definitely better demand than last year in terms of the wedding segment or in terms of the MICE. And even in terms of corporate movement, there has been, though the first couple of quarters have not been as good, they could have been much better. Even though Kamath did exceedingly well in the first quarter, the challenge of Operation Sindoor, and that's okay because it's a part of our national duty. But it did affect the month of May and others. And even July wasn't as great as it should have been compared to what we're used to, a growth on growth. So now our industry is no more happy with stagnation. So if the month is a little flattish or stagnantish or even a minor growth, we want more. And I think that's what our shareholders have come to depend, expect of us.
Lastly, sir, if you could share some more details regarding the merger that you're looking to do for a land parcel near the Vadhavan port. What is the value of this land, and how could it benefit a Kamath Hotel shareholder?
So the biggest plus point has been that when we did this acquisition merger, basically it's a promoter-owned company, which we were looking at and want to unlock its value. And then after that, PM Modi announced this bonanza where there is not just a port coming, but even the airport. And not only is it an announcement, MADC has even floated tenders for it in terms of its various. So not only is it a port, but a third airport coming around Mumbai, which will basically make a big difference in the city to MMR major region and this property. And this is a 16-acre, one-piece land highway touch and water touch of the Vaidyanatha River. So the property value has definitely become 3 times to 4 times. So as a shareholder, definitely, because the merger would be based on the old value, but the value which has been unlocked is a big plus point in that regard. So we are very buoyant, and we've got good feedback on it. Initially, we had not communicated very well, but afterwards, as time has gone by, as analysts and investors in our various meets have spoken, now they are very much convinced and they understood what it is, and it's a overall win-win transaction for all. And I'm looking forward to that consummating once we get the approvals from the various forums such as NCLT and others.
Right,
We've
sir.
already got the BSc and NSC approval, so it's now only about a process. So thank you.
Right, sir. Just wanted to know this for clarification purpose. Suppose the land is merged into Kamath Hotels is when you will start developing the hotel, right there?
Correct. Not just hotel, but it's a mixed use, 16 acres. It will be not prudent to only make a hotel. There are various real estate opportunities to unlock over there because, as you know, Palghar and that whole belt, Vadhavan, Palghar, Manor, that's basically where our property is at that junction. and there's a metro coming over there also. A metro line is supposedly being extended from there to Mumbai to Vadhavan, because obviously just like how Navi Mumbai Airport, the metro has been extended and is going to start soon in the next odd year to Navi Mumbai to Mumbai. Same way they want a metro from Vadhavan to, so our falls on that main patch. So it will be a real estate unlocking, not just a hospitality play, and we will have the right kind of partner because it's 16 acres, so it's a large development project opportunity which we are discussing.
Right, sir. Thank you, sir. Thank you for joining us and explaining the future prospects of Kamath Hotel going thereby. Well, with that, let's move across to Mahesh Ojha, the market expert for our show today. Mahesh, coming to you on Kamath Hotels, the prospects look quite promising. At this valuation, would you advise your clients to go ahead and buy Kamath Hotels?
I think this is a good opportunity to add Kamath Hotel on these level. I think a stock has a much more potential. Either they should develop the land or either GST rate cut. Both are the positive for the hotel industry as well as small player like Kamath Hotel. So we are optimistic for some more upside from 12 month. I think 400 level could become easily. But some consolidation could come. But yes, overall 400 level, we are optimistic for target.
That's the view for Kamath Hotels is what we are looking at. But another stock in focus is all-time plastics, and now this is a major IKEA supplier which marked a strong debut in terms of where exchanges were concerned on 14th of August. This is with a 14% of premium. What happened yesterday was investor Manish Chokhani acquired a 0.53% stake for 10 crore rupees in the company. Mahima joins us with more details as to what is happening with the company.
Right, Anushi. So as you rightly mentioned, All Time Plastics is one of the major suppliers of IKEA, and the stock got listed on 14th of August at a 14% premium. In terms of the recent news flow, I think the reason as to why the stock is seeing buzzing is because Manish Chokhani has acquired around 0.53% stake for 10 odd crores. The deal details are around 3.5 lakh shares were bought at 287 a piece. In terms of where financial stands for this counter, well, revenue has grown from around 443 crores in 2023 to around 559 crores in 2025. PAT has grown from the 28 crore mark to around 47 crore mark in FY25. And lastly, EBITDA has grown from 70 crores in FY23 to around 101 crore in FY25. Now, in terms of where the proceeds will be used, well, some of them will be used to repay debt around 143 crores, and the others will be used for purchase of equipment around 114 crores. So this is the overall view of what's happening with All Time Plastics.
Okay, thank you for that, Mahima. Mahesh, your view on this stock? It's a recent listing, but have you tracked this one?
Yes, it's a recent listed company, but I think stock has some kind of upside potential is there. 360, 375 level could become in a near term. That could be a 6 to 9 month horizon. Yes, quite positive stake taken by Manish Chokhani. So that is also positive for the stock price. So I think stock has a potential for some more upside. Also, we need to watch quarter-on-quarter numbers. But from current view, 360, 375 level could become in 6 to 9 month horizon.
Right. A lot of small cap textile stocks have been buzzing in trade, and this is after the Finance Ministry has removed the basic custom duty on raw material. Mahima joins us again with more details on the same.
Right, so basically what has happened is that the government has decided to remove the import duty on the bringing in raw cotton material, and the previous duty that was imposed was at 11%, which has now been removed till 30th of September. So 42 days from here on, there will be no import duty imposed on import of raw cotton. In terms of why the removal, well, it's a temporary relief given to these textile companies on the back of everything that's happening around tariffs, and textile as a sector as a whole has been impacted because of the uncertainty in tariff. A lot of counters are buzzing on the back of this. There's Vadhavan Textiles, one of the top gainers in the entire textile space, seeing upside of around 7%, followed by there's Gokul Das, KPR Mill, as well as Pearl Global, all seeing good gains in trade today. Arvind Limited as well as Welspun Living seeing good gains on the back of this news. So this is the overall view as to why the entire textile space is buzzing in trade today. Of course, there's higher volumes also coming into these counters on the back of this news.
Right, Mahima, thank you for giving us all that information. Mahesh, coming to you on this textile space, any top picks here? How are you looking at the overall sector, given the fact that on the one side there is this negativity when it comes to Trump tariff, but then domestic factors are looking quite optimistic here?
See, if you are looking from a price value-wise, the Welspun is good value-wise, good fundamental buy can be Welspun, Vardhaman, as well as Gokul Das. These three are top pick, can be from this sector. And I think these stocks have some kind of upside potential is there. That could be 15 to 20% if any positive news coming on this sector from tariff perspective. So that could be keep in mind. But yes, Welspun, Vardhman and Gokuldas are top pick.
Okay, so those are the top picks in the textile space is what we are looking at. But I want to talk about HLE Glasscoat now, and this is a stock which is currently locked in the upper circuit, up 20% in trade today, and this is on the back of a acquisition news that we are looking at. Once talk to us about what is this acquisition and what has resulted in the strong up move.
Right, so as you rightly mentioned, it's on the back of the acquisition. Now the company's arm has completed the acquisition of certain specific assets of Omras, a German company, and specific shares of Omras store, again a German company. Now if we talk about the details of the acquisition, the Omras is involved in the manufacturing and distribution of glass-lined and enamel tanks, etc. So if you talk about the cost of the acquisition for this stands at 28 odd crores. And if you talk about the key benefits to the company, so basically this will enable the company to expand its geographical reach into Europe and Middle East, and this will also mark the immediate entry into high growth infrastructure segments like transport tunnels and renewable energy storage for this particular counter. If we talk about the results, the company recently reported its Q1 numbers, and what we really stood out was the EBITDA that was up 72%. So clearly this is what the overall picture is looking like for HLE Glasscoat.
Okay, thanks for that, Vansh. Mahesh, coming to you on this counter, what's your view?
I think company has posted good number as well as the acquisition are on positive side, and number in a small amount of acquisition has been done, and that are opening for global presence of company. So I think that is positive. Some more upside could become 575, 600 level could come in 6 to 9 to 12 month horizon. So if any downside, that could be a buying opportunity.
Buying opportunity is what we are seeing for HLE Glasscoat in terms of if there is a downside opportunity. But now let's shift focus to the water infra space, and Delta Water and Infra Solution is one stock which is buzzing. We are seeing gains of over 13%. Now, in fact, it did hit a 52-week high as well in trade today. If you pull out the stock performance over different periods, 1 month it's seen about 5% of an up move, 6 months up over 20%, while in 1 year it is clocked in about 14% of gains. What to essentially talk about its first quarter results, with that being the latest spec that the company came out with. Over here, we've seen about a 36% of a growth in terms of where the revenue is concerned. Margins, however, did see 200 basis points of a contraction at 33% as compared to 35%, while net profit was up over 41%. Order book positioning, if you are looking at that, stood at 594 crore at the end of June 25 quarter, with the latest order being worth about 183 crore, which included about 7 projects in terms of irrigation as well as road projects as well as subcontracting works for water management as well. The company currently has about 21 ongoing projects in a similar field, and the management expects that for FY26 the total revenue should stand about 300 crore. This is with the expectation of a 30% growth thereon from FY27 onwards, and an order inflow of roughly 1,000 crore for FY26 as well. It's an interesting company to look out for. Mahesh, coming to you in this for this company specifically, just want to understand your view for just Delta Water. If you have any top picks in the space, there's companies like Enviro Infra also, which has seen a couple of recent order wins, as well as Concord Enviro. So what do you feel about these recent listings in terms of water infra space that we are seeing?
As well as you said, Enviro Infra looks good from these level, and if you're looking from a Delta Water, order book is very good, and number of results are given very good. So I think any downside nearby 350, 360 is a good opportunity. Upside could be could have kept near 460, 475 from a 6 to 9 month horizon. So I think still stock has some kind of upside potential, but yes, any downside is a good buying opportunity. That could be area 350 to 360 zone. So from current perspective, yes, some kind of upside potential is there. So you can look on Delta Water, and from from our perspective, Enviro Infra is a good pick from this space.
Right. Well, yet another stock that has been buzzing in trade is Bellrise. The stock is up 11% in trade. What's been buzzing around this counter? Let's get in Puneet with more details on the same.
Well, thank you for that. So there could be multiple triggers here. You know, the recent one being that the rare earth magnet issue, likely China is, taking off the ban for India specifically. And while conversations are happening, at the national level, we could see the auto as well as the auto component players specifically getting benefited from this. In the Q1 conference call, the company did mention that roughly about 5% of the revenue comes from EV OEMs, and that could get slightly impacted if the rare earth magnet ban continued. That is one of the key positives coming out of the discussion between India and China. The second trigger could likely be about the GST reduction, which we've seen on automobiles potentially coming into the next few weeks. Now, yesterday we saw a very sharp up move on stocks like Endurance, Gabriel Tech, amongst other auto component makers, and today it seems to be Bellrise's turn, because while we've seen a consistent rise in share prices of those, the valuations are on the expensive side for some of the names that I just mentioned. But for Bellrise, the IPO came at 18 times price to earnings, and someone like a Jefferies is also very bullish on the stock. They initiated coverage a couple of months ago, roughly around 135 rupees per share is what their target was, but the stocks been flying and currently over 150 now. Despite this up move, and with the issue price being just 91 rupees per share, the stock's still not very expensive compared to the other players. It's trading at 25 times price to earnings for roughly about FY27, so there could be some up move going forward as well. And just a couple of mentions on Q1 results. Revenue grew very strongly at 27%, and the net profit was up 56%. So keep this one on your counter. Could be very interesting going forward in the auto component space.
Jefferies did come out with an initiating report with 135 target, but they did hike the target post the Q1 numbers to 160 rupees. Mahesh, coming to you on this Bellrise, post this up move, do you think the valuations are quite expensive for this counter?
I think valuation is quite okay, and some kind of upside potential could come in near term. But yes, from these level we can see slow and steady upside. I think stock can touch 175 odd level in near term. After that, we have to watch quarter-on-quarter numbers. But yes, from current perspective, still some more upside are there on counter.
Okay, thank you, Mahesh, for that. With that, it's the end of the small cap business edition that we are looking at. But stay tuned to India Market Close coming up next.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Welcome, you're watching India Market Close here at NDTV Profit. I'm Mahima Vacharjani. With me is Neeraj Shah and Harsh Saita. Let's take a quick look as to how the markets are doing. Of course, off from its day's high point, but the Nifty 50 trading around 0.3% higher, the Bank Nifty trading around 0.1% higher. So largely flat. The Nifty is actually testing that 25,000 levels and trying to reach there, but it seems unlikely that it will touch that 25,000 mark again today here. Let's take a quick look as to how the Nifty heat map is looking like right now and see what counters are doing in trade today. Tata Motors leading the pack up 3.4%, followed by Bajaj Auto, Hero Moto. So again, it's the auto pack that is seeing gains about second day in a row today. There's also Reliance which is up 2.5%, followed by Adani Ports, Adani Enterprises doing well in trade today, up 2%. Kotak Mahindra, Tech Mahindra up both 1.4% and Eternal also seeing gains of about 1.4%. But something that's not doing well, Bajaj Finserv down by about 1.2%. There's Grasim which is down by about 1.1%. Dr. Reddy's down 1%. BEL, Power Grid, some counters seeing a downtick of about 1% each. Let's also try to see the sectoral heat map and see how sectors are doing. And there you go, Nifty Oil and Gas up 1.4%, followed by Nifty Auto. Seeing gains of about 1.3%. Then there's Nifty Media, Nifty FMCG also seeing gains of about 0.8%. But something that's not doing well clearly today is the Nifty Defense, which is down by about 1.2%. Nifty Pharma also down by about 0.3%, and Nifty Finance also down by about 1.1%. Let's try to pull up the advanced decline ratio, because that will give us a picture as to how the broader markets are looking like, and we'll get in Harsh also to tell us as to how mid-cap 150 and small-cap 250 is doing. But Harsh, the advanced decline ratio still skewed towards the buyers, 1500 odd advances versus 745 decline. So that ratio is still 2:1.
very healthy. In fact, when you're looking at the way the Nifty is tilted, the Nifty 50 constituents, let's pull up the heat map over there once again and just compare it with the way in which you're seeing the breadth on the broader markets. You're seeing good strength. Let's pull up the Nifty mid cap, and that's showing some bit of resilience, some bit of outperformance. So is the Nifty small cap. 0.5% higher on both of those. Some big movers. Let's pull up the BSE 500 top gainers, top losers. And those are, of course, some big ones. HLE Glasgow from the even from the low of the day has seen a stupendous move, 20% higher, currently locked in upper circuit. Jamna Auto is absolutely flat. Again, it's one of those stories where you're seeing an excellent move intraday on some of these names, Jamna Auto, Divyani as well, among others. In terms of the losers, both those holding companies, Bajaj and Chola, sitting in the red, and from the high of the day, again, we've seen nearly a 5% fall on both of those. We'll discuss some of these names, of course, but let me bring in Kush right off the bat to give us a perspective on both the Nifty as well as the Nifty Bank. Kush.
Hi, Harsh. First, a very good afternoon to you and to all the viewers. I think the 50 DMA level of 25 is acting up as a bit of a resistance. Yesterday also the high was close to that mark. Today also, if you see, the Nifty has retraced from that mark. I think the global news has done the heavy lifting. I think it's perhaps some figure from the international side that if that does come about, then you could see the Nifty not only perhaps cross this, but surge past this. And the next level that I'm looking at on Nifty is 25 to 25, so about 200 to 50 points higher from here as well. The bias remains positive. Mild bit of caution is that the PCR is already at 1.2 and you're about a couple of days from the weekly expiry. So maybe some consolidation, a mild pullback. In fact, it could be healthy and give you a better risk reward ratio for a long position. So yes, on the whole, the view on Nifty remains positive. As far as Bank Nifty goes, I think there is some sluggishness and it's very apparent. Yesterday also it retraced from the 56,000, 56,150 mark. Today also, if you see, despite the kind of flattish but greenish move in the green, it's not able to take out the previous day high, nor is it able to take out the 20-day moving average. While the bias here also remains positive, I wouldn't suggest creating a long position. It's more of a hold. So if you have a long position on Bank Nifty, you could hold. Nifty, as I said, you could create some positions now, perhaps even on pullback. So yes, all in all, it looks constructive. Nifty preferred over Bank Nifty even now.
How quickly are you expecting this move to 25,200, 25,250? That's the kind of number you're looking at. How quickly do you expect the Nifty to get there? Just trying to understand the swiftness or the possibility of that, of the move that you're expecting.
So Harsh, one, it is largely dependent on some more news flow. Now that remains to be seen. When does it come about? It could be anything from the Russia-Ukraine settlement or maybe some more positive developments on the domestic front. But it looks like perhaps this expiry, the weekly expiry that we're looking at in the next couple of days, we could be in this band and then perhaps move to a range, which is higher than where we are now, so 25,000 plus levels. So maybe up until this expiry, we might just hold up, and after that, you could see this, up move. But for that, Nifty has to cross above 25,000. In fact, 25 if I'm being a little more accurate from technical standpoint. So give it a couple of days at least. Maybe this weekly expiry might just pass.
What about your top picks for the day, Kush?
Hi, Mahima. Going with both the long calls. In fact, one of them is an update. Yesterday, we had a long call on Eicher Motors. Did rather well. The first target of 5,900 comfortably achieved. Even 6,000 was crossed yesterday. Today also, as you mentioned, the auto pack is doing well. The stock is holding up ground and gaining some more. So yes, it's a continuation on Eicher Motors. The second target of 6,051 also intact, and even for levels of 6,200, you could continue to hold on to this one. And now trail your stop losses to the initiation price close to 5,800 mark. The second one is Asian Paints. The stocks actually had a very interesting run. Now I know this is not a trader favorite counter per se, but with the kind of momentum that it's building and the accumulation that it's seen, I think happier days are ahead for Asian Paint investors and traders. For now, for targets of 2650, 2720, with stop loss around the 2500 mark, Asian Paints remains a long.
Okay, some flashes on your screen, Kush, before I go to the next question. India's robust growth has constructive impact on credit metrics is what S&P's rationale for the upgrade is, and there are various factors over the past decade which has led to this upgrade is what they're saying. So they're not calling this something which is near term or maybe over the last year or two. They're talking about the big picture. They're saying that the last decade is what they have analyzed and built in while they've upgraded their ratings. Of course, that was the big upgrade which came through as well. Kush, the auto pack, that's the one pack which is really standing out. Couple of days it has stood out. We have spoken about the likelihood of this being deeply oversold as a sector as a whole. How much of this move is sustainable and possible further gains? Top picks.
So it looks like this is sustainable. A couple of stocks where I would suggest some caution or even some profit booking for that matter would be TVS Motor and Maruti. Two broadly the same segment but two different sub-segments. Maruti, with the kind of stellar gains that it made yesterday and continuation today, has gone into overheated territories. While this is a very clear breakout and the up moves might sustain, I think some profit booking is par for the course if you had held it on for some time. A re-entry near the 13,700, 13,600 mark is warranted. So yes, this change could well sustain, but on profit booking, similar on TVS Motor. The stock was anyway doing well yesterday, and today's up move puts it in overheated territory. So maybe some taking some money off the table makes sense. Now, if you want to still invest or trade in this sector, I think Eicher Motor, the stock that we just discussed, still makes a lot of sense. Still some distance away from the overheated territories, and a perennial all-time favorite, Mahindra & Mahindra. It's already seeing some profit booking. I think if it dips, even further closer to the 3,300 mark, 3,320 mark, it will make a very it'll make a very exciting entry point. So Mahindra & Mahindra and Eicher Motor, still a good bet. Take some money off the table on Maruti and TVS Motor and re-enter at lower levels.
Kush, one counter in the auto space that's really, taking strides today is Jamna Auto, though a 4,000 crore market cap company, but seeing gains of about 13% and no fundamental trigger as such. Any particular reason as to how that chart is looking in terms of where Jamna Auto stands and what is the support and resistance that you're seeing?
This could well be the case of rising tide lifting all boats, right? The entire sector is doing well. Why should the auto anchs not participate as much? I think more of that. The stock was consolidating. Honestly, there wasn't too much of a trigger as well in this, apart from the fact that it was holding ground around the 200-day moving average. If I had a position, I would actually look to offload and exit, or even book partially, because this 105 to 108 kind of zone is a medium-term supply zone, medium-term resistance zone for the stock. So immediately the resistance is at 108. If I book profits and if I look at a re-entry mark, I think 99, 90, those levels, those zones would be an interesting level to re-enter if you wanted to, book now and perhaps consider a re-entry.
Just Harsh was mentioning about the rationale for S&P upgrading India. There are more flashes coming in. S&P is saying that the Indian government debt burden to remain high in coming years. But what they're saying is that India's interest service burden remains onerous. And what they're saying is that they expect India's interest service burden to gradually decline. And that is one of the reasons as to why they've upgraded India. Those flashes are coming on your screen right now, as you can see. Kush, with regards to some other counters that are doing well in trade today, actually Glasscoat is one of them. Anything that you're picking up on the charts?
No, I think this is a good idea to perhaps take some money off the table, locked in upper circuit. So you might want to perhaps give it one more day, but I would suggest booking at least partially 25%, if not more, and then holding on to the rest because it's locked in upper circuit. You never know, it might hit some more higher levels tomorrow. But I think this is where you start to take some money off the table. This has also gone through a longish consolidation phase of about 3.5 months, and then the breakout's coming about. So yes, now is a good time to start taking money off the table. If I can, just quick 20 seconds on a stock, GPIL, Godavari Power. The reason I mentioned that is because we had discussed this stock twice in the last week. First target 205, second target 212. In fact, the stock did so well that we even came and shared an update on this with a third target of 219. The high that it's made today, is just about 219. It's just crossed that. So yes, if you have a position, I think it's a good idea to book 50% and hold the rest with a trailing stop loss at 212. The reason being that today also, despite the kind of up move that it's had today and in the last 5 sessions, the volumes seem to be picking up, suggesting there could be some more upside.
Okay, stay on Kush. Lots more to talk about, as Mahima spoke about that upgrade as well. And this is the most important line, right, on your flash, on your screen, that various factors that have been done over the last decade have led to this upgrade. It's not a one-off, and which is why I think Pankaj Tibrewal in the morning was talking about this, guys, that this is not a because this has happened. I think the country has the flexibility to go out and do some leeway on the fisc in order to stimulate the economy, because this upgrade that has happened doesn't get changed just because the next 6 quarters India might spend a bit more in order to revive or do more on the economy. Let's put it that way. So keep that in mind. What might hamper the economy though is this periodic bursts of rainfall, right? Not really, but at least Mumbai, where we are right now, heavy rains have led to some serious waterlogging in Mumbai. Local trains, flights, etc. are disrupted. There are disruptions. NDTV Profit is bringing you a live ground report, or in fact live ground reports through the day, speaking to people and understanding the on-ground situation. My colleague Anuj joins us live. Anuj.
I'm standing here in Kurla, and I'll just let you watch what the visuals look like here, because you can very clearly see that the water here has not receded even by a bit in the last few hours. Why does this particular place and the waterlogging here become so important? Well, it's for you to see. You see so many people use this road to travel either for their work or for their daily life purposes. There are so many vehicles here which have broken down. People are coming off their vehicles and are choosing to walk instead. One can see that the level at which the water is there is pretty much above one's knees. There are people who are traveling for their work or for other purposes. And because the waterlogging here is so intense that it is not just difficult but clearly impossible for certain vehicles to move, as you can very clearly see on your screen. That is the best bus, right? The bus has been stranded here for last half an hour, and it's been here unable to move because there's clearly no way where it can go ahead, and the machinery has also broken down. In fact, that is not the only bus which is broken down here, but on the other side of the road as well, you can see another BST bus with no, it's a stranded bus with no residents inside it, just the driver and the conductor. There is an open gutter is what the residents of Kurla tell us, and they are also here to help people guide them, because unlike what was the situation in other places where there were BMC employees and workers present, there are none of them present here, and there are a few open gutters which make it a very dangerous kind of a situation, because one doesn't really know where the gutter is, because it's tough to make out which is the footpath and which is the road. And of course there are a few gutters, as we have been pointing it out since morning, which are open, and that makes this entire situation, as I said earlier, far more dangerous. Now, looking at the traffic, right, this is the lower lying area of Kurla. On my left hand side, of course, one can see vehicles which are finding it, as I said earlier, impossible to cross through this entire region. And on the other side as well, that is the road that goes to the BKC. That is like one of the most premium commercial and corporate hubs of the city. And right in between, there is this immense amount of waterlogging which has not just slowed down the traffic, but has completely shunned it off.
Well, it's tough times for a lot of pockets. Hopefully this will get resolved soon. And viewers, while this is in Mumbai, we hope that wherever you are in the country, rains are nowhere as bad as they are in Mumbai currently. I mean, rains are welcome. Such heavy rains sometimes disrupt. Okay, is the market out of the disruption zone? I think that's the question that we posed to Anu Jain. She's president at 361 Wealth, joins in right now with her thoughts. Anu, great having you. As always, thanks for taking the time out. And I wonder, Anu, if to your mind, what's happened over the weekend, since Thursday afternoon, and then the PM announcements and then subsequent meetings and that takeaways from the global pieces as well, have they changed the tone and texture of the market? It was a market that was in a slide downwards. Has that changed, and is this now a market which, if not a buy at current levels, remains a buy on dips?
Well, yes, I mean, the flavor with which you closed on Thursday looked like you were going to have a gap down on Monday. Had the PM not announced what he did on 15th, we would probably have opened another 150 points down. Given that also, if you look at the way market cruised yesterday to 25,000 plus, but couldn't stay there, and then kind of receded back from there then fought back. I think we're still going through that resistance. But what I'm seeing is that a lot of people who want exit at about 25,000, whether it is people who are, international FIIs, whether it's anybody else, it's giving them an exit. When the market gives people an exit, I think that's a very positive sign for the medium term. It may not be in the next week or 2 weeks that you may see a huge breakout, but I think the setup of consolidation is definitely happening for the next 8 to 10% to happen. It's a matter of time. Given what GST has kind of done, or what's expected out of it, I think maybe you may have some consumption which may get delayed by a quarter, but market will kind of discount it a quarter in advance because that's what the market does. So I think personally, as you're saying that maybe it's a buy on dips, I don't know how much dips are now left. Maybe it's just going to consolidate in this level. And I expect the Bank Nifty to kind of take the lead. And once you see that moving out of that 26,000, 56,000 zone, probably the action on Nifty also would be there because we know that 25,000 to 25,300, those 300 points are all resistance. Now, whether we take a week to consolidate and cross that or a month, it's in anybody's hands. But overall, I think, yes, the worst is over.
That's interesting. Anu, that's coming from you, that's really, really heartening. Now, I heard you say that you don't know when does the next 8 to 10% upside come. It's difficult to time it correctly, but you reckon it happens before Diwali?
Honestly, nobody can predict that, but it seems that I would be ready to take that call technically once it moves over 25,300. But I think I would rather just buy and sit rather than try to time it to that perfection. We think that banking financial seems to be the best place to play that. As I said, the Bank Nifty looks the most poised for it, NBFCs. So rather than try and time it that perfectly, I would just start accumulating, maybe not in one go, but over a period of time. And if there is a breakout, then you can, do a lumpier investment at that time.
Right. Anu, this is Harsh here. Trying to make this conversation more broader. We've seen some traction in auto. What was it looking like prior to the action that we've seen, and what's the expectation going forward?
So if you're making it broader, I'll make it even more broader. The fact remains that consumption has been on a weak note for quite some time, be it staples. We've seen, in fact, autos were one of the places which was not so badly hit. And given what we are seeing in the IT sector and what we're expecting in the IT sector, unless there's a turnaround there, be it real estate, be it auto, be it luxury goods, everything would take a hit. Now, while we've been negative in the side of the NDPMS we manage, on consumption from quite some time, on IT for some more time, we were really getting skeptical on autos and real estate as well. Given this boost to consumption, I think there is some comfort which comes there. But I think overall, would say that it's still a wait and watch. I would wait for 2 quarters to get that comfort. But yes, the first gainer from the consumption mode would be autos, which we've seen yesterday and today. And I think there could be some more momentum of about 5 to 6%. Post that 5 to 6% is where I'm saying that, I would be cautious as to whether demand kind of sets in after about a quarter to the extent that we have already discounted the price moving ahead.
Okay, thank you so much, Anu. We're going to have to let you go. Thanks so much for coming in, speaking with us. So that's the broad brush with regard to how Anu Jain from 361 is viewing this. The thought is that, yes, the worst is over. BFSI, banking, financial services, insurance, likely one pocket where there's value, and then there's consumption, and within consumption, auto, but more of a wait and watch with regard to that one. So that's how that's the key takeaway. Let me quickly also point out that we spoke to Suven Life Sciences on KYC earlier today, and we'll start doing this on a daily basis, trying to get you certain conversations we've done and key takeaways from it. The key takeaway from there is the one key drug, which likely, if it gets approval, is a multi-billion-dollar opportunity for a 5,000 crore market cap company. So That's where a large part of the opportunity will lie. SUVN 502 is the name of the drug. It's a drug to treat Alzheimer's, and everything likely depends on that. The likely timeline for that was 2026, but that has likely been tweaked by the management in our conversation, where they've said 2027 is going to be when they are anticipating their phase 3 approval to come through. Phase 3 is the final approval which the US FDA gives on drugs, and that's what they are anticipating and penciling in. The outcome, though, will be binary. Either the approval will come or not come, and hence the risk on this one is large because it's largely a zero revenue company and is loss-making. They've done a fundraise which should take care of their losses and R&D expenses for the next 2 to 3 years. And the US FDA is obviously allowing them to conduct phase 3 trials, but directly phase 3. They've been doing some research in this space for a while. Now, they've been told to do the phase 3 trial directly, which is a positive. And of course, the multi-billion-dollar possibility is something which the street is enthused by, and therefore the stock has doubled over the last 6 to 8 months. And why don't we do this? Why don't we go across listening to what the management had to say on KYC today?
No profitability in the next few years until a molecule is successful, because we do not have any revenue. As you know, we do only the drug discovery and development. We don't do any CRO business, which I used to do, or CDMO business, which I used to do in the Suven Pharma, which not anymore. That's why I have demerged it and focusing on this one, because I need to fund this one. If I'm in the same company, it is being penalized.
Okay. Well, it's a bit like a private equity investment that you have to do in the publicly listed markets, because here's the management. No matter what your beliefs may be about what this company may do, the management saying that no profitability for the next 2 years. Did I hear that right, Harsh? No profitability for the next few years.
No, and obviously so, right? Everything depends on the phase 3, which is of the only phase 3 that they're conducting at this point is of this product.
But most point being no profitability for the next few years.
Correct, yes.
Simple. I mean, that should...
And they have enough funding to take care of that, right? So they've just raised 850 odd crore. That should kind of take care of the next 2 years, both in terms of losses on the operating side as well as R&D expenses.
Yeah, but keep in mind, viewers, so therefore that's the kind of company that you're looking to invest in. Effectively, it's a private equity investment kind of stuff. Kush, this one has had a good days and bad days. Rallied, I think, all the way to 290 or thereabouts. Has cooled off since then. Anything on the charts that is worth noting about Suven Life?
By the way, I absolutely love the comparison that you've made. A private equity investment in a listed company. Absolutely love that comparison, Neeraj. The stocks actually had in the recent past 4 negative weeks. This time around, it's just trying to find its feet. So too early to call it any kind of reversals. I would actually wait and watch. On the downside, actually, I'll be looking at the 215 mark, where about 3 months ago, the stock's taken support at multiple times and then rebounded. If it does hold up, then maybe you could start accumulating around those levels. But right now, nothing suggesting that there's a reversal on the cards on Suven Life.
Okay. All right. So that's the view with regards to where Suven Life Sciences stands. Kush, the other counter that's doing very well in trade today is Aarti Pharma, and it's up almost 8% as we speak. Anything on the charts that you're seeing specifically on this one? And if somebody wants to enter right now, is that the right thing to do?
They can actually, because the stock has taken support at the 200-day moving average. So definitely, the base formation has happened over the last couple of sessions. Today also the stock is up on volumes. From a technical standpoint, there was this gap, which got filled today around the 845 mark, and that just gets filled today. The volumes are high and the momentum indicators are just starting to turn. So the risk-reward ratio on this one is fairly favorable. I would suggest if you're looking to re-enter because of the favorable risk-reward ratio and the spike in volumes that you've seen, I think it's a good idea to keep a stop loss at the 815 mark, and then gun for targets of 880, and once that is taken out, a 910 as well. So offers good risk reward ratio. The bounce is backed with volumes. So with a stop loss around the 815 mark, you could consider a long trade on Aarti Pharma.
Anything on Devyani International? Up 10% today. No fundamental trigger as such, but anything on the charts and in the entire QSR space, anything specifically that you're liking with regards to where charts are concerned?
Not really, Mahima. I mean, this space has actually promised, a couple of times and then not delivered. And by that, I mean, it's been as short as a couple of days that the rally has lasted, and then it's fizzled out. You look at something like an RBA, even Devyani for that matter. Right now, the pop is backed with very heavy volumes. I'm pretty sure there must be some, trigger around the corner. But the failure, the rejection has come from the 200-day moving average, near the 170 mark. This happens to be a supply zone about 170 to 175. So I wouldn't enter afresh. Maybe this is an opportunity for someone who's been holding on to this one for the last 2.5, 3 months to exit and look at better avenues. But right now, the entire space is not really buzzing. And Devyani, if you have a position, it's a good idea to take some money off the table, perhaps exit, at the current level, at the current bounce.
Okay. Okay, Kush, stay on. You always love listening to what Somit does, as does everybody else, right? We wait for this segment, and it is that time of the show when we get in Somit Sarkar to talk about all the chatter from the dealing room. Somit, good afternoon. Does it feel good? Everybody waits for you like the way they wait for a Salman Khan blockbuster?
No, too much pressure. Well, yeah, multiple stocks that remain in focus. Firstly, it's Eternal, and the buzz on the street is that there could be a block deal very soon on this counter, so keep an eye out for Eternal. Then there is a bunch of stock, SRF, PNB Housing and Tube Investment, where dealers are indicating that there are buy flows on institutional desk in trade in all these three counters. And for PNB Housing specifically, dealers are also saying that the valuations continue to remain cheap and the stock has come out of the FNO ban. So keep an eye out for PNB Housing. The stock that we are showing here is PNB. It's PNB Housing stock that's up around 5.5% in trade. Industars, another counter, dealers indicate that there are buy flows at lower levels, and Street is expecting a development regarding the dividend policy very soon for Industars. For Shell Engineering, there are buy flows on large HNI desk, as dealers are expecting some positive development to come in this counter. For Keynes Tech, there are sell flows and some negative development is expected. The stock was up 1.5% in trade, and currently it's trading down 0.3%. So keep an eye out for Keynes Tech as well. And lastly, it's Ola. Dealers are indicating that there are buy flows on DI desk. PMS, which recently launched its mutual fund, is also a buyer in trade today, and multiple other HNIs have been buying this counter off late. So keep an eye out for Ola as well.
Wow. Interesting. Now, Somit, just a couple of insights into things. Now, one is Shell Engineering Plastics, for a business which is not very large, and a stock that has moved up from 600, 700 about a year and a half ago to nearly 2,000. You are hearing that there is more buying happening here.
Yeah, and there could be some positive development, some kind of tie-up is what the street is indicating. It will be interesting to see what actually comes out of this.
And Keynes, what's the negative that you're hearing?
Well, there's no clarity, but then there could be something negative. Some negative development is what
I was just trying my luck. So. As we all do with Somit. So yes.
No, and the other thing is Ola Electric, because Somit, this we've heard from a number of people that some HNIs have gotten into this one. We did a conversation with them yesterday as well. The optimism, does it stem from the new gigafactory or is it something else? Any idea?
Well, as the new gigafactory is one of the reason why this optimism is there, and apart from that, today also the news flow regarding the rare earth material is also kind of positive for the entire auto space, including Ola as well.
That will be quite something. Okay, Somit, thanks for bringing us those updates. And Kush Bora, I wonder, you heard some of these things. Ola may not have too much of a chart history to itself, but I wonder if you have some thoughts here.
First up, I mean, you just called Somit Salman Khan and he went straight to business. He never stops to...
He's focused, Kush. No matter what you tell him, he goes straight to talking about the stocks.
And we all love him for that. I mean, some special segment this is. So, look, Neeraj, for me, the view hasn't changed much in the sense, and maybe this is my personal bias on Ola. But if I speak purely from a technical standpoint, you're starting to see some positive RSI divergences and definitely some accumulations. The number of green candles on the volume, the green bars on the volume that I see are spiking up. So if someone is in this for a very high risk trade with a stop loss around the 40 level from where the stock has rebounded, maybe for levels of 52 and about 58, maybe round it off to 60, you could consider a very high risk trade on Ola. So that's the view. The one that I like, from what Somit's mentioned, the one other that I like is PNB Housing Finance. We know that the sharp fall was there. You're starting to see a rebound yesterday and today. This move is now backed with very impressive volumes. So again, for a very high risk reward ratio, someone wants to consider, I think a positional trade on PNB Housing makes sense. I would keep my stop loss near the 770 mark, and on the way up, and this, mind you, these are positional targets. So 875 and perhaps even 930 is likely on PNB Housing in the next couple of months. So offers a very interesting risk reward ratio.
Okay, all right. The other counter that Soumit was talking about was Eternal and a possible block deal there. Last week or so, we saw Antfin exit the counter completely, wondering who the next seller could be in this counter. But we are also joined by Vinit Bolinchkar, the head of research at Ventura Securities, joining us now. Vinit, hi, good afternoon to you. With respect to where Eternal is concerned, the overhang was that considering that they have capped the total FI holding, there could be possible FI outflows, which has happened. Antfin has exited the counter, and now there is a comfort level available when it comes to FI holding in Eternal at present. But with regards to where the counter is concerned, we've seen good up moves coming in. What is your view with regards to where Eternal stands and versus a Swiggy? Would you still prefer an Eternal?
I think Eternal is way ahead in terms of all its business models. And, they've really done well. We were a little skeptical earlier on the stock, but, they're pleasantly surprised with growth across all spectrum. And definitely it's a easy buy when you compare it with with Swiggy.
So Vinit likes Eternal over Swiggy. All right, but with that, it's time to step into a very short break. Up next, we'll put the spotlight on the theme of the day, that is textiles, and also talk about Axis Bank on our bull versus bear segment. So do stay tuned. Lots more lined up on the other side.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I
or
hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Welcome back. You're watching India Market Close here at NDTV Profit. Now, the sector of the day that we've chosen today is textiles, and it has to be textiles because a lot of counters from the entire space are buzzing, and this is because of a recent notification that says that on raw cotton imports till 30th of September, there will be no import duty that will be imposed. Earlier, there was 11% import duty on raw cotton imports, which will be paused and removed for next 42 odd days. The cess also that was being imposed on the import of raw cotton will also be removed for the next 42 days, and the government says that this will provide a temporary relief to the textile sector as a whole. Amongst the concerns that are relating to the Trump tariffs that have been going around and that have been impacting textile sector as a whole. Now, with regards to what stocks could benefit from this, and there are up moves being seen on these counters. There is Welspun Living, of course, off from its day's highs, but up 3.6%, followed by Trident, KPR Mill, as well as you have your Pearl Global, Gokuldas, exports that are seeing good gains. You have Vardhaman Textiles also doing very well in trade today. In fact, amongst the top gainers in the entire textile pack. Now, with regards to where volumes stand for these companies, in terms of how they are trading today, Vardhaman Textiles is having the highest amount of volumes in trade, trading around 2.5 times its 30-day average, and followed by some other counters as well. With regards to where valuations are concerned for these companies, well, all of these companies are trading anywhere between that 20 times mark to around almost 41 times, but the cheapest among that is Vardhaman Textiles, and that is one of the reasons as to why the stock is amongst the top gainer in the entire space as well. Lastly, to conclude, India has high ambitions when it comes to textile exports from India, and the targets that have been set by 2030 includes $100 billion worth of exports from textiles from India in terms of where textiles stand. So this is the overall view as to what's happening with the sector and why some of these stocks are seeing strong gains today. In fact, we spoke to the management of Pearl Global today with regards to this particular import duty removal. Listen to what he had to say.
Too early to say, but at the same time, I think the advantages should be there. There's 11% tariff on any imported cotton. We do, certain requirements are there from, like, say, from the Australia market or from US market to use their cotton. And that's where, we were not competitive enough. So this 11% also is a positive direction that should give that advantage. And overall, if the cotton and the fabric becomes more competitive in the global market from India, then that's an advantage.
Well, various views, frankly. Vineet, do you have a view with regard to the textile sector as a whole? Would you at this point venture and play that theme, and what would the names be, if at all you would?
So obviously Pearl Global, we have initiated coverage on it and the stock has come down quite a bit. Pearl Global is better diversified since it has got multi-geography manufacturing facilities. And, we think that this company can do well going ahead. So Pearl Global is our pick for the textile space.
Okay, even now, you would feel. What's the upside like, Vineet, on this one?
So we'll have to pare it down a bit.
Yeah.
Earlier we were at 1700. So I think going back to the recent high of about 1500 odd should be the target now.
Do you have a view on a Pearl Global? Also, let me throw in some other names. PDS was one of those which come to mind. Gokuldas is the other one. A Web of Global as well in that kind of space. Maybe not exactly textiles, but in that space, that export space. So what's the sense on some of these?
So, Harsh, first up, yes, technically speaking, also Pearl Global stands out. Most of the stocks in this space had gone to oversold territories. You're seeing a rebound from those levels. Not sure how sustainable that will be because they're still some distance away from any kind of meaningful recovery or an uptrend. Pearl Global, the reason it stands out is because it's the only one that came close to the 200-day moving average, slipped under just by a bit, and then is rebounding now. So hasn't lost much ground. I'm a big fan of buying strength. So this is definitely showing relative strength in the sector. I think on the upside, if you're looking at a positional bet, then 1450 and about 1525 are good levels, and keep your stop losses near the 1300, 1290 zones. Some of them, as I said, in this pack, including a Gokuldas, including a KPR Mill, they are rebounding from oversold territory. So you have to be a little careful whether this just turns out to be a dead cat bounce or maybe a more sustainable. Right now, it doesn't look like a very sustainable bounce. So I'd be a little cautious on some of the other names.
Okay, all right. So that's with regards to where the retail and textile space stands. But let's shift focus and talk about Shree Cements. The second half of FY26 to see better volumes and value growth, says H.M. Bango, chairman of Shree Cements. Listen in to what he had to speak about his conviction in a strong second half of cement companies.
Because of the price increase we have taken, compared to the other manufacturers, our price increase was higher, our sales was little lower. Everything takes little time to homogenize with the whole system. 80% of it has been done. Within a month or so, we will be at par in volume with all others. So second half, I will say definitely that our volumes and prices both will be good. EBITDA, we don't know because it is a competitive market. At what price we will compete, that gives the EBITDA.
Okay. Vineet, your view on the entire pack and any specific counter that you're liking in the entire cement space?
I think, JK Cement should do very well. The newly listed JSW Cement also should be looked at because, its efficiencies are fairly low now, and we believe that going ahead, they would get, optimized. So these are a couple of stocks that I would look to buy into the cement space.
Okay, and Kush, all right. And Kush, your view with regards to where these cement companies are concerned, any specific counters on the charts that's looking attractive?
Again, I promise you, Vineet and I haven't spoken, okay, prior to the show because we had a common view on Pearl Global and now on JK Cement. In fact, if you'll recall, just earlier this month, we initiated, a buy call on JK Cement around the 6,900 odd levels, and I've been reiterating that for some time. It's doing rather well. Continue to hold if you have a position. If not, you're better off buying it at dips around the 7,100 mark. But for now, this is one that's showing, very clear strength among the rest of the pack.
Okay, yeah, so it's one of those where we're seeing both the fundamentals as well as the technicals aligned very, very well. So that's of course a positive. But the bull versus bear today is an Axis Bank. And why have we picked Axis Bank is because Bernstein came out with a note. They've reduced their target price on an Axis, but they continue to be positive, and therefore it's a good candidate to try and reassess as to what the bull and the bear case is. Third largest private sector bank in the country, so positive, the bull case there. And of course, there's a very, very large opportunity in banking. Market share gains can continue. But really, Q1 FY26, the growth has just been 8%. There's been no market share gains. In fact, they've lost market share on a YOY basis. Numbers have looked extremely sluggish, not looking good from that perspective, where growth hasn't come in. In fact, Bernstein has reduced their growth targets as well with regard to where an Axis Bank is concerned. So not looking good from that perspective. The goal is to build the strong liability franchise is what Axis Bank has always said, and that's always good. In fact, that has happened, especially post the Citi acquisition. Some part of that is coming in, but that's not reflecting in margins. The margins continue to slip. Guidance of 3.8% on the margin front is looking difficult in this environment where we've seen rate cuts. So likely we'll see the margins fall well below 3.8, and thereafter we'll have to see where they recover to. So that's where the bear case is. There's still some time to go whether that 3.8% can be held or not. The ROA guidance is roughly 1.5 to 1.7%. ROE is around 15%, which is not half bad for a bank which is valued at 1.6 times 1 year forward. But the ROA guidance is lowest among all top private sector banks. So we've seen pretty much all of them clock much better ROAs, and ICICI stands out. And even most recently, where Kotak has slipped, they've slipped at 1.9% really. So this is a far cry from that. So nowhere close to that. Now the last piece is with regard to valuations. Now it trades at a 20% lower multiple to its 5-year average, which is roughly 2 times. It trades at 1.6 currently. I did mention that. So that makes it a good case from a bull perspective. But the unstable performance, there's not been stability, and investors in the banking space don't like that. They like stable performers. They like consistent performers. That consistency is lacking. At any level, they tend to slip in a big fashion, which is not appreciated by the market. How do analysts view this at the current juncture? Well, they see a 20% upside, 42 buy calls, 10 hold calls, no sell calls, and a 23% upside to the current market price is what analysts see. Vineet, your view with regard to an Axis, would it be your top picks among private sector banks? How do you view it?
I think among the large private sector banks, we'll avoid Axis completely. They've always struggled with their, return ratios, and they've underperformed the market. And when we've spoken to them a couple of times previously, they have said that their focus is on profitable growth and not growing the balance sheet. And with 8% kind of AUM growth, you're not going to get anywhere because costs are going up, and margins are coming off. So they really need to step up on the pedal for expanding their AUM rather than consolidating the way they have been doing.
All right. Kush, your quick view on Axis with regards to where charts are concerned. What's the support and resistance that you're seeing?
Yeah, it doesn't even fall on the pecking order scale for me right now. I mean, the only two are ICICI and HDFC Bank. It must consider as far as levels go. I think on the downside, you've got 1025 as a strong medium-term support. I mean, if it holds around those levels, maybe it could go sideways. And on the upside, it's just incidental that, it's about 100 points up. 1125 on the upside is the resistance level. Trading in a band, not doing much for a while now. So for me, it's a miss. ICICI and HDFC, these are the only two that are worth considering in the private sector space right now.
Stocks moving around include the gaming names. I think Delta Corp, Nazara, etc. are all up and about in trade. Nazara Tech 1.39%, Delta Corp a whole 10%. Now, presumably there must be some developments that have happened. We'll talk about them in detail, and maybe we'll ask Vineet only after the fundamentals are known. But Kush, on the technicals, because these stocks are moving, wonder what you think of them.
So Nazara right now I would avoid. There is a negative divergence and low volume up move on this one. So this I would actually avoid right now. If I had a position, maybe I could continue to hold with a stop loss around the 1370 mark. Delta Corp is shaping up well. The move is very encouraging, as you rightly said. It's a big move, but also volume back. Had a resistance around the 90 mark for some time, and it's firmly above that right now. If this closing does come about above the 90 mark, I think you could see a further continuation of this up move to 95 and perhaps even 99 levels. So Delta Corp's the more interesting one between the two.
Okay, other stocks flying around: Endurance Tech, Aegis Vopak Terminals, Jubilant Wagons. There are a clutch of names which are doing well and trending or trading at the high point of the day or thereabouts. So watch out for some of these names as well. Vineet Bolinjkar, a name that we spoke about at 2:30. Which was Shelly Engineering Plastics. I would love to know your view there if you cover it, because this business now has large institutional holding. I believe Motilal Oswal, AMC and a couple of others are invested there, and it's as a stock, it's done really well in the last 12 to 18 months. Do you guys cover it at all?
No, we don't cover it, but I've met them, and they've got some very, very strong growth drivers in place, especially in the medical devices space, the pens that you manufacture for diabetes and other related products. So we believe that Shaily can do really, really well. It consolidated for a very long time, and it's given a breakout from that congestion zone. And I think that this stock has got legs to rally further.
All right. Okay. So that's with regards to where these counters are concerned. Shelly Engineering trading around 6% higher as we speak. But shifting focus to one counter that's doing well in trade today, that's Ola Electric, up 8.3% as we speak. And this is on the back of the key developments that took place in the Sankalp 2025 event. It showcased its India Insight vision, revealing new products, technologies, and a focus on local innovation and manufacturing as well. My colleague Puneet joins in with more details as to what he's picking up and why the stock is zooming.
Well, thank you for that. So definitely that's one of the key events. The other potential trigger that's developed in the middle of the day is what the comments that have been coming in from the China as well as the India meet as well, because China has promised to address 3 key concerns of India, and one of them is definitely rare earth crisis and the ban that China has put. So that could be the other trigger that's propelling the stock. In case of the announcements, and there were some key ones announced by Ola Electric in the Sankalp event this year. The first one's of course on integration of the in-house lithium-ion battery cells. This will come from September of 2025. And Ola claims to reduce the prices of its premium variants by 20 to 25,000 rupees per vehicle. So this is the first one. Apart from that, we've also seen the showcase of the new platform Gen 4. The company claims that the prices and the costing will be 41% lower than the Gen 1 variant which they had, and that should benefit gross margins as well as lower the losses going forward as well. Third key metric, foray into the sports segment. They're looking at the Ola S1 Pro Sport, which will be launched subsequently in January of 2026. Fourth key measure, release of the MoveOS 6 platform, the software upgrades which they do. And this is key because this has 3 times the gross margin of new vehicle sales. So it's a key one to track. A couple of measures they've announced on, rare earth magnet and ferrite motors. Essentially, these are rare earth free and could help the company if the ban would have lasted longer. Now, of course, this new development has come in, so that'll be the other one to watch out for. And finally, the diamond head motorcycle. Now, this was going to address the premium space and is still 2-3 years away, but the pricing will be one of the key ones to watch out for. They mentioned that it will be priced at a premium as well. But, my colleague Tamanna Inamdar also spoke to the management on some various aspects of, the PLI scheme, because they had applied for PLI schemes in the battery space, essentially. Listen to what they had to say.
No, that's a fair question. We have also decided that we will not expand beyond 5 gigawatt hour right now.
Okay.
For the PLI, we had to grow till 20.
Okay.
So, but we're the only one in that scheme who has put up a factory and is producing commercial cells.
Yeah.
So we are engaging with the government and telling them that we might need a little bit extra time.
Okay.
And the government is fairly empathetic because of the complexity that goes with this kind of a manufacturing setup, the fact that it's the first in India. So let's see, but we are very hopeful that the government appreciates our point of view on this.
The other one was addressing the rare earth crisis as well. And, while there have been some new developments as well, let's go across to Bhavish Karwal again to listen in on how they are looking to tackle this aspect.
So I think the geostrategic landscape, Tamanna, is increasingly getting more complicated. And I think there's broad consensus that the geostrategic landscape is only going to get more and more complicated over the next few years. As countries now start looking out for themselves, globalization is going through a different phase now. So, and this is also coming at a place where in India's journey, we are looking towards a Viksit Bharat dream, like the Prime Minister has said, where we have to develop ourselves. Now, how do we choose to develop ourselves? It's a very conscious choice we have to make, that we have to invest in technologies of the future so that we can control the narratives of the future, the products of the future, supply chains of the future. Cell and this energy is one of them. Rare earths is another one, and we can see how our neighbors are really using it as leverage against us in a trade negotiation or whatever. The way forward for us is twofold, Tamanna. We have to partner with other countries. It's not as if only one country has the source. We have to partner with other countries, like-minded countries in Southeast Asia, elsewhere, western part of the world. And there are also, we have to leapfrog technologies. So now motors, electric motors today use rare earths. But the whole world has moved to rare earth free motors now, increasingly.
Okay.
Global OEMs, Western OEMs are increasingly testing rare earth free motors in their batteries. And Ola Electric is the first Indian company to do this. Our entire two-wheeler lineup will, by next quarter, be rare earth free.
Well, there's so much chatter around Ola and also the stock buzzing. Vineet, give us your take. How do you look at Ola at the current juncture?
So we have been very constructive on this for the past 1 month. We believe that, it's one of those stocks where you buy and, it's got a very high risk to reward ratio. They've got their act together now. They've got the entire manufacturing chain, value chain is completely captured, right from motors, magnets, software, batteries. They have their own distribution. And, I think this stock can, if they get their models right and they are able to sustain that 25 to 30% market share that they've been talking about, this stock can really, really turn out to be a multi-bagger. So quite optimistic on this. And, we think they should do well.
What about the charts, Kush?
Yeah, as I said earlier as well, I think this offers very high risk-reward ratio. Some positive RSI divergences. So, but this is only for someone who's a high-risk taker and maybe with a small quantity in your portfolio, if at all you want to consider. So, with a stop loss around the 40 mark for targets of 50 and 53 and about 60. That's the those are the levels on the upside. But I would since it's a very high-risk bet, I would place a small quantity if at all I'm investing in it.
The other space that's buzzing is defense. Vineet, do you have a view with regard to defense, and how would you play defense at this point if someone doesn't already have a position built in?
I think HL is one of the stocks that we think can do really well. And apart from this, BDL also looks good. But overall, it's a little bit of a flux out here. So you have to be very stock specific.
All right, so that's the view with regards to where the defense pack stands. But, there's a recent development that's taken place with regards to where Zepto stands. Abhinandan Lodha has, kind of partnered with Zepto for a 10-minute delivery, 10-minute land delivery. And this is to aid investor purchase branded plots in Vrindavan project via Zepto. It's an interesting development and one of its kind because it's unheard of. And so basically what will happen is that within 10 minutes users can browse the available plots, submit inquiries and also connect with an expert, get in touch with the expert to buy those plots. With regards to where recent updates for Zepto that are concerned, it recently raised 400 crores from Motilal Oswal, plus earlier partnered with Skoda also to offer test drives of compact SUVs, on their app itself. So interesting things that are happening in the quick commerce space. I'm wondering as to where this could, go and stop and probably,
But why do we want it to stop?
I don't want to stop, but there's no limit to this. I mean, the way this space is expanding, and probably only in India this is happening because, of course, because availability of labor and everything, cheap labor. But it's beyond my imagination that you can now go ahead on Zepto and probably buy a plot.
Yeah, and remember, this is happening when there are technically now there are incumbents, but there are 3 new companies which are not there per se, like doing this service 5, 6, 7, 8 years ago. The incumbents, the actual incumbents are yet to come, which so many people have said are going to come. Imagine what will happen to this place a few years from now.
Yeah, I think Mahima will virtually be covering all sectors because she covers the quick commerce space and now you virtually sell everything on quick commerce. She'll have to cover pretty much all the sectors, I guess.
Yeah, will we, Vineet, you think we'll get to a point wherein, just Vineet, but we'll sell research reports on quick commerce? Hey, I want a research report from Ventura. Can I get it on Blinkit?
Why not?
Why not? Yeah, you never know what could happen, right? Vineet, this morning, or in fact yesterday, we were talking about possibility of some sell flows on Eternal and Swiggy because Zepto apparently, as per some channel checks, has actually gained the lead in the monthlies on terms of deliveries, etc. and stuff like that. Now, is the success of Zepto, whether in quick commerce or otherwise, a negative for Eternal and Swiggy, or do you think long term all 3 can make money and gain?
I think they will all coexist. India's market is very big. Look at the way the numbers have just started stacking up for Blinkit. So, and it's just the beginning, right? People are catching on to this bandwagon of quick commerce. And literally, you can keep selling anything that you want. Just keep adding to your portfolio. You can do clothing, you can do merchandise, you can do whatnot. You can sell TVs, plasma, whatever. So I think quick commerce is evolving to become a very a better platform than, say, an Amazon, right? So I think this will do. These 3 companies will coexist and do really
well. Kush, your take with regard to a couple of these holding companies, because they seem to be under pressure today, especially from the highs of the day. Chola Holdings, Bajaj Holdings, both of those are down nearly 5% odd from the top.
So actually, yes, Bajaj Finance, in fact, Bajaj Holding, was consolidating for some time. It did see a pop along with the markets, but wasn't really a volume-backed one. Not surprised to see it again retrace to those levels. So I would actually be a little cautious with a support zone around the 13,600 mark. Probably push it a little to 13,500 as well. That zone, as long as that is intact, I think the consolidation that came about would continue, and the pop that we saw yesterday and day before would perhaps just act as an as an exit opportunity for some of the investors. As long as 13,500, 13,600 is held, this could just be some sort of consolidation going sideways. Nothing much to write home about in some of these stocks.
Vineet, are you of the opinion that holding companies are good bets, especially that they trade at these deep discounts? Of course, they're called the holding company discount for a reason. but would you somewhere see value in them, and any names that interest you?
Bajaj Holdings is one, Maharashtra Scooters. These two come to mind. Others are, have become more or less their discounts have kind of narrowed. So these two are the ones which look good for me.
The other big bet, Vineet, that you had made was Paytm. Give us perspective on where you see it now, given the kind of rally we've seen on the stock since that point.
Well, I think it will be a steady compounder going ahead from here. Digital payments are here to stay. They got a huge market share, growing. They're getting into more value-added stuff, cutting costs, as we've seen last quarter. And that operating leverage is yet to play out. So I think it's a good hold. I think this stock will go to 1,300 to 1,400 in the next couple of years.
Kush, anything on Datamatics? The stock was under pressure, I believe, yesterday, but today is seeing some good gains, up 7%. Anything on the charts that you're observing, and do you think if somebody wants to enter right now, that's the right thing to do?
I'd suggest a wait on this one, because I think we'd spoken about this last week, where the stock had actually zoomed 70, 80 odd % in a very short span of time, and then the profit booking was obviously par for the course. Today is the first day after 3 sessions that the stock is starting to see some sort of traction, but not enough data, not enough volume to commit to the fact that the bottom indeed is in place, and the stock could again start to head north from here. So give it one more day, see the kind of accumulation that it has tomorrow as well, and then perhaps you could consider.
And what about Everready? Good volumes coming in there. Stock also up 7%. Anything on the charts there?
This one looks far more attractive. The consolidation breakout has come about. The stock had very strong resistance around the 425 mark. That's been broken. Still some distance away from the overheated territory. So yes, you could hold if you had for higher levels. If not, you could still make a trade in this one. Maybe the quantity could be a little small given the kind of move that has come about, but the momentum could take the stock to 455 and about 470 odd levels. And now the 425 mark, which was the resistance, will act as a support to keep your stop losses around the 425 zone.
Okay, and what about Infibeam Avenues? That counter is also seeing good gains in trade and good volumes as well?
No, it's a very clear avoid. This is just perhaps a dead cat pop kind of a bounce. The stock's been languishing for a very, very long time. I wouldn't consider an entry in Infibeam at all.
IFB, Kush, that's the one stock which was zooming in trade yesterday. We're seeing a bit of a cool off on it today. From the highs, of course, we're well off. Is there a view now that we are past that upper circuit that it had hit yesterday?
Yeah, so now would be a good time to take some money off the table. When the stock is locked in an upper circuit, it's a good idea to hold it for one more day, see if the follow through comes about. It did not. Incidentally, this is also the resistance zone from where the stock had slipped around the 1560 mark. The high that you see is actually 59.90. So bang on from the resistance zone, it has retraced. So yes, take some money off the table. It's been a painstaking hold for the investors, who've held it on for the last couple of months. So take money off the table. Maybe at lower levels you could consider. Right now, this pop that came about yesterday is giving you a good exit point. Not too far from the highest that it made yesterday as well. So take money off the table from IFB.
Well, along with it, and we've been talking buzzing stocks all along, but we have some more. Vanch is with us to put the spotlight on some of the other top buzzing stocks for the day. Vanch.
Yeah, so let me start off with the fertilizer stocks. Now, fertilizer stocks remain in focus on the back of the news that the foreign minister of China, Wang, has assured the External Affairs Minister, Mr. Jaishankar, that China is addressing India's needs for fertilizers. Now, this will benefit in terms of the resumed Chinese supply, and this will support agriculture productivity and national food security. Now, if I talk about some of the companies that will be beneficial from this, would include Paradeep Phosphates, Chambal Fertilizer, and Rashtra Chemicals. Second on my list would be HLE Glasscoat. Now, the stock is up. Stock has already hit the 20% circuit mark today, and the stock is up, in fact, 90% in the past 6 months. Now, this is on the back of the acquisition that the company's arm has completed. They have acquired certain specific assets of a German-based company called Omras. Now, if I talk about the details of the acquisition, Omras is involved in manufacturing and distributing glass-lined and enameled tanks, and the cost of acquisition for this stands at about 28 odd crores. If we talk about the benefits benefits of this acquisition, this will enable the company to expand its geographic reach into Europe and Middle East, and will open doors for premium global projects, and will also mark an immediate entry into high growth infrastructure projects. Third on my list is Inox Wind. Now, the company has divested its stake worth rupees 175 odd crores in subsidiary Inox Renewables. Now, the transaction values Inox Renewables at about 7,400 odd crores, and the sale is expected to complete within 7 days. If I talk about some of the details of the Inox Renewable, the FY25 revenue stands at about 218 odd crores, which accounts for 6% of the consolidated revenue of the parent. And the net worth stands at about 930 odd crores, which accounts for 14% of the consolidated net worth of the parent. So these are some of the stocks that are in focus today.
Okay, thank you so much for that, Vansh. Another couple of buzzers in trade. You have a Raymond, which is up 7%, the Vianney International, which is up another 7.5 odd% as well. So those movers, Delta Corp is off the day's highs, well off the day's highs now, at one point hitting 15%. And now, of course, we've seen a bit of a cool off where Delta Corp is concerned, as you can see on your screen. Samvardhana is the other one. Stock is up, perked up 5.5%. IIFL Finance also perked up 5% in trade. Kush, any of these names attracting your attention?
Samvardhana, yes. There has been a very interesting volume accumulation over the last 3 sessions. Today is actually a culmination of that. You're seeing a clear breakout of this stock around above the 96 level, which it held on to for some time. I think I would be interested in a trade in Samvardhana with the kind of volume accumulation largely rather than the price action. On the upside, I think the stock is now creating room for breaking that 103 resistance mark that it's been holding on to for the last 3 months. Once that is taken out, I think you're looking at 108 kind of a move as well. And keep your stop losses near the 94 mark. So offers a good risk reward ratio. Good accumulation over the last couple of sessions and taking out some key resistance levels today. So this momentum could well take it to 108 levels.
All right, Vineet, any names within the fertilizer pack that you seem to like? Do you like the pack as a whole? Give us that perspective.
Yeah, so we are very positive on agri feedstock and agri products. We believe that Paradeep Phosphate should do very well. Chambal should also do well. So these two are stocks that I would like to do.
Okay. Well, more voices, by the way. Pankaj Tibrewal, who is the founder and CIO of Ikigai Asset Management, spoke to us earlier and tells us about how to find opportunities in the broader market space where he, contrary to a lot of people in the market, is actually more constructive on. Listen into his rationale.
The reality has been very different. From February and March lows, mid and small caps of the broader market has significantly outperformed the large caps. And that's not in fluke. I think there is a reasoning behind it. Even in this quarter, if you look at the large caps, which is the top 100 stocks, have delivered 6-7% earnings growth. Whereas the mid caps, the next 150, have delivered 17% earnings growth. And our belief is that though on a headline basis, the mid and small caps looks to be pricey and above a longer term average in terms of premium. But when you look at it from a peg basis, it's not that expensive because for per unit of growth, what price you are paying. So for a 6-7% large cap earnings growth, you are ready to pay 22 times. But for a 13-14% earnings growth on mid and small caps, for example, you are worried about 27-28 times. So I think we need to change our lens. Till the growth continues, I don't think you will see a massive, kind of a sell-off. There will be opportunities.
Okay, so, well, that's the take coming in on the mid and the small caps. Is that, Vineet, give us your take with regard to how you're viewing the mid space in particular. Earnings growth momentum not really solid and valuations at a premium, justified in your opinion?
So, it's a little place where we would be watchful, want to bide our time on this and maybe look at it after a few days. Right now, it's a little too premium. and we want valuations to correct out here.
Okay, but just before I talk about these notes, Vineet, I'm again trying to understand, but you're still constructive on markets, right? From here on.
No, we are not really very constructive on the markets, and that is because of impending global disruptions that are happening. We believe that there's a very, very big repricing dollar risk that still persists. It's an overhang, and so you have to go very, very cautious. I would advise raising cash wherever the valuations are expensive and wherever you have even slight doubt in your mind. I would, want to churn my portfolio and make it largely defensive. Because the kind of world that will emerge after the reset that happens of the dollar is going to be completely different, and then the stocks that will be moving are going to be extremely different. So, what's been bullish till now need not necessarily be bullish in the future.
Okay. Well, that's Vineet Bulinshkar's view. I'll also give you the contra view, which a couple of brokerages have given today, and one of them is Morgan Stanley. So Ridham Desai and colleagues write in their note that earnings growth has improved sequentially in Q1, marking a recovery. And they go on to say that this will actually, okay, so the details are that the Q1 beat is driven by stronger than expected revenue growth and the beat on the top line, and margin expansion is in line with expectations, at least that Morgan Stanley had. So that is the first set of things. They believe earnings growth and breadth have improved sequentially, and the relative stock performance, while has declined QOQ, it sets the stage maybe for some upsides here. So earnings for the broad market were in line with the narrow indices as well. But most importantly, this point, that likely improving growth coupled with recent developments provide triggers, and Ridham Desai and colleagues believe that sell-side expectations on earnings are low and they should be ready for a beat over the next few quarters. So this is the Morgan Stanley view. JP Morgan has come out with a view as well. Rajiv Batra has written a note. They are saying that they witnessed a largely inline quarter according to their estimates. So that is part one. They say high single-digit earnings growth amidst global headwinds is something that probably was acceptable to them. The recovery in H2 will be led by income tax cuts, lower inflation, as well as policy rate easing. I believe tax cuts in general and not necessarily income tax cuts. Good monsoon and festive demand might all lead to this recovery. And he's reiterated, of course, his targets on the markets as well. So they are upgrading material sector to overweight. They have downgraded pharmaceuticals to underweight. But the most important line, and will come after this, of course, all of these are the reasons why they are doing this for material sector or for the pharma space. But the targets on the Nifty is the key thing. I mean, of course, pharma sector is the overweight thing, but let's get the target plate here. But he's saying that, reiterating that they expect Nifty 50 to trade between 26,500 and 30,000 over the next 6 to 9 months. This is the bull case scenario. This is JP Morgan's base case scenario. So let's wait and watch if that were to happen. Now, Kush Bora. We've heard Vineet Bulinshkar, you've heard what some of the others have said. My question to you is, if you expand the horizon and look at the next 6 to 9 months, do you get a sense of 27,000, 27,500, 28,000 odd levels on the Nifty? Or you don't?
So, Neeraj, I would actually take it, each day or each week or each month as it comes.
No, but
right now the sense that
no, Kush, I'm going to put you on the line on this one. One day at a time is fine. We'll talk to you every day. Right now, I'm asking you to expand the horizon and tell us. Rajiv Batra is saying that it could expand to 27,000, 27,500, and 28,000, whatever, over the next 6 to 9 months. Do the chart show that?
Not at the moment. I would gun for 26,500 as the bull case scenario. Maybe, as Vineet said, take some money off the table around those levels, see how things are shaping up, and then perhaps re-enter at lower levels. So right now for me, 26,500, yes, that's something that the FII short covering, some positivity in global factors could take the markets to. I wouldn't rule out the move until 26,000, maybe a little higher as well. But from there on, I would be a little circumspect, a little cautious, and maybe at lower levels, I would be inclined to park some more and invest some more rather than at those elevated.
Kush, BTST?
BTST is in Kacharia. The stock's actually been gaining quite a bit of ground. Very impressive volume action over the last 15 odd sessions. consolidation underway, but that's when you want to enter a stock which is actually seeing very interesting volume uptake. So 1330, 1365 are your targets on the upside. 1260 is where you place that stop loss.
Okay, Vineet, you're clearly not bullish, but there has to be a sector pocket space where you're liking the fundamentals as well as the valuations. Is there one?
I don't want to, comment too much. I believe that the headwinds will surprise everyone. I think we have not really appreciated what the dollar debacle can do. And, the kind of inflation that is going to play out in the US, you got interest rates in Japan just screeching out. On the contrary, the Americans want a rate cut. So, it's all not hunky dory and something is going to break. And when it breaks, it's going to be really, really bad. I don't think that India can escape this. Our fiscal is going to get impacted. I don't see the government, raking in 2 lakh crores deficit, covering it up with RBI dividends or with, maybe more PSU divestments, so that's going to hit. And so all these things don't point to a very, very strong outlook, somewhere September 15th, September 20th. I think this is just a pullback rally, and we are going to see some very, very bad cuts in the markets.
10%, 20%, Vineet? Where are your bets placed?
So, it's going to be very disruptive. So I wouldn't want to put a number on that. Right now, let's see how it plays out, what kind of levels we reach out going ahead. But, every rally should be used to pair your portfolio. You have to get cautious. You have to preserve capital, because after this kind of disruption that takes place, we will definitely get massive opportunities to buy. And the sector to buy after that fall is going to be the electrical and electrical accessory space, because power is going to be the new gold.
We need to have a counter here, and the counter is this, that if indeed India earnings, and yes, if the dollar weakness, as you said, is underestimated and all hell breaks loose, that's separate. But because it's a bit of an imponderable right now, right? It's a hypothesis. So I'm giving a second hypothesis that since we don't know the extent of damage that could do, but if indeed this quarter sets the stage for earnings growth of 10, 12, 13% as the case may be, right? If Indian fund flows, which have shown resilience all through the worst times, stay solid, and therefore the demand for paper continues as is. And if at some point of time, because of the RBI push, because of the GST thing, because of possible consumption uptick, all of that data comes into play, why is it that the markets will correct 10%?
So, I've got 3 triggers that I believe the market is underappreciating right now. One is that, if there is a kinetic action once again, it's not going to be a 3 to 4 day kind of event that takes place. Second is, the geopolitics is very, very convoluted and very, very negative towards India. Second thing is that, we are underappreciating the extent to which we can possibly and diversify our markets. It's not going to become an overnight thing. It's going to take its own time. In the US, you had massive pricing power. That is why exporters sold only to the US and not to the rest of the world. And when you go and diversify markets, they do not have the pricing power. So, you're going to see quite a lot of margin compression happen. The third thing is, as I pointed to you about the dollar, right? And with the dollar comes services export recession. So we're already seeing the kind of H-1B visa action that is taking place. Renewal of H-1Bs is leading to interviews, and there's a lot of anti-India sentiment. And it's not gone down very nicely with the geopolitics that India has stood up to the US. So, all our exports are very, very, the services are very, very US centric. So, diversifying those markets and is not going to happen. And you're going to see urban consumption suffer because of that. Related to that is your real estate sector. Related to real estate, which is one of the highest, employment generators, along with textiles, all are getting impacted. So it's going to be a stretched out scenario at best, and that is what is not being appreciated by the markets. I believe that we may have seen one of the best times in terms of margins for the Indian industry. And so we really need to circumspect, and Q2 will be an eye-opener.
Okay, Q2, we'll wait for that, Vineet. Calling the prophecy, probably 10% on the index is what he's expecting in terms of a correction. But both of you gentlemen, thank you. It's been a stretched afternoon. We'll let you go. Thanks for coming in, giving us those views. A minute to go to close. When you're looking at where the Nifty is, it's decently well placed. But what we're not seeing is the fine print within that 0.5% gain that we're seeing today. 25K nearly there. When you're looking at the heat map on the Nifty, not as much support coming in from the Bank Nifty, which is up just about 0.25%. It's essentially auto and really the big boy Reliance. And if I pull up the contributors, you'll see what I'm talking about. Half the points of the 100 that we've seen in terms of the gains on the Nifty have been contributed by Reliance alone. So that's been the big mover that has helped the index scale the 100-odd point number that we've seen in terms of the gain today. Outside of that, you're seeing some bit of a drag coming in where some of the banking counters are concerned. Not much of a contribution coming in from there, so that's not helping either. We've closed for the day. Let's pull up the advanced decline. The breadth on the Nifty largely even, Steven, but you're looking at the advanced decline, which is tilted strongly in favor of the advances. So second straight day where we're seeing that. And that is reflective in the broader market. So while the Nifty is not showing that, the broader markets are gaining strength to strength. 1% higher on the Nifty mid cap. The Nifty small cap as well marching on. 0.8% higher on the Nifty small cap. 17,000 breached out here. So nice little graph that we're seeing intraday with the way in which both of those have moved. So that's the key positive. Let's look at sectors, and the sectoral indices will largely reflect the positivity that we're seeing. The Nifty Auto is where we're seeing some gains, especially within the large cap basket. FMCG is the other space. So some spaces yesterday, or rather some of these gains are getting built onto yesterday's gains, and that's the other positive that we're seeing. So despite the strong gains yesterday, we're seeing another 1.3% higher on FMCG Auto. We're also seeing Realty up around 0.7 odd. So what's not doing as well? Pharma, well, that was the one yesterday too, which didn't do as well. IT, despite not doing too well yesterday, is up around 0.33%. So some bit of a reversal on that versus yesterday. And defense is down 1%. So that's where some part of the pain also is, where the market is concerned. Let's look at the BSE 500 top gainers, top losers. And of course, you'll see some big movers, and HLE Glasscoat is up, Jamna Auto is up, and from the lows, Jamna Auto is up for a 5th day in the last 6 trading sessions. So doing fairly well for itself over the last couple of weeks. Delta Corp is the other one, which is up nearly 8%. Of course, that cabinet meet is one of the reasons why that one is up. Some of the holding companies facing some pressure today, along with IFB, which was up 20% yesterday, seeing a bit of a correction from that. Bharat Dynamics within the defense pack seeing some pressure. Intellect Design, Eureka Forbes, Lemon Tree again seeing a correction after the kind of move it saw yesterday. So some of those are just counter moves to what happened yesterday. Seeing a bit of a cool off from the kind of zing we saw yesterday. But broadly, these are the big movers. Motherson Sumi is up 6.5% at close today. So again, auto is one of those spaces where there's plenty of traction. But some of the things to look out for while we close out today and likely before we open tomorrow. Those are some on the macro side, not much of an impact where India is concerned. That's one adjustment with regard to dividend, which will come in tomorrow. But outside of that, really nothing to look out for. For the moment, completely out of time on India Market Close. From Neeraj, Mahima, myself and everyone who puts the show together, thanks so much for watching. Stay with us. Market Express will take all the action forward.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Good afternoon, you're watching Market Express and I'm Sanjana. Let's get straight into the show and have a look at all of the stories that we've got lined up for you today. First up, range-bound day on trade of Dalal Street. The Nifty shut shop around 25,000 mark, ending with positive bias. Meanwhile, Sensex gained more than 300 points. Most sectors ended the day in green. Oil and gas, auto and media were the top gainers. On the flip side, defense and pharma were the top laggards. Tata Motors, Adani Ports and Reliance emerge as the top Nifty gainers, while Dr. Reddy's, Cipla and Hindalco shedded most of the weight. The market breadth ended highly skewed in favor of the advances, with over 2,000 stocks ending in green. According to JP Morgan's bull case scenario, Nifty 50 is expected to hit 30,000 by April 2026, driven by improved earnings growth and economic recovery. This optimistic forecast is based on the assumption that corporate earnings will grow by 15 to 20% in the next fiscal year. JP Morgan's chief India equity strategist Rajiv Batra is bullish on certain sectors, including financials, consumer staples and consumer discretionary, excluding autos. On the other hand, he's underweight on IT, pharmas and auto counters. Vedanta Group company Hindustan Zinc has received board approval for an investment worth 3,800 crore rupees. This is to establish zinc tailing reprocessing plant in Rajasthan. The 10 million ton per annum facility will transform mining waste into resources by extracting zinc and silver from previously processed tailings. The project forms part of Hindustan Zinc's strategy to double production capacity, including expanding refined metal capacity by 250 kilotons per annum. GMR Airports is set to raise up to 5,000 crore through methods like qualified institutional placement and bonds, with its board meeting on August 21st to finalize the plan. This move aims to strengthen the company's balance sheet and fuel its growth in India's booming aviation sector. Let's keep it going with fundraise related updates now. Nuvoco Vistas Corporation has approved a 600 crore fundraise through non-convertible debentures on a private placement basis to bolster its financial position. The move announced today aims to support the cement maker's expansion plans and optimize its capital structure in a competitive market. Vedanta's board will meet on August 21st to decide on a second interim dividend for FY26, following an earlier 7 rupee per share payout and a total of 43.5 rupee per share in FY25. Market buzz on August 14th hinted at positive corporate developments, boosting investor anticipation for the upcoming announcement. Prasari Biotech has approved the acquisition of leasehold rights for 12,600 square meters of land near its existing facility for 9 crore. This move announced today aims to facilitate seamless expansion of the company's specialty chemicals operations to meet a growing market demand. Reliance Jio has discontinued its entry-level 1 GB per day plan priced at 209 rupees and 249 rupees, pushing subscribers to a 299 plan now offering 1.5 GB a day for 28 days, outpacing Airtel and Vodafone Idea's 1 GB day plans at the same price. This move is set to boost Jio's average revenue per user by 4% from 208.8 rupees to 253 as customers upgrade. Reliance Infrastructure has received a letter of award from NHPC for a 390 megawatt solar power project with battery energy storage system. This project is valued at approximately 4,000 crore rupees and will include 700 MWP of solar DC capacity. The company stated that the tender attracted 15 bidders, with the auction being oversubscribed by nearly 4 times. The project is part of the NHPC's goal for interstate transmission system connected renewable energy infrastructure. Inox Wind shares gained nearly 6% after the company sold stake worth 175 crore rupees. The company sold stake in its EPC subsidiary, Inox Renewable Solutions, at a valuation of 7,400 crore rupees. The wind energy company divested 49.6 lakh equity shares, reducing its holding from 92% to 89%. The subsidiary contributed 6% to Inox Wind's consolidated revenue in FY25, with revenue of 217.98 crore rupees, and despite the recent gains, Inox Wind has fallen 30% over the past 12 months. Marine Electricals has secured a 17.4 crore order from All-Weather India to supply control panels, with delivery scheduled over the next 36 months. Building on its FY25 revenue of 767 crore, this deal reinforces the company's strong foothold in the electrical solutions sector. On to an interesting update now. Not just a steaming cup of coffee and piping hot samosas, you can even buy a parcel of land on Zepto. Zepto, in partnership with the House of Abhinandan Lodha, now lets you buy premium Vrindavan land plots in just 10 minutes via its app, with prices starting at 1.39 crore. Fresh off a 400 crore raise from Motilal Oswal, Zepto's platform allows investors to browse plots, submit inquiries and connect with experts instantly. SEBI has released a consultation paper proposing easier rules for very large companies to launch their initial public offerings. The proposals include relaxed minimum public offer requirements and extended timeframes to meet public shareholding norms. SEBI's Market Advisory Panel is set to review key reforms in market operations. Top proposals include capping broker positions in equity and index derivatives to reduce risk and curb market concentration. The panel is also looking to tighten governance at exchanges by appointing 2 independent executive directors and defining roles for heads of compliance, risk, tech and cybersecurity. It may also propose merging investor protection funds of stock and commodity exchange and allowing IPF interest to fund dedicated staff. Meanwhile, white goods companies are preparing for delayed purchases as consumers wait for a GST rate cut. High-value items like air conditioners and large TVs are being held off in anticipation of a tax reduction from 28% to 18%, which could lower prices by about 10%. Major industry players such as Blue Star and Godrej Appliances are seeking clarity on possible cess. Big news for yarn and fabric exporters as the government is waiving the cotton import duty to address tight supplies and stabilize prices ahead of the harvest season. This measure aims to help mills facing high input costs and provide exporters with up to 40 days of relief, preventing prolonged downward pressure on domestic cotton prices. As per our sources, Finance Minister Nirmala Sitharaman will present the centre's GST proposal to the group of ministers. The centre has proposed, remember, a 2-tier GST structure with tax rates of 5% and 18%. The GOM, convened by Bihar Deputy Chief Minister Samrat Chaudhary, will discuss the centre's proposal over a 2-day meeting. The meeting scheduled for August 20th and 21st will focus on rate rationalization. China's export restrictions on rare earth magnets are causing a supply chain bottleneck impacting India's electric vehicle manufacturers. Minister of State for Commerce and Industry Jitin Prasada informed Parliament that consultations are underway to address the issue. China's restrictions have resulted in a shortage of critical minerals, including rare earth elements used in producing rare earth magnets. The Ministry of Mines is working to ensure supply chain resilience for these minerals. The global automotive industry is also feeling the pinch, with Germany's automotive lobby warning of production delays and outages. The US, Japan and Europe are seeking alternative sources and domestic production to reduce reliance on China. And Union Minister Jyotiraditya Scindia announced the nationwide rollout of advanced postal technology by India Post. This move, backed by a whopping 5,800 crore investment under it 2.0, and aims to transform India Post into a world-class public logistics organization. Driven by the Prime Minister's vision of Digital India and Make in India, APT is a fully indigenous platform that will enable real-time decision-making, boost e-commerce reach, cut operational costs through automation, and deliver citizen-first, mobile-ready services anywhere, anytime. The National Highways Authority of India has launched a FASTag annual pass that will allow users to cross up to 200 toll plazas on national highways and expressways for a one-time payment of 3,000 rupees. With a 1-year validity, Tamil Nadu, Karnataka and Haryana are leading the purchases with over 5 lakh users signing up within 4 days of its launch on August 15th. To activate the pass, users can download the Rajmarg Yatra app or visit the NHAI website, log in, verify eligibility, fill in vehicle and FASTag details, make the payment and receive confirmation. The SoftBank Group is investing $2 billion in Intel by purchasing shares at $23 each. This makes the group one of Intel's top 10 shareholders. Masayoshi Son, the chief executive and chair of SoftBank, described Intel as a trusted leader in innovation. Meanwhile, news reports suggest that the US government is considering taking a 10% stake in Intel, potentially converting part of its funding into a direct equity stake. Intel is currently valued at more than $100 billion. Apple India has leased a massive 2.7 lakh square feet of office space in Bengaluru for 10 years with a whopping rental outlay of 1,010 crore. The company will pay a starting monthly rent of 6.31 crore, which translates to 235 rupees per square foot, of an annual escalation of 4.5%. The fresh investment comes from Apple, despite US President Donald Trump openly calling out the company for expanding operations in India. OpenAI has launched its most affordable ChatGPT plan yet, called ChatGPT Go, priced at 400 rupees per month exclusively for India. ChatGPT Go offers 10 times higher message limits, image generations, file uploads, and 2 times longer memory. The plan is designed for everyday users seeking greater access to advanced AI capabilities at a lower cost. India is OpenAI's second and largest and fastest growing market, with active users more than tripling over the last year. According to S&P Global Ratings, India's solid economic expansion is expected to continue, driven by strong economic fundamentals. The impact of tariffs is likely to be short-term and mitigated by unaffected services exports. GST reforms will take time to play out, but are expected to boost consumption spending without dragging down fiscal revenue. Private capital expenditure is predicted to double in the next 5 years, led by power and transmission, with industrial capex also expected to pick up. National Security Advisor Ajit Doval met Chinese Foreign Minister ahead of the Prime Minister's SCO summit visit. Doval expressed optimism about the 24th Special Representative level talk, highlighting positive shifts in India-China relations, including quiet borders, peace, and stronger bilateral engagements. External Affairs Minister S. Jaishankar is visiting Russia with the Commerce Ministry delegation to discuss settling trade in local currencies. This visit follows India-hosted meeting in November 2024 under the India-Russia Trade Commission. Russia will host the next session, highlighting ongoing collaboration between the two countries. The Central Pollution Control Board has ordered all waste-to-energy plants and sanitary landfills to install online systems that continuously monitor emissions and effluents. This step is aimed at improving environmental compliance and oversight. As per the notice, states are required to submit updates on the progress of these installations this week. Mumbai remains on red alert as heavy monsoon rain continues to lash the city. The IMD has warned of intense showers and strong winds up to 60 kilometers per hour in Mumbai and surrounding districts like Thane, Palghar and Raigad. Flooded roads and shut subways have brought traffic to a crawl. Stretches like Veera Desai Road are waterlogged, while Andheri and Poisar subways have been closed. The Meethi River's water level has also risen sharply by nearly 4 meters due to the relentless rain. As a precaution, the BMC has evacuated around 350 people from the low-lying Kranti Nagar area. Transport services remain heavily affected and schools and colleges are shut, and traffic continues to move slowly across key parts of the city. The India opposition bloc has fielded former Supreme Court Judge B. Sudarshan Reddy as its candidate for the vice presidential election. Congress President Mallikarjun Kharge confirmed the nomination after a leadership meeting, setting up a direct contest against the NDA's pick. C.P. Radhakrishnan. The election is fast approaching, with polling scheduled for September 9th and nominations due by August 21st. During a meeting with Group Captain Shubhanshu Shukla, Prime Minister Modi emphasized the objective of cultivating a pool of 40 to 50 astronauts. Shukla observed that unlike in 1984, children today actively inquire about becoming astronauts, reflecting India's expanding space aspirations. He expressed a strong commitment to inspire and enable more individuals to achieve this milestone. Government sources clarified that there is no change in India's position on Taiwan. PTI reports suggest that New Delhi maintained a relationship with Taiwan focused on economic, technology and cultural ties. This statement follows reports that External Affairs Minister Jaishankar reaffirmed Taiwan as part of China during talks with Chinese Foreign Minister. Tourism in Las Vegas is slumping this summer, with resorts and convention centers reporting fewer visitors compared to last year. Some officials are blaming the Trump administration's tariffs and immigration policies for the decline. The city, known for lavish shows, buffets and around-the-clock gambling, welcomed just under 3.1 million tourists in June, an 11% drop compared to the same time in 2024. Now, there were 13% fewer international travelers and hotel occupancy fell by about 15%, according to data from the Las Vegas Convention and Visitors Authority. UK's Prime Minister Keir Starmer has said that the United States will work together to provide security guarantees for Ukraine. Starmer made the statement in Washington, where he joined US President Donald Trump, Ukrainian President Volodymyr Zelensky and EU leaders for talks on Ukraine's long-term security. The discussions focused on how allies can coordinate defense and financial support for Kyiv. Starmer also confirmed arrangements for a meeting between Putin and Zelensky, which would be the first since Russia's invasion of its neighbor in February 2022. Air Canada has suspended plans to restart operations after the union representing 10,000 flight attendants vowed to defy a government back-to-work order. The shutdown is disrupting around 1.30 lakh travelers every day. The Canada Industrial Relations Board has ordered flight attendants back on duty by Sunday afternoon, and Air Canada had planned to resume flights that evening. But the airline now says services will not restart. Union leaders say the order is unconstitutional and have told members not to return to work. A United Nations report shows that civilian casualties in Ukraine hit a 3-year high in July, with 286 people killed and nearly 1,400 injured. The UN says the toll is 48% higher than the same period last year and the highest since May 2022. Trump is eyeing a 3-way meeting with Ukrainian President Volodymyr Zelensky, Russian President Vladimir Putin. Ukraine and EU leaders, however, remain concerned that a US-Russia agreement could sideline Kyiv and weaken Europe's security guarantees. Kyiv has made it clear that Western-backed safeguards against future Russian attacks must be part of any lasting peace deal. Thousands of anti-government protesters marched again in Serbia's capital. The demonstration was largely peaceful until a group of young men broke away from the crowd and hurled rocks at the ruling party's offices. The police moved with batons and armored trucks, dispersing the crowd and sparking panic in the city center. The protest, led mainly by students, began last November after a train station canopy collapse killed 16 people. Many citizens blame the tragedy on corruption and poor renovation work. President Alexander Vučić has rejected calls for early parliamentary elections, and on Sunday he announced tough measures against protesters and repeated his claim that the unrest is being orchestrated by Western powers. And it's big news coming in for cricket fans as India's Asia Cup 2025 squad is out. Surya Kumar Yadav leading and Shubman Gill named vice-captain, ending speculation about his T20I return. The 15-member team sees Jasprit Bumrah back, but no spots for Yashasvi Jaiswal, even for Shreyas Iyer. Abhishek Sharma and Sanju Samson retain their opening roles, while Rinku Singh secures a spot. The defending champions kick off against UAE on September the 10th. In a stunning upset, Atletico Madrid fell 1 goal short to Espanyol in their La Liga opener. Despite a brilliant free-kick goal from Julian Alvarez in the 37th minute, Diego Simeone's side couldn't hold on. Espanyol staged a late comeback, equalizing in the 73rd minute, and substitute Peremia heading in the winner in the 84th. This marks Atletico's first opening day loss under Simon, despite their heavy summer signings. Leeds United are off to a flying start in their Premier League returns, stunning Everton with a commanding victory at Goodison Park. The Whites showcased their attacking flair and relentless energy, securing 3 points to maintain their perfect record. Manager Daniel Farke hailed his squad's intensity, while Everton Rue missed chances. Carlos Alcaraz has clinched the men's singles title after world number 1 Jannik Sinner retired due to illness, trailing 5-0 in the first set. The Spaniard, ranked number 2, secured his 6th title of 2025, extending his lead in their thrilling rivalry. Sinner, emotional, apologized to fans, citing health struggles. Alcaraz now heads to the US Open as a top contender. And that's a wrap on Market Express. Stay tuned to NDTV Profit for Profit 360 up next.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time
ICICI
to invest?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the out
Relentless rains batter Mumbai for the second consecutive day, causing severe waterlogging, road blockages and bringing the city to a grinding halt. Chief Minister Devendra Fadnavis warns that the next 48 hours will be critical for the affected districts, which remain on high alert. It's a range-bound session on Dalal Street, with the Nifty hovering near the 25,000 mark and a closing with slight positive bias. The Sensex remained volatile, reflecting expiry day jitters as traders adjusted positions ahead of the weekly derivative settlement. Textile stocks rally after the government announces a temporary exemption on cotton import duty from August the 19th to September 30th, aimed at easing supply constraints and bolstering the sector. Industry experts say the removal of the 11% import duty will significantly reduce input costs, offering much-needed relief to manufacturers. Sources say China promises to address India's three concerns of rare earths, fertilizers and tunnel boring machines. Wang Yi's visit comes ahead of the Prime Minister's expected visit to China to attend the Shanghai Cooperation Organization Summit in Tianjin from August 31st to September. The opposition India bloc picks former Supreme Court Judge Justice B. Sudarshan Reddy as its candidate for the upcoming vice presidential election. He has been fielded against NDA candidate C.P. Radhakrishnan, the current governor of Maharashtra and one of the tallest leaders of the BJP in Tamil Nadu, for the September 9th election. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's get into our top focus today. It is the monsoon mayhem in Mumbai, the city that never sleeps, that is definitely wide awake. A relentless monsoon has unleashed torrential rains across Mumbai, dumping more than 200 millimeters of rainfall in the past 24 hours. Streets have turned into rivers, homes into islands, and Mumbai's unbreakable spirit is being tested by nature's fury. From Kolaba to Borivali, the downpour has spared no corner. What you can see on your screen are low-lying areas like Kurla, Sain and Andheri that have been submerged, with water surging into homes, shops and even hospitals. Central and Western railway services have been suspended, leaving thousands of commuters stranded at stations, clutching at umbrellas and hope in equal measure. My colleague from NDTV, Anuj Raite, now bringing you a ground report.
I'm present here in Kranti Nagar, an important area in Kurla region, right next to the much talked about Mithi River, and this particular area has been mentioned several times since morning because of the severe waterlogging, that has been witnessed by the people here of Kranti Nagar for the last 5 to 6 hours. We know for a fact, because the Chief Minister of the state, Devendra Fadnavis, confirmed it to us a while back, that close to 300 to 400 people have been rehabilitated from this. Have been shifted from this place to the close by BMC schools by the NDRF and the SDRF officials. We've seen that the deployment of all of those people along with the BMC workers has been continuous here for the last 5 to 6 hours. They suggest that in the last few hours the level of the water here in this particular area has actually gone down, and even now it is still it's above my knees, but this is still better than what was the case earlier, is what they suggest. However, if the situation does not become any better, that is going to be a major challenge in front of the authorities. The major problem here is that it's right next to the Mithi River, and we've been talking about it since morning on how Mithi River, which was a trigger, during the 2005 mega floods that hit this city and took away lives of more than 1,000 people. Even the trigger for that particular flood was the rise in the level of Mithi River, and because this particular area where we are standing at the moment is right next to the Mithi River, that puts a lot of pressure on the administration to make sure that they put prompt actions and make sure that the people who need to be rescued from here are rescued as fast as possible. We also saw that the traffic in some of the major areas across this particular area has also been diverted, especially in the BKC and Kurla region, and that has again posed another challenge in front of the traffic police officers, because a lot of roads which are on the lower lying areas, traffic from them has to be diverted to the main roads, leading to the traffic moving ahead very slowly and putting a lot of pressure on the other roads. As you can also see on my screen right now, these are some of the visuals that we are getting from the Kranti Nagar area, where houses, as I've been pointing it out earlier, are almost submerged halfway through. As I said earlier, close to 350 to 400 people have already been shifted or relocated to the close by BMC schools, and a lot will depend on the intensity of the rainfall going forward and whether the situation will become any better in this part of the city or not.
Thanks so much for that, Anuj, and please stay safe. Let's hear from SkyMet's GP Sharma for more on the evolving situation. Good evening. Welcome to NDTV Profit. First up, I think a question on everybody's mind, sir. For how long can we see such heavy rainfall in Mumbai and these districts of Maharashtra?
Yeah, good evening, Sanjana. Monsoon mayhem, Mumbai. Rainstorm have been almost unrelenting, particularly for the last about 12 to 18 hours or so. As such, it was a heavy downpour last evening, in the night, through the night. And then heaviest was this morning. Okay, can you imagine just about 100 millimeter of rainfall in 3 hours between 8:30 and 11:30. And as of now, it is more than 150 millimeter of rainfall has been added in the just about 6 hours of today. Okay, the ground is saturated as your report was showing. The waterlogging is there, areas are inundated. All that will happen with this much rain falling in short span of time. Obviously, it is a difficult time. Now, as per my assessment, the rains should ease out a little tonight, late tonight maybe. Okay, Mumbai should wake up to a better morning to start with tomorrow. Okay, and it becomes further better and better. It's not going to stop raining. Okay, it will rain, but unlike what has Mumbai gone through today, the heaviest of this season's rainfall. Okay, month of August, generally it doesn't, for the last couple of years, actually, we didn't see much of rains. July, yes, but August, it didn't see much of rains, Mumbai. But then it has happened after 5 years now that extremely heavy rains there in the month of August. I was talking about that there's a likely relief as per my assessment. I think maybe a little late in the night or so, the rain intensity and the spread will reduce. And tomorrow morning, I definitely the better conditions will prevail. Then, but you see, all these water bodies, even if your report was showing Mithi River, which is through and through the city, it is overflowing. All the water bodies during such spells, they keep responding even after the rain become mild, or they ease out a little. Okay, so we need to be cautious, remain cautious, at least even after the weather improvement starts after another 24 hours, next 24 hours also. Okay, so that's the scenario. The good news which I see is the worst is likely to get over early tonight. And as we go towards midnight and early morning, I think the rain's intensity should reduce. Yes, Sanjana.
Right, GP Sharma sir, thank you so much for bringing us that update. And you know, it's a little bit reassuring that you're saying that hopefully things should actually ease out by this evening. One last question before I let you go. We saw largely, I would like to go out on a limb and say, a fairly dry July, and then we're also looking at, you know, right now the mid-August, actually really, you know, it's that torrential downpours, there's no other word for it, and the rains are absolutely relentless. So give us a sense of what we can expect to see through the rest of the month and potentially maybe some of September as well.
Okay, yes, Sanjana, the month of July was relatively dry, though it caught up with the normal rainfall in the month, through the month. But then as compared to the last, if you take 5-6 years, July was very heavy rains. Okay, it received almost 2022, 2023. It was double the normal of rainfall. July is the rainiest month for Mumbai, but still, one of those years we had in excess of 2,000 millimeter of rainfall in July. But this year, it was much better. Month of August, as I said earlier, last 4 years between 2021 and 2024, the rainfall has not been much. The maximum it was in 2022, which was 551 millimeter rainfall, which we have far exceeded as of now. Yes, the last heaviest downpour in Mumbai in the month of August, that was in 2020, wherein over 1,000 millimeter rainfall, 1,240 millimeter of rainfall was witnessed in the month of August. So these heavy downpour has returned after a gap of almost about 4 years. And further, you see, as I said, that rains are going to possibly relax tomorrow. Day after will be rather much improved conditions will be there. But I fear the rains will get back again. They will come back again sometime next week. May not be this intensity. It may not be heavy like this. But then After a break of about 3 to 4 days between, say, 21st, 22nd, 23rd, 24th, till the weekend, next week possibly at the start itself, we will have again the rain intensity will pick up. Heavy rains are likely. Once again, I will say maybe around between 26th, 27th of August, the rains are going to pick up again. We go to watch out again for some heavy rains over and around the capital city of Mumbai and suburbs. Yeah, that's it.
All right, GP Sharma sir, thank you so much for that very crucial information. Viewers, just to recap, we're likely to see a little bit of easing of the rainfall by later tonight, and tomorrow will hopefully be a better day. GP Sharma sir from SkyMet also adding that it is likely that the rest of the weekend won't be and won't see as many torrential downpours, but once again expecting very heavy monsoon and very heavy rainfall sometime next week around the 26th and 27th of August. Meanwhile, torrential downpours have plunged Dharavi into chaos with over 150 millimeters of rain inundating homes, workshops and fragile shelters. The slums' narrow lanes now resemble open sewers, and the overflowing Mithi River poses a grave threat to both lives and livelihoods. So what you can see on your screen isn't just a seasonal setback. It is a stark reminder that Dharavi's aging infrastructure is collapsing under pressure, and temporary fixes won't actually suffice. And now a quick look at how the markets fared today. It was a range-bound session on Dalal Street, with the Nifty hovering near the 25,000 mark and closing with a slight positive bias. The Sensex remained volatile, reflecting expiry day jitters as the traders adjusted positions ahead of the weekly derivative settlement. For more on this, let me go across to my colleague Harsh.
Well, the Nifty built on the gains from yesterday. We were up around 0.5% thereabouts. So, likely that's where the positive lies. But talk a little bit about the negatives as well. The Nifty 50 in terms of the breadth was largely even Steven. So we didn't see very strong breadth on the Nifty. Broader markets saw much better breadth, and that's the one possible negative. The other one is a large part of the contribution on the Nifty also came from a single heavyweight, which is Reliance, contributing 60 out of the 112 odd points that the Nifty closed in the green by. So that is where you saw some bit of tailwind come through, and that was only because of the increase with regard to Jio's rates, or rather the consumption. From 1 GB, the plans were discontinued for 1 GB. So likely ARPUs to go up. That was largely the reason. When you're looking at sectors as well, of course, autos took the lead. Some auto stocks which continued to do well, Tata Motors, Bajaj Auto among them, and the Nifty Auto too showed good traction and built on the gains from Monday, very, very strong gains that it showed on Monday. It's up now over 5% for the week gone by. And outside of that, FMCG also did very, very well for itself. 1+% higher on the Nifty FMCG as well. What didn't do well was pharma. What didn't do well was defense. So those two pocket spaces is where there's still some bit of pressure which continues. The IT space, which was probably the top loser, if I can call it that, in trade yesterday, is up around 1/3% thereabouts in trade today. So I had a decent outing where the IT space is concerned. You'll have to watch it for the week as well as to how that plays out. Broadly, when you're looking at the broader markets, the advance decline was skewed well in favor of the advances, 1600 plus advances versus 600 plus declines. So that's where the market skew was. The Nifty mid cap and small cap just kept building onto the gains that they made all through the day. So we saw 1% higher on the Nifty mid cap, 0.8% higher on the Nifty small cap. So good traction built on both of those. Last off, BSE 500, some top gainers, losers, and within that pack as well, you saw packs like textiles do well. You saw packs like fertilizers also buzz in trade. So some of those specific pockets did buzz in trade even within the broader market pack.
Right, Harsh, thanks so much for that. Meanwhile, textile counters surged after the government announced a temporary exemption on cotton import duty from August 19 to September 30th, aimed at easing supply shortages. Industry players expected the removal of the 11% duty to lower input costs and strengthen India's position in trade negotiations with the US.
Basically, the announcement is that the government has decided to kind of remove import duty on the import of raw cotton till 30th of September. That's 42 days from here. And they've also removed the agriculture, infrastructure and development cess till 30th of September. The rate at which this was charged was at 11%, which has now been removed. So that's a big relief when it comes to the textile companies. And government said that this is a much necessary, move in order to protect the domestic players as well as and this also relates to the tariff uncertainty that's going on and has been an overhang on the entire textile space as well. In terms of stocks that could benefit from this include Welspun Living, Trident Limited, KPR Mills, Gokuldas Export, Pearl Global as well as Irwin Limited. Now in terms of volumes are being seen in these counters today on the back of this news. Welspun Living with highest volumes of around 2.5 times its 30-day average, followed by Trident Limited at 0.42 times, Pearl Global at 0.26 times and so on. In terms of the analyst recommendations for these counters, Welspun Living has got 6 buys and 5 holds, Pearl Global has got 2 buys, Gokuldas has got 5 buys and 3 holds, and Irwin Limited has got 7 buys. So no sell recommendations for all of these textile companies as to where analyst recommendation stands as per Bloomberg.
Thanks so much for that perspective, Mahima. Meanwhile, Pallab Banerjee, MD and Group President of Pearl Global Industries, offered some sharp insights that add depth to today's textile sector rally.
Too early to say, but at the same time, I think the advantages should be there. There's 11% tariff on any imported cotton. We do, certain requirements are there from, like say, from the Australia market or from US market to use their cotton. And that's where we were not competitive enough. So this 11% also is a positive direction that should give that advantage. And overall, if the cotton and the fabric becomes more competitive in the global market from India, then that's an advantage.
And in a surprising twist for the quick commerce space, Zepto has partnered with the House of Abhinandan Lodha to offer select branded land plots from its Vrindavan project. Yes, you can now browse and buy real estate through your grocery delivery app. This innovative collaboration aims to simplify property investment by making curated land purchases as seamless as ordering essentials online. A bold move that blends convenience with aspiration. And we're tracking a major development on the India-China trade front. Sources reveal that Beijing is actively working to address New Delhi's concerns, particularly around fertilizers, rare earth elements and other key commodities that have strained bilateral ties. Joining us now with exclusive insights is NDTV's Mohammad Ghazali, who has been following this story closely.
Yeah, certainly a big announcement, a kind of agreement from China that they will help India in 3 key areas. 3 key concerns will be addressed, be it about the tunnel boring machines which were stuck in China because China was not exporting these materials to India, these machine parts which are assembled in China, these big heavy tunnel boring machines, due to which multiple infrastructure projects were also put on hold. And besides that, China has also agreed for the supply of fertilizer and the rare earth minerals. This is something very critical because rare earth minerals, as you know, is being used in different sectors, be it automobile sectors, be it for clean energy, be it in medical equipments as well. And besides that, fertilizer, China happens to be the largest producer and consumer for fertilizers. So at least in our agriculture sector also it will be very useful. And it perhaps shows that both countries are now working to move this entire relationship or the diplomatic relations towards a positive side, because China also started off by resuming the Kailash Mansarovar Yatra. India reciprocated by allowing Chinese nationals Indian visas, and now there are talks about cross-border trade between India and China as well. And these 3 assurances from Chinese side certainly shows that obviously there is a long way to go between the 2 countries, but these are the little steps which both countries are taking to improve their relations.
And time now for an exclusive conversation. My colleague and managing editor of NDTV Profit, Tamanna Inandar, spoke exclusively with Arundhati Bhattacharya, President and CEO of Salesforce South Asia. And they spoke about AI, cloud computing and everything IT. Listen in to an excerpt of that conversation.
It doesn't matter which sector you are in. You are going to have to use AI if you want to retain your efficiency and your productivity, and if you want to do better. It might be used in a context of lack of labor in the developed market. In the markets like India, it's going to be used in the context of actually providing far better services to your very populous nation, which cannot be done in the brick and mortar manner. You are aware that, for instance, 600,000 villages, we couldn't cover them under financial inclusion till we took the help of technology in the form of Aadhaar for KYC and mobiles for its ubiquitous connectiveness. So that's what the JAM Trinity was all about. The Jandhan account, the Aadhaar for KYC, and the mobile for connectivity. When we brought into play all of these three elements, that is when we could do true financial inclusion in India.
And some breaking news coming in. And before we go on to that, just some information coming in with regards to the VP appointment. In a significant move, the India opposition bloc has nominated former Supreme Court Judge B. Sudarshan Reddy as its official candidate for the upcoming vice presidential election. The announcement was confirmed by Congress President Mallikarjun Kharge following a high-level leadership meeting earlier today. NDTV's Ashish caught up with Justice Reddy moments after the nomination was made public.
You have been nominated, so your first reaction, sir, to NDTV?
What could be the possible reaction except being happy that I have been nominated by a combination of the parties which represent more than 60% of the population of this country.
You have been chosen for this position, sir, for the contest, sir. How sure you are?
I'm least concerned about it.
You are least concerned about the victory and or the defeat.
My job is to offer my candidature, appeal to all the members of the parliament, irrespective of their political affiliations, to consider my candidature. And nobody can predict the result of any election. Therefore, I don't indulge in this soothsaying or astrology.
Any request?
That was a conversation with B. Sudarshan Reddy, the opposition's candidate for the post of Vice President. The elections are slated for September 9th. Moving on to some breaking news coming in. Big developments in India's digital regulation space. The Cabinet has now approved the online gaming bill that aims to bring sweeping changes to how online gaming is now governed. My colleague Rishabh Bhatnagar, who has been tracking this story relentlessly, now joining me live. Rishabh, we understand that under the proposed legislation, online betting will be punishable by law. Endorsements of illegal platforms could also invite penalties. But take us through a passage of this bill now, because there have been some serious concerns around addiction and fraud and, of course, inconsistent state-level laws.
Right. What we've picked up from today is the fact that the Cabinet has approved it. Now, this is another step in this bill actually becoming a law. What we're seeing is that this might be tabled in the Lok Sabha tomorrow. This is a probability. This is not for sure that that's happening tomorrow, but we are hearing that it might be introduced in the Lok Sabha tomorrow. Now, a little bit about this bill itself. This does make online betting punishable. What we're seeing is that the Ministry of Electronics and IT will be the nodal ministry for this one. They will be designated in terms of to be the central regulator of online games in India. What we're also seeing is that they do, and this bill also talks about the concerns over fraud, over addiction, some of which have been very pressing issues for the Indian youth, especially. That is what we're picking up. We're also seeing that over the years, the Indian government has really started to emphasize on regulating this sector, right? This sector had been running rampant for a really long period of time. You had online betting companies that are offshore, not even based in India, but having heavy amounts of betting coming in via these platforms. So this one really helps in regulating all these online betting platforms. What we're seeing also is that since October 2023, the GST was also raised on online gaming activities to about 28%, the highest slab then. And that is what we're seeing is that this government is constantly focused on removing all the issues that have come up with regards to online gaming. So this is what we picked up so far. We will be tracking this story going ahead as well.
If you could just give our viewers some context, we understand that, like you rightly said, first is, of course, the offshore gaming platforms are now within the Indian tax net, ensuring, of course, that foreign operators are held accountable under domestic laws. But I think also a very crucial aspect of this is that authorities have been now granted powers to block unregistered or illegal gaming websites. And we're looking at close to the tune of 1,500 such directives that have already been issued just in the last 3 years.
Right. So far, what we saw from online gaming was state-specific orders coming in. So you had Sikkim put out an order, you had Tamil Nadu put out an order. These were states that were proactive in terms of regulating online gaming. But now you have the Ministry of Electronics and IT under the Government of India. So a central bill coming in, which will be a law very soon if it goes through the parliament over this session. And so you have a central law coming in, which will definitely, like you said, about 1,500 blocking directives have already been issued against illegal betting, gambling, as well as gaming websites since 2022. These will now only go upwards, given the fact that MeitY will now be the central designated body for regulating online gaming in India. So in terms of regulation now, a proper umbrella regulation coming in terms of actually regulating this sector, which has been a cause of pain for a lot of people that do get addicted because of how easy it is now to place bets online and how easy it is to lose also money through these platforms where there's very little to no accountability. Another very important factor of this gaming bill will be the endorsements and the celebrity endorsements factor. Right? You had a bunch of celebrities go out and endorse these platforms that were currently in a very unregulated space, you can say. And now they will also be held accountable if they are found endorsing such platforms for money. So that is something that will also come under control.
Absolutely, Rishabh. And Rishabh, now that you spoke about the celebrities that are already under the scanner, what happens to those probes? Because let's remember that while this bill has been very, very crucial in terms of cracking down on sweeping changes to how online gaming is governed, there is also alongside a probe that is running with all of these celebrities that have been called in for questioning at different points of time with regards to the promotion of these particular apps. Will that continue?
Right, Sanjana, there's very little clarity over what sort of process those cases will follow now. The fact that this is just at the cabinet approval stage, so we don't know when it will actually become a law and what sort of processes will be in place once this actually does become a law. So once we have more clarity on what happens to existing cases, we will update and we will report on them as and when it's possible.
Rishabh, thanks so much. Big breaking news coming in right now. These are the developments. Just to recap, the cabinet now has approved and the online gaming bill, like we said, aiming to bring these sweeping changes on how online gaming is governed. Under this legislation, what we're likely to see is that online betting will be punishable by law, and endorsements, like we just spoke about, of illegal platforms will also invite penalties. And sources also suggesting that the Ministry of Electronics and Technology, MeitY, will be designated as the central regulator tasked with overseeing compliance and enforcement. And the bill is likely to come up in the Lok Sabha and will be introduced in the Lok Sabha tomorrow, setting the stage for a crucial debate on balancing innovation with consumer protection. All eyes on that. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies, building legacy.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Varsha Chandani, and today we're going to talk about Suven Life Sciences. The entire company largely depends on the success of a single drug, and the stock price has doubled over the last 6 months, and therefore we find it interesting to try and analyze this one. Let me start off with what I want to know, and this is going to hold the key, right? How large is the opportunity size with regard to the Alzheimer's drug they're developing, and the second piece is, where will they sell it? What are the margins on these products? What's the opportunity size like with regard to the product? Will they license it or will they partner? How exactly will this work? All of it is what we'll try to understand. The expectation is this will happen as early as calendar year 2026, and therefore the numbers will change dramatically if this one turns out to be a success. So that's the first piece. The second one, cash balances, and they've raised around 850 crore. As of now, the cash balances are minuscule as of FY25 end. But with this 856 crore or 57 crore fundraise, it should give some amount of bandwidth, some amount of comfort with regard to the investment that they continue to make in R&D, given that otherwise the business is largely zero when it comes to both profitability as well as top line. When you're looking at products, I'd also want to know what the other products might contribute if this one were to fail. So products in the pipeline, timelines, how likely of some or all of those products being successful, and how large is the size for the other products outside of the Alzheimer's drug that they're developing. How certain is profitability? They need to be profitable. Analysts want them to be. There have been questions asked around this, so I'd want to know how certain is it that they are looking at profitability. The sixth possible question that I'd want to ask them is, how was investor interest in the fundraise? Now, it was a large fundraise, and therefore to try and assess as to whether there is a possibility of more fundraising if at all the company needs it, and that will possibly be determined by the answer he gives us to this question. The last one is, how will Suven look beyond 2027? Now, there are lots of unknowns where Suven is concerned, and therefore this will be a tough question to answer standalone. But what we will ask him is, under both scenarios, one, Alzheimer's becomes successful and Alzheimer's doesn't successfully come through as a product, in which case how does Suven look in both of those cases beyond 2027? So I'd want to know a lot around some of these aspects and angles. But Varsha, as always, about the company.
Yeah. So, Harsh, this is something like a 0 to 1 game, I would say, when it comes to, Suven Life Sciences. Let's see what that company does. I'll try to simplify as much as possible. Now, a company develops molecules which are focused on CNS space. That means CNS drugs are nothing but which treat conditions affecting brain and spinal cord, and they develop novel therapies and also provides contract research and development services. So basically, in a very simple language, they make molecules which affect brain and spinal cord. Let's talk about the products, because that is what defines Suven and why investors are bullish, or why investors like this company, because of the pipeline that they have. Starting with one of the main product that this company has is SUVN 502. This is nothing but the drugs which is being developed for agitation in Alzheimer's patient. In simple language, when a person has Alzheimer's, they do have side effects, like you have irritation, you have, restlessness or emotional distress. So these are nothing but the side effects when you have Alzheimer's. So to treat that side effects, this drug will be used, which is Suven 502. Now, this is currently in phase 3 global trials for Alzheimer's agitation, and now this is mainly people are talking about that this represents a multi-billion-dollar opportunity. We'll ask the management about that, and the expected completion for this is by end of FY26.
Before I go forward, or rather before you go forward, what does phase 3 mean? So say we are in phase 3, can we pull up that graphic again? Perfect. Phase 3 global trials, what does this mean, and how far are we from possible completion? How many phases to go? What do the phases which are completed mean? Give us that, give viewers that perspective.
So phase 3 is nothing but the last phase. So any drug which wants to go into the market has to go through 3 phases, which we call clinical trials. Meaning, before a drug is given to a person, that drug has to be tested. So that drug has to be tested in 3 phases. That is phase 1, phase 2, phase 3. Phase 1 you have certain number of people to whom drugs has been tested. Then if that is positive, the drugs goes from phase 1 to phase 2. Then in phase 2 this drug has been given to certain number of people, and then if the results are positive, then it goes to phase 3. And phase 3 is the final one, wherein if the drug is positive, then all the launches, activities, marketing comes, and then the actual commercialization of the drug comes in. So this...
What are my options post phase 3 approval? So say phase 3 global approval comes through. What are my options? Do I license? Do I manufacture on my own? Is there a third option available?
That depends on you.
What are my options?
That depends on you.
But these are my 2 options.
Yeah,
one is I license it for someone else to manufacture and market both.
Yes.
And second is I market it and a third party manufactures it. And then the third option is I manufacture it, I market it.
Yes, that depends on the unit economics that you
But this
follow.
is broadly the way in which it works.
This is broadly the way in which any pharma company works with a drug.
And is it possible that I don't get a global approval and that I get a approval for a specific geography, or is that not really heard of?
You have to get, I mean, if you want to, if you are developing a drug, okay, and so the main point over here is you want to sell it to US,
right,
which is a regulated market.
Correct.
So for that you need that US FDA approval.
And therefore they have a subsidiary sitting in the US which is also doing trials.
Yes.
Just for viewer perspective, they've been pushing money there as well to ensure that trials in the US become successful, because that's the largest market which you want to cater to. But okay, that's the first product. We'll breeze through the others because this is the key one.
This is the key one, exactly. Yes. So everyone is betting on this product. And also for viewers, so Suven actually failed so it was developing a product for Alzheimer's, to treat the Alzheimer's, but they failed in trials, And then they got to know that this drug is actually positive on people dealing with the side effects of Alzheimer's. That is the agitation, which we were speaking about. And that's when they found out that, okay, let's,
cure the side effects.
Let's cure the side effects.
Which should hopefully aid Alzheimer's itself.
Exactly. So this is the whole story basically.
Interesting one.
Now, the next drug which they have is, let's go for SUVN G3031, which has completed phase 2 trials for chronic neurological disorder. Chronic neurological disorder is a long-term condition that affect brain, spinal cord, or your nerves throughout the body. And they are engaging for FDA phase 3 trial approval, which are expected somewhere around 25 to 26. Now, next drug which they are focusing on is SUVN T4010, that is 4010, which targets cognitive disorder. It's nothing but, what is cognitive disorder? This affect person's ability to think, to learn, or memory, perception. So basically your day-to-day life get affected when it comes to cognitive disorder, and they are planning for phase 2 over there. Then next is SUVN 911, which is nothing but used for major depressive disorder. In a simple language, depression, that's it. They've completed their phase 2A trial with positive results, and results are expected by 2027. So Harsha, this is what SUVN does, and these are what the main products, I would say, which SUVN is focusing on, considering the biggest one would be the Alzheimer's.
Yeah. So let's pull up all of this as a summary. These are all the drugs which are there under development. This is broadly a summary of all of those, kind of giving you a snapshot into what's playing out and at what phase each of those drugs are in. So this gives you a quick brief snapshot. We won't get into the details of it, but this one is the key, right? This one, we've spoken about it quite a bit, so we'll quickly move on now. Therefore, now you already know a large part of what the company is about, and this is the crucial part of it. Let's therefore look at the metrics now, and as one would understand, the metrics will not be the best because a lot of these drugs are still under development and there's no sales that the company is able to demonstrate. We'll start off with the income statement, balance sheet, cash flow, return ratios. We'll look at shareholding, street cred, street coverage, and we will look at outlook. So 8 parameters. Varsha, to start with the income statement.
Yeah. So, on the face, if you see income statement doesn't look good, you will only see losses there, starting from EBITDA. Look at the revenue, it's like deteriorating. So one of the reasons I would say why this is deteriorating is company previously had CDMO business, and the sale or demerger of this segment has actually, affected the revenue for the company. And now the core business for the company is developing their novel drugs, which we just, saw, which has a very long gestation period. Single drug will require, you have to, when you make your own drug, you have to go through the phase 3 trials, and then that requires a lots of times 4-5 years, and that's one of the reasons why this doesn't look good. Even the company has high R&D expenditure, which drags the profitability, and one of the reasons why you're seeing losses for this company. So overall, because of no CDMO in the revenue and high R&D expenditure and long gestation period of the novel products that they are going into is one of the reasons why the income statement doesn't look good.
Okay, but a clear thumbs down on the back of that. Let's look at the balance sheet. And the balance sheet has equity, or used to have a very large quantum of equity in comparison to where it is right now, because you are booking all of those losses. But the good part is there is very low to no borrowing on the balance sheet. Also, they've done a fundraise in May of 2025, which through which they've raised around 857 crore rupees of equity, which basically again takes care of what is the cash required for all the R&D they're doing. So again, it gives you the ability to continue to make losses at a period when you're still developing your business, which is again a key positive. So we've given this a neutral because 1, they have the ability to raise money, 2, you don't have any borrowing on the balance sheet. And typically if you don't have any borrowing on the balance sheet, you can't call the balance sheet bad, and therefore we've given this a neutral. Let's talk about cash flow, Varsha.
Yeah, so Harsh, considering the overall financial that this company has, the cash flow doesn't look bad.
Yes.
And that's one of the reasons why we've given neutral rating, because if you see, company has been receiving money in 2023 also. Company had received money, and that is the reason. If you see, the net cash flow, in 2023 was what, 32 crores positive. In 2024 it is negative 22 crore. In 25 it is zero. So company has been receiving money to survive, and considering the size of the company, considering the financial losses that the company has seen, the cash flow doesn't look bad. So that's the reason why we've given over here the neutral rating to the cash flow statement.
Perfect. I'll quickly cover return ratios and shareholding. Return ratios are negative, and therefore we've given it a thumbs down. No questions asked, unfortunately loss making, and therefore that's what you're seeing. What you're looking at in terms of shareholding pattern as well, nearly 67% of the shares, outstanding share capital is held by promoters, so it's well held. Also, you have some interesting names cropping up on the DII side, which is the domestic institutional investors. You have Quant, Abacus, which hold 2% and 1.5% each, and therefore that part of the metrics looks very, very interesting, where you have good, decent investors who have come in, vindicating the way in which they look at the company. Second, you have a very large promoter holding, nearly 67.5%, which also kind of vindicates everything with regard to the company. It's a 5,000 crore market cap company now, after the stock has doubled in the last 3 months. So something, or rather the last 6 months. So that's something you want to know. But Varsha, the next metric.
Yeah, so I would take street cred and outlook for the company. The street cred, if you see, as Harsh was mentioning, in the last 1 month, there is a negative returns to the investors of 20%, but last 6 months, yes, almost 100%, the money has been doubled. But what is interesting when it comes to Suven is outlook. Not the present condition, but outlook. So one is the Alzheimer's drug, which we were speaking about, creates $1 million opportunity for the company if that goes successful. And of all the products that we have seen, even if one product goes into licensing, or if even one product goes successful, Suven could change tables for itself. So also, if you see, maybe a company may need more capital for multiple clinical trials over the next 2 years. And very interesting part, Harsh. So if you see, for Wockhardt, Zenich was the lead drug, right? For Glenmark, if you see ISB 2001, which we just had a discussion about, that was the lead drug. Maybe for Suven, that agitation and Alzheimer's drug maybe would turn tables for itself. You don't know.
Yeah, we'll quiz the management on that, but that's basically with regard to the outlook. We've given that, of course, a neutral, because it's tough to know which side of the fence to sit on. Street coverage, there's absolutely no street coverage, therefore we've been forced to give this a thumbs down. Let's quickly add up all of the metrics and give it a rating, which we always do on KYC. Of course, keep in mind that it's a 0 to 1 game, which Varsha keeps speaking about, but that's how all of the metrics stack up. And of course, it's a very risky 3.5 on 8 that we have given on our KYC final rating. Let's bring on board Mr. Venkateswarlu Jasti, who is the Chairman and Managing Director at Suven Life Sciences, joining us. Great having you, Mr. Jasti. Good morning, this is Harsh. So let me start off by first understanding from you, what is the likelihood of the phase 3 trial getting successfully completed for an SUVN 502? Give us your take, give us your perspective from the horse's mouth.
Hey, you have to take it with a grain of salt, whatever we say here.
Of course.
The thing, drug discovery, as she was telling, it's a binary outcome. There is no percentage of success or anything like that. And it's a long drawn process. Each drug takes 10 to 15 years before you see whether it is going forward or not going at all. In this case, when you're asking me whether you're going to be successful, I'm not sure, because we thought 502 when we did for the Alzheimer's, because this was a double-blind study based on the DSMB, drug safety monitoring based data, no questions asked for 4 years. But at the same time, when you got the result, it was not statistically significant. Similarly, Here we see the data based on the post-facto analysis of the same clinical trial, and we see very good outlook for that. And based on that, we went to the US FDA, asked for direct phase 3 study for the agitation and aggression in Alzheimer's. Usually we had to do again a phase 2, but based on the safety aspects, they have given, and now it's running. So we are very hopeful of that, but doesn't mean a thing until the check is in the bank. So you have to take, as I said, it is zero as of now, but everything will be known only in 2027.
If I can ask you a follow-up, everything will be known in 2027. Are you talking about calendar year, financial year? Give us that timeline. Calendar year 2027. So we're still 2 years away from any type of recognition in terms of top line.
Any type of success to start with.
Sure.
Only success will give you the any kind of money. Sure. Otherwise, nothing.
Sure. And how large is the opportunity, sir? While I have you still with me, and then I hand it over to Varsha.
This is a new indication. There are no real NCEs that were tried for this. Only one NCE which was used for some other thing has been used, and it can be a multi-billion dollars according to street estimates, but we don't know. But it's a new indication, and not only for Alzheimer type dementia, this agitation also occurs in other dementias. So based on that, it has a huge potential, but only time will tell. First, we need to move to that approval level. That's what our intention is.
Right. Hi, Mr. Justy. Varsha this side. Pleasure to have you on NDTV Profit. Mr. Justy, the recent, 857 crore fundraising which you have done was a significant event. Now, wanted to know what are the specific milestones that you have tied up, and any more funding is been required considering the huge pipeline, that you have.
As you know, this is the first time an Indian company sitting in India doing drug discovery alone, nothing, no revenue base. Street has put in about $50 million. And myself has put in $50 million. Out of the $100 million, $50 million comes from the family and $50 million from the street. We have not given any kind of things. If you have seen my annual report, it clearly tells you what exactly it is. We are saying it will be only during that time that can happen when the 2027, not only this molecule, but other molecules are also coming up at the same time, like 3031 and 911. The results also will be during the calendar year 2027.
Varsha, he's obviously non-committal with regard to that key drug that we are talking about. He was also non-committal on the size of the opportunity, which was a bit off for me, because it's a multi-billion-dollar opportunity. That's a known fact. But how much of that does Suven likely capture?
Lots of uncertainty, I would say. Lots and lots of uncertainty.
Mr. Justy, just wanting to understand, Varsha and myself, what was the kind of investor interest that you saw? Of course, you've got some marquee investors who've come in, but how large was the investor interest is what we're trying to understand.
I mean, I think we have to propagate that something has to be funded, the investments into the drug discovery. We cannot be depending on the global outlook and all that stuff, getting drugs from outside. Only that kind of a mindset they have put it in. I think those people who have put in about 23 people, including funds, they're all looking at kind of a new way of looking at innovation. Otherwise, there is not much interest, to be honest with you. So we have to propagate that. And the second thing is, since management is putting 50% of the money, I think I've been putting all these times. I think that is another thing that gave them these, okay, let us try and put some money in this. That's the way it has been.
Understood. Mr. Justy, I know that, that FY27 decides everything, but any target that you have or any, idea that you have, when can Suven be on the path of profitability? Any ballpark target that you have set in?
No profitability in the next few years until a